is hot. Now you got a cold in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Monday to you both.
Hello.
Hola.
Morning.
Hola.
Good morning. I gotta say one thing.
What's up?
Bears are going to the Super Bowl.
Bears.
Down, Chicago Bears. We got the best quarterback. We got the best team. We got the luckiest team. We win.
We got the Pope.
We got the Pope.
That's why that could be. We've been blessed.
We've been blessed.
We've been blessed.
Man.
That's it.
Kicker is kicking the most field goals ever kicked by like a Bears kicker.
Yep. I was a Bear defector.
What? You stink. You can't kick a field goal.
I don't know if we play back that old video. I had a pretty good kick.
It was a pretty good kick. Not gonna lie. But we can't play that video because it's very embarrassing to the prior administration.
But do people are saying that like you can't give the Bears any time left on the clock?
I figured out what it is. They've ruined the game of football, and I'm gonna tell you why.
Who? Is it the government?
The league.
Oh.
The league.
They.
The invisible hand.
Oh, the league. The kickoff is horrible. The new kickoff rule is absolutely horrible because no lead is safe. Because you basically...
Yeah, you could start at the 30.
You can start at the 30.
Yeah.
I mean, and now these kickers are kicking 65-yard field goals. I mean, like, you know, it's...
Not on the reg. Not 65 yards.
They
like,
just
not
didn't
every
they have a
week.
68-yarder or something a week or two ago or something?
The Bears?
No, not the Bears. I'm just saying, in general, I don't know.
Yes.
I think it has been on average
Huge upswing in
a further start. I think like it averages like 20.
and the kickers have gotten a lot better too. I mean, I don't know whatever they're doing to the ball. I mean, inflating it or whatever. They're anyway.
Are you
no
okay?
lead is safe. No lead is safe. I'm just saying. I bet you do a lot of betting. Are the do you see the points? I don't know. I'm just asking.
Ooh.
Do you see the points as being a lot less than they used to be?
Like the over-under?
Yeah.
No.
Really?
Pretty much the same. Yeah.
Okay. All right. And what about the points per game? Does that seem to be a little bit tighter? Or?
That's over-under. I mean, I don't think so. No. No. I mean, maybe.
What about the spread? Give me something.
I don't think it's affected the betting lines. I don't think
Interesting.
so. But I think it has. I mean, it's made
No
it
lead
more.
is safe. No lead is safe. It's almost gotten like a basketball game.
The end of the I feel like anecdotally, the end of the games have been a lot tighter.
Yeah.
You know.
But it's good. Like there's so many teams that are so much closer together. Like
A lot of parity in the league. 100%.
Yeah.
100%.
I think it's great. I think the most important thing is that my favorite thing is they do the mascots versus the children. And so they did it during, like, I guess the halftime of the Bears-Vikings game. So, but then the mascots ran a tush push and then just bulldozed a bunch of kids. And it was glorious. And then Grimace was there, and Grimace was just standing on the side. And I was like, what are these mascots? But I love it when mascots just plow over like a 10-year-old. Love it.
So fun. You get the whole gang of 10-year-olds trying to chase them down, and they can't.
Yeah.
Amazing.
It is.
There's no stopping them.
It's pretty good. Well, how was your weekend, Nikki? What'd you get up to?
It was good. I went to a classic, one of our favorites. Can you take a guess? Spots.
One of our favorite what?
Spots. It's gonna show how much.
To eat?
Yeah. I'll give you. Lincoln Park.
Benihana.
It's an absolute classic, an institution. It's been there for forever.
In Lincoln Park?
Go ahead.
Athenian Room.
Oh, sure. Are you kidding me? Old school. Very nice.
Classic. One of my favorites. We did that Friday.
Sweet.
And, Broken Barrel Wings. Very good. They rival Bird's Nest. I don't want to say it too loud. Bird's Nest is amazing, but
Okay.
Broken Barrel, very good too.
Never been.
Down the block from there.
Were you watching
I'm waiting for the
games
invitation.
there?
Yeah, we did Saturday.
Saturday during the day? Yeah. For like the Michigan Northwestern game?
Yeah.
That looks fun.
Which was really
Yes.
cool. Yeah.
It was really cool.
Amazing.
It was really cool.
It's
I watched
tight.
it. What's that?
Tight.
Very.
That's why they call it the friendly confines.
Yeah, well, I know, but for a football game, I didn't realize that it was like kind of this.
And that's what they used to play all the time. I mean, like that was the stadium before the stadium. Yeah, very tight. I know we had Vincent. He came in.
Vince
Vince
came in.
I told him that. I go, it's very tight. You're gonna be on top of field.
Well, I think one of the walk-off field goal, I think the guy kicked the football onto Sheffield Avenue. I'm being serious.
They don't put up the netting?
Yeah, like someone, like if you watch it, because I just saw it on Instagram, and I was like, oh yeah, that football went onto Sheffield Avenue. And it was pretty good. Northwestern did troll the Wolverine fans by playing their Mr. Brightside song, I guess. But then it was Never Gonna Give You Up. They got rickrolled.
Oh, beautiful. Very nice.
A little
Very nice.
comical there. So
Sweet.
how was your week? Did you see Tom? You had breakfast with him or no?
No, we
He ghosted you?
We had a phone call instead. I was phone call worthy. I was not.
Is he sleeping in now?
He does seem to sleep a little bit later than he used
Does
to.
he?
Yeah, still gets up to pee.
Of course.
Did not need to know that.
I'll get the text message. Sometimes in the middle of the night.
I thought you were going to have breakfast.
They're up 40.
Thought you were going to have breakfast and then go hit the shops.
Yeah, no, we were gonna go to the Turkish baths together. Yeah. No, we didn't have a bro. It was more my fault than his fault. So
Did you get your life together, dude?
Yeah, I know. I'm sorry.
So what'd you do all weekend then?
Nothing worse than a Saturday night hockey game and a 1-1 tie at 11 o'clock at night.
11 o'clock
On a
at night.
Saturday night.
Yeah, well, it started late because the varsity team played first and they ran late. We had like a 8:20 start, and we didn't start until like 8:45.
At that point, I would just be like, "What score do you want? Everyone go home."
Yeah, right. Yeah, well, that's what we could have done. We could have saved ourselves a lot of time there. Yeah, they won't be asking me to play the music anymore.
They handed you the aux cord?
Why would you put on that?
Well, you can't play. So I had a playlist ready because the manager tells you, jobs they rotate them.
Profanity, right? Probably.
Well, no profanity. I knew that.
Sade on would be a little weird.
No. I didn't have it. But I had like your Crazy Train.
I could have made you a playlist.
You have like your AC/DC, and you've got
your jock jams.
Your jock jams.
Yeah.
Well, if you're broadcasting on YouTube, you're not allowed to play those. Because
the licensing.
they
right,
flag them.
Yeah,
so my whole playlist was kaput.
Oh no!
So I just went to like.
Did you guys get striked off YouTube?
I started playing the first one. The guy turned around and said, "Shut that off." I shut it off like I had done something, wrong. Like, what did I?
I ask, what are your views on YouTube? Two tree people.
Seven.
Yeah.
Seven parents who couldn't make it, and maybe a grandparent or two that might be watching.
Who's watching this? Who's watching JV hockey at 10 o'clock on a Saturday night?
Those with an eclectic life is what it is. So I couldn't play those. So then I just went to Spotify and got pump up music for hockey. They have like 18,000 of them. Well, the one I picked was just horrible. I mean, it was just I didn't know any of the songs. I would just randomly pick on one, and it would be kind of deadbeat, kind of. Yeah, I don't know. I won't be asked to do it again.
Oh no.
Yeah.
Sorry.
You should get our production crew. We have all this this.
Yeah, James, I got something for you to do this afternoon.
No, but we have all this music that you can use commercial, like royalty-free music.
Yeah. Well, they won't be asking me to do it. It's good. They won't be asking me to do it anymore.
Okay. Wow.
Stick to the color guy.
Yeah.
You did. You did.
Sometimes you can hear me on YouTube. Sometimes they ask me to do that. I'm the color guy.
Okay.
Yeah. It's fun. You can hear me, but that was it.
Did you get your decorations up? It was like 70 degrees on Saturday.
So I'm not a selfish person, contrary to popular belief. Those people at home.
Nobody thinks that.
I'm not. Well, thank you. I appreciate that. And I had a decision to make. I could have. I'm an inflatable guy, and I don't want my inflatables up. I don't put too many lights up. They're too much of a pain. Like a PETA.
Sure.
Those are too pain in the ass to do. Mm-hmm. So I like to do the inflatables, which are a lot easier to do. But then you got these big inflatables hanging out in the middle of your yard before Thanksgiving, which I think is like a sin. So you have to have
70 degrees.
It was 70 degrees. So I put up my igloo, which I did not have last year.
What does the igloo do?
My COVID cave, which is now my man cave. I don't have a man cave in the house. I do, but I don't.
I thought it got destroyed.
No.
Maybe that was Scott Sheridan's.
Yeah, Scott's got destroyed. No. Mine's pristine.
Scott got the budget one. So
Yeah.
it's not as strong. You know, Scott tried to get a good deal on it.
Gotcha.
Didn't get a good deal.
So I said
Igloo has been resurrected.
It has. We didn't have it last year. We have it this year. I got my chairs out there, my table, got everything, my light, my heaters. I'm ready to go. Ready to rock, ready to roll.
What do you do in this igloo?
Play
Man
music,
things.
smoke cigars, drink some whiskey.
Is that what you do in your sauna?
You can't smoke the cigar in the
Yeah,
sauna.
can't do
You
that.
can't drink
Okay.
whiskey in the sauna.
No.
Drink whiskey in a sauna?
Yeah, you got Thanksgiving
you could,
coming.
but hot.
Yeah.
You don't want to.
No, this
Huh.
is beautiful.
Yeah.
This is
Okay.
beautiful. It really is.
It's great. It's great. It's one of my favorite parts of
Yes.
the holidays
Yes.
every
Yes.
year.
Now, I did have to make a concession. I used to put it right outside on the way my house is. I have a deck that's really kind of right outside my living room that you could see inside the house, which means that you can see the igloo. Look at you buying NASDAQ.
Yeah, they just went red. I mean, come on.
And-
We got a 200-point sell-off from the highs overnight.
Yeah, and about $50 off the lows.
We
Even
start a
the
little tiny little baby one right now.
right, even the S&Ps had a big range last night, about 60 points, but it was really all to the upside, and you've
Yeah.
got them red by 8 handles right now.
Yeah. Volatility upticking though. I don't like that.
Right, which last night volatility was red all night long, no matter
it was
what.
below 20. the whole
Yeah.
time.
Yep. Anyway, I got an igloo on the other, so I usually put my igloo on that like pad, a cement like pad. And the wife says she doesn't like the way it looks out there. So I had to move it all the way into the back of the.
Oh, so is it in by the gate to get into
Yes.
that?
Yes.
Oh, that's
yes.
like out of sight, out of mind.
Out of sight, out of
You
mind.
could be out there for
Naked.
Yeah, for days.
Yes.
And nobody would ever.
We could be lost.
Yeah, you could be lost.
Yes, we could be like the Shackleton.
That's where
yes.
You could have Vinny camp out over there.
100%. I even told Vinny, Vinny's friends came over because they went into the hot tub and the sauna on Saturday or Sunday or whatever it was. And I said, look, you got a new place to hang out now. Now you don't have to drink and drive. You can hang out here. I'm just kidding. I didn't say that. I'm just kidding. Oof.
Take it up with the state. I don't care.
We had
Child Protective Services.
Yeah, right.
At the door.
we had the first kid get into a little fender bender of his friends that got into.
Nice.
that
What did
got-
he do? What happened?
I don't know. He wasn't in the car, so he's been elusive.
Vinny wasn't?
Vinny wasn't in the car.
Oh.
No, he was
So
home.
he doesn't know.
So he really doesn't know, but his friend was in it. Just a little fender bender.
Oh.
But I saw the kid was not driving on Sunday, so it happened on Saturday. So.
Oh, he's got the Range Rover taken
Well-
away. Oh no, Braden was devastated. I don't
Too easy.
I just.
Too easy. I think he had more than one kid in the car. That's the problem. I think he got a ticket for that too.
Oh,
Yeah.
he doesn't even have a license.
No, he has a license, but like for 6 months, I think you can only have one person in the car under the age of 18 or 21,
makes
whatever it
sense.
is. Yeah, and I think
Yeah.
he may have had a couple kids in the car. So,
Ruh-roh.
ruh-roh.
All right. Well.
What about you, young lady? Long, beautiful weekend, 70 degrees.
What? No, I didn't leave my house. No, I went to the gym. No, that's all. I did. Gym,
come
tan,
on.
laundry all weekend. No,
Your still water runs real deep over there.
It does not. You want me to be more salacious than I am. I will tell you I was locked in because season 3, Secret Lives of Mormon Wives, dropped. Beth, did you get to watch any of it?
No, but I watched Landman.
No, I'm asking Beth.
Isn't one of them going to be on the
Not yet.
Bachelorette?
Yes, Taylor Frankie Paul. She's going to be on The Bachelor, and then 2 of them were on Dancing with the Stars this season. So
See how much things have changed.
See,
for
there
me.
you go.
I know that these things.
This is horrible. I never thought I'd see
Things
the
are coming
day.
up. Like
I never thought I'd see the day.
I threw that up like I didn't already know.
Right, like you were asking for validation,
like,
but you
just
knew
to
for sure.
confirm. Yeah. So you're ready for that.
Yeah, I'm like locked in. There were like 10 episodes and they all dropped. I only even got through like 8 of them.
If you're looking for it, I mean, Rinaldi's instead of playing the Monday night football game, they do Bachelorette.
Ooh, how do you?
You just do that because he was walking by Rinaldi's
Actually,
on the
last
way
year-
to like a dive bar to
First
watch
season
the game.
hasn't started yet.
No, I know.
So, okay.
And when it does, they will play it. But last year, I went there with a friend for a Monday night game, and they had rose petals
On the floor?
on the floor and like roses on each of the table. They were playing it full blast sound on every TV, and we walked in there. We were like,
What the?
sort of demonic.
I mean, that would be be like shooting fish in a barrel for you. You should have rolled, but now you're wifed up basically. Yeah. But you could have gone in there and had your pick of the litter.
Do you consider yourself wifed up?
Of course.
Okay. Good answer.
Who's asking?
Anyway,
Good answer.
We have a great schedule for you today. The market is moving and accommodating us, so lots of potential action headed your way today. But on this magnificent Monday here at Tasty Live, at the top of the 8 o'clock hour, we have Options Jive. Kai's going to come in for a little research corner, his outlook for where he anticipates the market to move this week. And then 8:40, the Skinny on Options abstract application.
Dr. Jim is back. His throat is better now. I mean, he had a little tickle in his throat or something like that.
Yeah.
Now he's better, so I can't wait to hear from him.
Good. Convexity in a zero DTE world. So Dr. Jim, his triumphant return from a man cold will be in.
I like that.
At 8:40. And then 9 o'clock for market measures. Price is noise. IV is signal. What?
Who?
Huh?
Comparing strangles in IWM and SPY. So
why didn't you just say that?
Which IWM
Why the
was the weakest of the group.
haiku? Why the haiku?
Yeah, 'cause the research team is a deep team. I mean, they are the haikus, poets. I mean, like they are very much in that.
Okay.
You got 15 handles in NASDAQ, maybe a little bit more. Let you know.
Oh.
Oh, hey, talk amongst yourselves there.
Interesting, yes.
And then we got live from the trade desk. Quentin gonna be in counting down the top trending tickers over at Tasty Trade, and Ryan, tons of crypto news. Okay, maybe Ryan.
Somebody.
Maybe not Ryan. Somebody. Somebody, anybody.
Yeah.
Everybody scream.
Yeah. We need a body. Bring one in. We need a body.
Yeah, all right. Well, we will see. TBD then, I will say. But that is our run of show for today. In the meantime and in between time, do you want your daily dose?
Sure.
Hit me with my theme music. Let's go.
Our leading story. Breaking news.
Across the wire.
Leading story. Top story. Just in.
In today's headlines.
This just in.
Breaking news.
All right, everybody. Today is a magnificent Monday. It's November the 17th. This is a part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Headed your way today, what to expect in the markets this week. We are getting earnings from NVIDIA and ton of stuff in the retail sector, Walmart, Target, Home Depot, and more. It is going to be the first week after the 43-day government stoppage. Already, we're seeing massive moves. What do you think is going to happen this week?
We've had a massive move. Good scalp, by the way, son.
Thank you, though.
25,109 on the sale. Good one. How much do you think the E-mini S&P was up or down last week?
Oh,
Total.
Net? Yeah.
What would you think? Would you take
don't know.
up big, down big,
I think
unchanged?
like probably close to unch, like plus or minus like 10 or something.
Yeah, that's right.
Yeah.
It was so E-mini S&Ps, NASDAQ, only the Russell was weak by about 1% last week. So we really went nowhere last week. And I got to thank my friend Armand, who sends me a lot of this. So we went nowhere last week.
But
if
the
you look
whole global economy is based on NVIDIA.
Yeah. I don't know
I'm
about
joking,
that,
but not
yes.
really joking. But like, what are your thoughts? Because it's like that's the big matzo ball that's still out there in terms of the Mag 7.
Yeah, and it comes out on the 19th after the market closes. So you got a couple of days. Today you got Home Depot.
Down $3 pre-market.
It is trading down to 187.5, closed around 190 and change, which is near the low end of its range for the week, if not the lowest end of its range. I think what we've seen in a lot of these earnings, and they've been pretty positive, but underwhelmingly positive, meaning that they, no matter what they say or what they do, they're higher but inside the expected move. And I'm going to think you're going to see the same thing in NVIDIA. Volatility has been upticking It's only 34 right now, Ivy rank, but it's been upticking all week long.
You also get like some jobs data. And
Hey, what?
and
Can you put up my next slide, please? Oh, no, wait. Oh, well, the September jobs report is going to be out Thursday. It's the first data since the shutdown starts to trickle out. You're also going to get import-export data today. He was an importer-exporter, so that could be important pricing information. So the U.S. government is back open for business, and agencies and departments through the Departments of Labor and Commerce are going to post some revised schedules. But Nikki's right, we are getting some economic data this week. Let's talk bonds. Let's talk the dollar, like other things that might be sensitive to this data.
Bonds have been a little bit weaker, 116.18. We've been talking about them being in the 117 handle all week long. Really only dipped down below 17 one time, I think, last week. And this is about as low as they've been. They traded all the way down to 10, 116.10. So as bonds go lower, rates typically go higher. I think, what's the Fed watch to? Under 50% now for a rate cut?
Totally split.
It was a coin flip on Friday.
Yeah, we saw it
It's
move
40, 45% or something like that last time I looked.
So right now they have it 57% staying where we're at. So basically no cut, and that's moved. A month ago it was about 93% probability of a 25 basis point cut. So it's moved completely the other way. I mean, 50-60% the other way from basically 0 to 57%. It's the
So rate cut off usually puts a little bit of pressure on the market.
Yeah, I think so.
We'll see. And we're at all-time highs. But
What about the dollar, yen, euro currencies this morning?
just taking a quick look at like the euro, euro's down small, but it's been rallying all week long. So that means the dollar's been weaker all week long, basically unchanged right now. The yen is anemic. I don't know. You can't buy dips in the yen. It just seems like it's a dead product to me.
Yeah, I've got some short euro positions that are starting to work, but I've been short it for
a while.
Not a while, but the dollar has been weak. The euro's been strong.
Yes.
And so this move gives me like 2 of the 8 days that I've been wrong on this trade.
Okay.
So
All right. Hey, gold continues to move in lockstep with U.S. stocks, but that could point to a brewing market danger. Investors often turn to gold as a safe haven, but that hasn't necessarily been the case this month. Gold has been falling alongside U.S. stocks, which suggests a more dire situation for the markets could be afoot. What say you?
Gold just under 4,100. It is down $8. It's had a decent sized 60 handle move, just like the E-mini S&Ps. Last night, closer mid-range for the night, down 8 or so. Traded down to 40.50, up to 4,100. I'm just rounding. Gold, good Ivy rank of 63. Been rallying. Maybe some putties, some calls in there. Options are definitely the soup du jour, I think, in gold.
4,000 to 4,250, back down to 4,100. I mean, there's been some volatility.
Been some volatility, and it's been upticking.
Yeah.
Are you still trading micro gold, Nikki? Or?
I took that off. I mean, I took a little bit of heat on it and caught the down move. I have not gotten back in here. I mean, this is kind of range bound of where it's been in the last month or so. I have an iron condor, a wide iron condor that I put on in the December 23rd expiration. That's 4,500 on the upside, 3,850 on the downside, 25 points wide. So I'm short some volatility here in gold, which hasn't really worked because volatility has kind of been expanding here.
Yes, it has.
Do you put any credence to this argument that it's sort of a warning when gold and stocks are moving in the same direction?
I don't know what the correlation has been recently, but it has felt very non-correlated. I mean,
it's 0.31.
0.31 is GLD to SPY, which tells you that it's been pretty random in terms of the movement. I think the old flight to safety, flight to quality type argument has kind of gone out the window with.
Seems to be old school.
Yeah, the last 5.
I mean, you look at gold from, let's go from the dip earlier before the summer started in the market, and gold was really kind of going sideways. It's gone up when the market's gone up. I mean, I don't know. Doesn't seem like too much to me.
Well, something that could be a big deal is Bitcoin fell nearly 2% to 93,684. That's the latest number that I had. But the world's largest cryptocurrency is down and has erased all of its gains for 2025. It's a bear market. It's being driven by profit taken and 2.3 billion in ETF outflows. Memes were circulating over the weekend that there's now a direct correlation. There's a record number of job applicants for McDonald's as Bitcoin falls lower. So
That's savage.
I just saw the meme.
The fact that you're reading it is savage.
Correlations are correlating. Look, I don't know what to say.
They don't like the McRib. And those people who are going to McDonald's, they're going to try it.
No, the crypto bros need
They're going to try to
jobs.
fix the McRib.
No,
That's why
crypto
they're
bros
getting
need
a job at
jobs though now.
McDonald's.
What do we do in Bitcoin? All jokes aside.
Down 25% or so. I mean, I'm just rounding there too. I mean, off of its highs. Bear market. I hate the saying that there's profit taking in there. For the people who have held it for the 550%.
Yeah, all the whales are
mean,
liquidating. They're saying, I don't know.
Yeah.
That's just silly statement to make. Yeah, Bitcoin has been, and all the cryptocurrencies have been relatively weak. I think that's one that I know Ryan was very bullish on it. October, November.
Nope.
But Bitcoin's been the one that's been definitely have a lot of pressure on it. We'll see.
It has not looked good.
No, it has never looked good.
What's happening in IBIT and Coinbase?
Coinbase has been taking it on the chin too.
It's been getting killed. I mean, it's at 282. It's down $2 here, but it's gone.
If it opens at 282, this will be as low as it's been since June, July.
Oh wow.
Yeah. I mean, the charts look very similar to the Bitcoin charts.
Yes, and they typically do.
High beta way to play the Bitcoin.
Hey, here's something interesting.
I'm sorry to interrupt.
Oh no, go ahead.
What do you think the correlation? Don't look in coin is to the market.
Ooh.
It's probably fairly uncorrelated.
86.
Really?
I would have said exactly the same thing you said.
Yeah.
I would have said it's just not correlated. Unbelievable, because it has for the last 2 months or so gone basically straight down.
What's IBIT at?
IBIT?
Yeah.
0.7. Okay, that's
0.7.
That's higher than I would have expected.
Yeah, both of them. Mm-hmm.
Wow. Okay.
Interesting.
I guess it's the magnitude that's really the big difference, because
Probably.
the moves to the downside, although correlated, have been way bigger in Bitcoin.
Huge to the downside. We're just off all-time highs in the market. It has a huge correlation. It's down 25%. Again, just rounding.
Yes.
Yeah, I agree with you. It's the magnitude of the moves. Good job.
Here's something interesting. You and people of your ilk had I think a once in a lifetime opportunity. No, listen, to come to Chicago and to start in the markets and to basically make something of yourself with just there was an ability to get in on the ground floor and to be a runner, to be a clerk, to get into finance.
Timing is better to be lucky than good. Sure, there was some good timing there.
Right. So a company called Riptide Advisors is going to sort of create a farm team for hedge funds. So what they want to do is they want to hire unproven talent as portfolio managers, because how do you get experience as a portfolio manager if no one will hire you as a portfolio manager? So the young PMs who succeed will get more capital and a pathway to start their own firm, and they're starting this new initiative January 1st. What are your thoughts?
How much are they charging to do this?
Let's say they do it.
They're gonna people who've never managed a book of their own. They're gonna run small portfolios of up to $20 million.
Small portfolios up to $20 million.
That's change.
Right. I have some thoughts on this.
Okay.
The first one that comes to because I didn't know you were going to talk about this. The first one that comes to my mind is if I'm going to put myself in the person who's going to be the fund manager here, and I'm competing against. This is why I hate games like this when they give people fake money and they say, all right, whoever does the best will get an account, or whoever does the best will win the prize. Think about what you're setting them up to do. Go big or go home.
Yeah.
In the most volatile of products, in the most volatile of things, but this time they're playing with real people's money. I mean,
but these are mostly I don't know how this one's going to be set up, but a lot of these prop firms and these fund to trader firms,
they're fake.
It's all fake money. It's all, everything is fake about it. It's fake environment.
I'm assuming that it's not
trading.
here.
I think it's real. I think it's real money.
Yeah, the way you presented it was real money.
Yeah.
And if it's real money, then it's a tragedy.
Yeah, it feels
Look at how they're setting them up. Even if it's fake money, and then they're going to win and do it with real money, you've taught them nothing, or you've showed them nothing. What you've showed them is push all in, and if you're right, you get compensated.
But what is the other sort of points to like get into the system? Like, say you have a passion and interest in like what I don't know, like in 2025, like how else you get that experience.
Nepotism would be the best.
Okay. Well.
That would be the best one.
Oh, man.
That would be the best one.
Okay.
I guess we have to do
Yes.
it. I guess we have to
Thank
do
you
it.
for putting me in this servitude. You birthed me into it. It's a real blessing. It's a real
Who knew?
blessing.
Who knew? I didn't know when I was doing it, to be
I had
honest
no
with you.
choice in
I was
this
just having fun.
My God.
Okay.
Yeah.
You work your way up like anybody else. I mean, come on. How do
You
do
don't
it?
just start as like a PM.
Nobody gets the corner office to start everything. You work your way up like everybody else.
The Gen Zers think.
That's
Yeah.
They think.
Yeah.
All right. Well, I just thought it was an interesting
bust your ass.
premise
Yeah, you do it.
concept. Hey, in other news, JP Morgan Chase, the biggest U.S. bank by assets, has secured deals ensuring that it will get paid by fintech firms responsible for nearly all the data requests made by third-party apps connected to customer bank accounts. The agreements are with fintech middlemen, including Plaid, Yodlee, Morningstar, Akoya, and others. After weeks of negotiations between the big bank and the middlemen, the bank agreed to lower pricing than it originally proposed, and the fintech middlemen won concessions regarding the servicing of data requests.
That ding you heard is my son double dipping.
Double dipping. Right where we got in.
Filled last time. Yeah.
2070 or at
71.
70
Buying
In
NASDAQ.
NASDAQ?
Yep.
Yeah, 71.
I have a bone to pick with JP Morgan. Something I did not say when you asked me what I did this weekend. I had to send a wire. Yeah, so I
$25 fee.
$35 because I went in to the branch because I wanted to
Oh,
make
because
sure.
you could do it online. You talk to a person.
I could have done it online for $25, which I think is also a complete ripoff, especially when it's going JP Morgan to JP Morgan, which I think is ridiculous. But anyway, I was going to do it online, but I wanted the money to be coming from a different source than just me. I wanted it to be a company name, so I couldn't put that on the.
You got somebody with their foot on your throat. You need help?
Just going through the
Okay.
Cayman Islands? What are you doing?
Okay?
So, so I didn't see a place where it only had like a little memo. So I wanted to go in there and figure it out.
Sure.
So I went in there. They took my license. They took my JP Morgan card. They took everything from me. I signed right there. I made sure it was all good, everything else like that. I get home about an hour later. I got an email, text message, been flagged for fraud. Now, I have no idea.
I mean, this whole thing does sound shady.
I have no idea so I called them. It took me 45 minutes and 3 phone
it's
calls
hell.
to
JP
get
Morgan is
it
hell.
completely through. And I'm like, I can get it if I'm online and you don't recognize the IP address or whatever it is. And I appreciate the whole thing about wanting to have fraud protection. I love it. If I'm in the bank and I'm doing it and you're taking all my information, wouldn't you think at that point if there was a problem, we could figure it out and just clear it up? So JP Morgan is on my...
Yeah, but if you're saying it's an account that belongs to you but doesn't belong to you and you're trying to
It
commingle
belongs to
funds,
me. Anybody could wire...
JP Morgan, what are you doing in the big banks? JP Morgan.
JP Morgan, much like the market high correlation 0.76, but it's gone from magnitude to move 320 down to around 303, where it sits basically unchanged this morning.
Hey, are we nearing the end of Apple's Tim Cook era? Say it ain't so. But news coming out over the weekend says Apple is getting serious about succession planning. The company's board and senior executives are reportedly preparing for a possibility that Tim Cook could step down as soon as early next year. That would come after Apple's earnings report in late January, giving the new leadership team time to settle into their roles before Apple's big events like the WWDC in June. What does this mean for Apple?
I don't know. Apple down $3 right
Doesn't
now.
seem to matter.
Yeah, I mean, but Apple's been a star in this market. It was an underperformer for quite some time as the market was really rallying, and then Apple just took the market on its back. Even the day that we were down significantly, Apple was kind of a little bit higher, and I said, you know what, we're not going lower if Apple's going to be higher key on Apple, and Apple stayed bid, and the market ended up rallying. I don't know what this means for Apple. I mean, I don't know if Tim Cook, I guess he's done wonderful. I mean, he doesn't seem to be the bright star.
Well, it's different when the company's founder.
Yeah,
led,
right,
and,
right.
But Tim Cook, he's 65. He's like, look, I got stuff to do.
He's 65, I'm 63.
Yeah. Well, okay.
I mean, no, I mean, just look pretty good, I think.
Apple is also ending the yearly iPhone releases that you love. Say goodbye to glamorous yearly events that bombarded you with all the new iPhone models. Here's the new schedule. Starting with the iPhone 18 next year, they're going to split up their releases into 2 separate events each year. So the iPhone Pro Max and the foldable iPhone are going to hit shelves in the fall of 2026, but the base model of the iPhone 18 and the iPhone 18e and the iPhone Air 2nd Gen won't come until the first half of 2027. So people are saying, hey, if you need a new phone, the 17 now has the most technological upgrades, and are like, you should probably just get a phone now because they're going to split up the cycle, because you're going to have to wait until 2027 for a base model iPhone 18. So you may as well just get the 17 now.
I think I've been waiting about 8 years for a new phone, so I'll be all right. I'm not mad. I'll be all right.
Yeah.
You got one. I saw you have the floating button on the side.
I do have the floating button, which, by the way, if you don't know about the floating button, game changer. Game changer.
That is the most boomer thing I have. The floating button.
The floating button.
The home button.
The home
which
button.
You don't need. You
is
know that you don't.
amazing. It's amazing. It does everything. It's perfect. I love the floating button.
Wow.
Sad.
Well,
Really.
I think he just wrote the floating button into his will over you.
Yeah. I hope you can still get it with the newer versions. I don't think you can. The floating button was for like if you got like water damage and you couldn't use the actual home button anymore, where you needed one on the screen. That was like what it was for.
Your brother got me the floating button. It was a game changer.
He uses it?
I don't think he uses it, but he got it from me years ago. That was a game changer. On some update, they ruined something where the home button became different, at least different than the way I used to use it.
Oh my God.
Back in my day.
According to recent 13F filings, Warren Buffett's Berkshire Hathaway has revealed a new position in Alphabet. They are investing in the Google parent conglomerates. It's the 10th largest equity holding for Berkshire Hathaway at the end of September, according to their regulatory filing. Berkshire disclosed a $4.3 billion stake in Alphabet. What say you in the Goog?
The Goog up
Buffett's
$10.
Because Buffett's in.
Yeah. So would you be inclined to get long Google now that you know this?
I don't have Buffett-like money. Doesn't affect me.
Google
on a
up
day-to-day
$10,
basis.
286 or so. Ivy rank of 29. You got out of your strangle in Google. Good timing.
Yeah,
Sometimes better be lucky than good, right?
Yes, for sure. I had no idea this was coming and that you'd.
Well, if you had an idea it was coming and you just closed your strangle, then I would say you really misused this information.
Yes. But everybody so scared of this big downside. I mean, Google is a 100% move in
In
8 months.
Yeah.
I mean, it's gone from 150 to 286 right now.
Yeah.
This year from low to high.
Yeah.
And Daddy Buffett has no problem parking, 4, 5, 6 billion.
4.3.
4.3. It's okay.
He's okay.
He's
All
not
right.
worried.
I don't know if it seems like a vote of confidence for the market, but the market's not seeing it yet.
We'll see if this is a vote of confidence, because Tiger Global Management, the hedge fund, has slashed its stake in Facebook parent Meta during the third quarter. According to that filing, Tiger Global reduced Meta holdings by 62% to 2.8 million of the company's shares. What does that say?
Oof, I don't know, but Meta needs to rally. I think I have a position in Meta that needs a little bit of an uptick here.
Absolute dog.
It is an absolute dog, well off of its highs of almost 800, down to almost 600. It's 607 right now, down about $2, and that's a roundup, $3. Yeah, Meta 22 Ivy rank. Meta's no bueno.
No bueno. Do better, Meta.
Yeah.
Hey, OpenAI says ChatGPT will now listen if you tell it not to use dashes. As a writer, I find this hilarious. It has been the telltale sign that you're using AI. Some people just already wrote with dashes. I was not an dasher. I'm just like a comma queen, like I like commas. And anyway, it's a preference. It's a writer preference. But they would say that, hey, if you see a bunch of dashes, chances are that AI wrote whatever you're reading. So now OpenAI says you can tell it not to do that, to maybe stop blowing up your spot that you're using AI for everything.
All right.
You can't trade OpenAI, but you can trade Microsoft. So what's Microsoft doing this morning?
Microsoft's been a little bit of a leader in the market, too. It's sold off a little bit the last week or two, going from around 550. That's a high, but really it was closer to around 530 or so. It's under 510 right now, down about $2. Even the S&Ps are down 12 and NASDAQ's down 47. Russell's down 7 and the Dow's down 93. This is about as low as we've been on the E-mini S&Ps. NASDAQ have a little bit more room to go to the downside. Same thing with the Russell.
There's been an explosion in the buy now, pay later market, and a lot of people are saying that's a pretty clear indication that a lot of people are struggling. Buy now, pay later services have exploded to 91.5 million users in the U.S. I was surprised by that. 25% are using the service to finance their groceries. That's devastating. The default rates are accelerating. 42% of buy now, pay later users made at least one late payment in 2025, up from 39% in 2024 and 34% in 2023. You can trade it through vehicles like Klarna and Affirm, which are publicly traded. But what does this say about maybe cracks in the economy?
If I was a younger person and there was something that I wanted to purchase with parents' credit card, you could take $1,000 down to $10 a month at 23% APR and just have it ding that credit card forever and ever
Into
and ever.
perpetuity?
Into perpetuity.
And the parents would never know?
Yeah, if it's kind of an older parent relative to the...
Who has a button on their phone?
A button, like an accessibility button, as my peeps in the chats have pointed out to me. It's for accessibility, like if you got, hearing, eye problems, old age, stuff like that. But if I was a son of those sort of older...
An enterprising youth.
Yeah, an enterprising youth. You could get, it's only $10 a month,
And that's probably about the average size of what these buy now, pay later type.
You can make them basically anything.
I know, but they don't give you they're not going to give you 50,000 if you have a 550 credit score. They're going to give you $1,000 or $500 or at best. I mean,
it'll take you forever to pay it off.
I get it, and that's I think to go to your point about what they're talking about.
Sure,
here. I think that's what they're talking.
But I mean, to be fair, they're framing it as like, hey, baby girl. Here. They're like, as long as you make the payments on time, there's no interest.
Right.
But if now 42% of people are getting charged with the late fees and all the accrued, and because 42% of people have missed a payment, thereby negating.
52% of those people don't look at their statement and remember that they owe the money, and that's why they forget it.
What can you do, if anything, in Affirm or Klarna?
22 Ivy rank has been going sideways. It's uncorrelated.
Is this Affirm?
Affirm, I'm sorry.
Okay,
yeah, Affirm. It's uncorrelated to the market, meaning it doesn't move with the market. Place your bets there. I don't think there's enough premium in there, and the markets aren't that great.
Okay.
But it is something that doesn't move with the market. So if you're looking to buy something a little bit lower than where it's been, you could try that.
All right. Hey, Walmart set to report their earnings this week, but their CEO, Doug McMillon, is going to retire in January after 12 years of leading the retailer. John Furner, currently Walmart US's CEO, will take over as head of the retailer starting February 1st. Since McMillon stepped into the top role in 2014, Walmart shares have risen 300%.
Walmart had a big day on Friday.
It was the OpenAI shopping cart announcement where it was going to be.
I think it was this news, because this news came out on Friday. So
No. On the big up move, you talking?
Yeah, the
when
big
they
up
got to like
move.
110. That was when
Yeah.
OpenAI had it was like their circle. You know,
You're talking about in October. Yeah.
where they partnered to put the shopping cart in OpenAI. So if you're talking about like how to make some recipe, you have Walmart
Pops right up
there.
there.
Pop right there. Click it. Order.
Yeah. You're talking
Because
about
when you think of people who shop at Walmart, you think of people who are massive ChatGPT users.
Oh.
No, I'm
Are you
just
saying Walmart shoppers are
Hey, you
not
just gave us
capable?
You could do the market research. The numbers would bear out. I know you're trying to bait me, but come at me with facts and data. What are you going to do?
I'm just
with
asking a
Walmart?
question. I don't have
What is
facts or data. I'm
Walmart's
just-
expected move for the week or for earnings? Whatever.
Ivy rank of 42 is really good. It does have earnings coming on the 20th, and that's why volatility is a little bit higher.
Okay.
December 12th, it has a dividend, too, if you're one of those dividend players, 23-cent dividend.
Good news for lovers of dividends, I guess. A Texas judge cleared the way for Kenvue, KVUE, to pay its $398 million shareholder dividend this month, a win for the U.S. consumer health company in a politically charged legal battle over the safety of using Tylenol during pregnancy. Texas Attorney General Ken Paxton is suing Tylenol, accusing it of concealing autism and other risks to children when pregnant women use Tylenol. Get out of here. But they can't garnish Tylenol's dividends. So I'm being serious. So it is a win for shareholders. Kenvue, I'm not sure what the stock's doing.
What's the symbol?
KVUE.
I think
KVUE.
it was a spin-off. I think it was.
Yes, of J&J.
Okay.
Yeah.
Because
KVUE. I've never traded it.
it's not tradable. It's
I mean, it's not. Yeah. I mean,
It's not tradable.
Yeah.
But
I agree with you. I've never traded it.
People who own the stock are gonna get dividends, so they want them, so they're coming.
You know, I stood next to I think I've said this on the show, but I stood next to the son of the police officer who was in charge of finding, which they never found, I don't think, the Tylenol killer back in the day.
Yeah, they didn't charge it. No one's ever been charged
Yeah.
in that case.
Yeah.
So who did you stand next? What?
The son.
the son
of the police officer.
Okay, cool story. No, the police officer who did
The
what?
detective that was
No
the
one
head of the
was-
whole.
Here in Chicago.
Yeah.
Gotcha.
Yeah. Well, it
Okay.
happened right basically in the Gold Coast.
Is there a Netflix?
There is, yes. This is Tylenol
might be.
Murders. It's very good. You should watch it.
Yeah.
Hey, I got to keep things moving here. Costco. Does Costco have earnings this week?
Oh no, but
Question,
we
I don't
have
think so.
long delta in a multiple of ways. So
December 11th. So
Oh, okay. So they must have already had them then.
Yeah.
Okay. Well, Costco is being sued over allegedly falsely advertising that its Kirkland tequila is in fact tequila. The proposed class action lawsuit was filed in the Southern District of Florida. Yeah, that tracks. Specifically, the federal lawsuit states that Costco tequilas are actually contain so much sugar that they actually don't even qualify for the technical definition of a tequila. They say that the tequilas contain material amounts of ethanol not derived from agave plants, and as such were adulterated. Oh no, with ethanol rather than obtained from blue agave. I was like, look, does it get you drunk or not?
Casamigos is in this realm too. Shame.
There's too much sugar
It actually
in it.
looks like the bottle for Casamigo, which always made me think that that's what it was.
I mean,
white
Kirkland
label.
normally works with like
Yeah,
premium
yeah.
brand. They sell it at a cost. But anyway, Costco's in trouble. There's class action. I mean, it's just get drunk, man. I don't care. What are you doing in Costco?
It works, right? Costco 920. Well, it's hard to tell. There's only been about 3,500 shares trading. The markets are quite wide. Let's call it unchanged down a skosh like the rest of the market. IV rank of 39 is pretty good in there. I think we've got
We're long. We did a put spread. I have a diagonal spread.
Dees Jan.
Yeah, we're locked and loaded, ready for this to go up.
Ready for the split.
Feature film rights to the hit Labubu dolls have been acquired by Sony Pictures Studios. So that means a Labubu movie is in the works. No one asked for this. But on the hit of movies like the K-pop Demon Hunter animated series, which was on Netflix, and now they're releasing a line of dolls. Now this line of dolls is going to release a movie. So you can kind of trade Pop Mart. I think it's PMA.
Oh, we're not gonna trade Pop Mart, but I did find a Labubu this weekend. A Labubu, a chocolate,
A Dubai Labubu?
Yes, a Dubai Labubu. Thank you.
I speak boomer.
Thank you.
What? Is it a...
Looks just like that, but it's chocolate. Dubai chocolate.
It's a Dubai Labubu.
Duh, of course.
Duh, of course. Get into
Who
it,
doesn't
Nikki.
know about that?
Get into it, Nikki. Hey, good news. Google and Disney have reached a deal to restore ESPN and ABC to YouTube TV. The news came out late Friday night after a 2-week standoff that resulted in the channels like ESPN and ABC going dark on YouTube TV just in time for people to lock in for their Saturday college games and Sunday NFL. Disney...
Nothing helps Disney. 105 and change, basically unchanged. Remember, it went from around 117 to 105 in the last 3 or 4 days. So low end of the range, 22 Ivy rank. I think you have to be directional in here in Disney.
Well, sports are just getting worse because the World Series announced that, Major League Baseball announced that World Series rights for next year could be split amongst multiple networks under a new MLB deal. So this one on Twitter posted this funny thing. They're like, so innings 1 through 3 will be on Peacock, 4 through 6 are going to be on Netflix, 7 through 9 on YouTube, and then extra innings on Corncob TV. But this is the reality of where we are. What if you had to watch Game 1 on one network, Game 2 on another? I hate it here.
Yeah, I agree with you. Yeah, I agree
YouTube TV was the spot where you could kind of get all of it.
Yeah.
But then it's the price of, past Costco or Comcast.
Yeah. Well, what are you going to do? Hey, finally today for my viral video of the day, with Home Depot set to report earnings this week. A lot of very manly men are...
Tomorrow.
Yeah. A lot of manly men are doing, renovations around their house.
Putting up igloos.
Yeah, going to Home Depot, going to Lowe's. But is this the apex of male home improvement? Look what this guy did to his bathroom. Watch this. It is a choice. You got lights, you got fans, most importantly, filters.
That's so much.
He's single. I'm going to tell you that right now. He is
He has
single.
a lot of free
Not
time.
with that gold frame in the bathroom. No, he is not. And the basket on the side for toilet paper, that is not a single man.
Gold and silver or gold and stainless, he's single. 100%.
I mean, I don't know. I don't hate it. I don't know. It was just a funny video. That's all.
It is very funny.
What's coming up next?
We're going to take a quick 90-second break and come back. We got more Tasty Live after this. Even the S&Ps dip down to new lows for the overnight session. We'll be back in 90 seconds. Tasty Live.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
tastytrade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with Active Trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Nicky, we are back, son. You know what that means. Time for a little bit of, confirm and send on this Monday, November 17th. But first, let's take a quick look at the market. Even the S&Ps down 13 and change. You can see here they got down to 34 this morning. They're trading 41 right now. They got all the way up to and above 6,800 to just over 6,801. So we are definitely on the low end of the range. NASDAQ down 46, Russell down 7, and the Dow down 103. Matter of fact, most of the night that I could see, obviously I was sleeping, but when I woke up, all four indices, when I went to bed.
When you woke up to pee?
No, I don't have that problem yet.
You're not that guy?
No, I'm not that guy.
Good.
I'm not that guy. I just wet the bed. For
diaper.
Oh,
it's a diaper now.
Yes. All four indices were green. I woke up, they were green. Again, they're not right now. You've scalped them from the positive side. You have one outstanding there. Taking a little bit of heat on. Volatility up 22 cents. Trading near its highs. Volatility all last night, even when the S&Ps did dip down around 8 or 10, was red. Today, you've got volatility up.
No, go on. I was going to say afterwards, but go on.
Go ahead.
No, I was going to say we got some people asking because, to your point, volatility was down. Now you got volatility up, taking a little bit of a pullback.
Yeah.
You said kind of last week's.
Yes.
You want to see SPOOs dip into lows.
Yes.
And then kind of fight back.
Yes. So I thought last night's action, and I almost tweeted out, but they turned around too quickly. They really weren't down very much. I was going to tweet out that volatility, is not expanding. This market looks like it could be, bid sometime tonight if you get a little bit of movement to the downside, and we got the up movement too quickly, so I didn't tweet anything out or say anything. But I was watching the market as your show was on Sunday night. Even the S&Ps opened up around 8 or 9 and quickly sold right off, down about 8 or 9, and then they rallied to basically unchanged up small. So I didn't get an opportunity to say anything, but I watched your show. You guys did a great job talking about the market. Today, right now, well, you've got a couple other things, and I'll get to what I think we have this morning. Bitcoin down 400 and change, got down to under 9,300. You can see here a big move from top to bottom here. Bitcoin seems to be the weakest of the group. Ethereum seems to be matching that too, although it's a little bit more mid-range. You'll notice here it got down to just about 3,000, up to over 3,200. Right now, Bitcoin and Ethereum's down a little bit more. But Ethereum off of its lows. Oil up 18 cents. You can see here right near its highs for the day. But oil's been in a pretty tight range here. Gold, on the other hand, is down 26. Gold really never got its foot underneath it, although it did get up to 41 and change. It's about $10 off its lows right now. Silver down 29. Big move in both of those relative, half percentage point. Net gas down big. That's your percentage leader to the downside, down almost 3%, almost 14 and a half cents. Google is your big winner to the upside. I think you can key on volatility today. If you see volatility, as I always do every day, if you see volatility go red today with even the S&Ps being lower, maybe that's it. I would like to see us open a little bit lower, scare the children a little bit, maybe 20, 25 handles lower, and then see if we can get something going to the upside.
You think we're front running that though? Because the E-minis were up 30, 35.
Yeah.
Throughout most of the overnight session, then kind of sold off here into the start of the session. Because I think people are calling that out, like, we've been looking for this kind of weak open.
10 handles weak. I don't know about it.
Well, it's 40 or 50 from the highs.
Yes.
And that's a pretty decent move.
Yeah,
It looked like everything was all,
plus
fine and
$40
dandy.
expected move for the day, so you're right there.
You've had that already, and volatility has had some bid here.
Yep.
Anyway.
I'm not looking to buy the dip and Russell versus. I mean, if I'm looking to do anything, I'd probably be looking to trade Nasdaq the way you are, or even the S&Ps.
Cool.
All right, let's get.
Percent?
Yeah, let's do it.
Let's do it.
At what point am I paying margin interest if I buy stock and have enough money to pay for the notional value, but I'm only being required to put up 50%? Does that mean I'm borrowing the other 50% on margin and paying interest?
No. So you're only margin debit if you are going past your cash balance, which the margin account you're given leverage on most stocks. Some stocks might be cash secured, but once your cash balance is below zero, then you are paying margin interest. But this doesn't come into play. So like this is only available for stock trading. You cannot go into margin debit on option positions in your portfolio. You can't be margin debit. So a margin account where you are trading options, there is no situation where like if your cash balance is below zero, it means that you are assigned stock. You can't go, or you're in a margin call or something like that. Like you have to be above a zero cash balance when you're trading options, or else you are in a day trade call or a margin call of some sort. So this only applies to people that are buying shares of stock.
Let's backtrack for a second. Let's just answer from a stock point of view, because that's all that they're asking here, and then we'll get to the option thing in a moment. You're only required to put up 50%, so you're not paying margin on any type of money. So for argument's sake, if you have $10,000 in your account, I'm just using round numbers, and you buy $10,000 notional value or $12,000 of notional value in stock, you'll be holding $6,000. You're not paying any margin on anything else. You got $4,000 to trade with. If you use that $4,000 or more, then you'll start using your margin. The way you asked this question, there's no margin interest being paid here. You went a little bit different direction when you started talking about options. If you're in a portfolio margin account or a margin account, and let's say your options are we'll use the same $10,000 account, your options are using $2,000, and there would be no margin associated with that. And then you put another $8,000 or $7,000 in like a BIL or an S-Gov or something like that. And then you put on more option trades, and you went over that $7,000 or $8,000 that you had in BIL or S-Gov, then you could be charged some interest. You'd be getting interest from your BIL S-Gov, which would be less than what the brokerage firm would be trading you. The easiest way to get above or around all of this is just click on your balance button on the top of the line. If that number is positive, you're good.
Yeah, you look at the cash balance.
Yeah, look at the cash balance. That's all you got to look at. If your cash balance is positive, you don't have to worry about a thing. So the person who wrote this, just click on your cash balance, because I don't know what other positions you have in. And you certainly can email the support team, support@tastytrade.com. They can answer because they can see your account. I can't see your account. But just click on that balance button. You'll be fine. Next question, please.
Is there a correlation between how markets in other parts of the world trade, say Asia, and what to expect from U.S. markets that day? Interesting.
It's a great question, because it seemed, especially during COVID and stuff like that, if you've been trading long enough to remember COVID, that when China would open up in the middle of the night, when China would open in the middle of the night, it would influence what happened to the even the S&Ps, and it was a time when I was waking up in the middle of the night just to see what was going on with the markets. It seems to be random and not really correlated to today's market. So at this point, I would say no, but always subject to change, right? And it could be just a coincidence and a phenomenon that you end up seeing, you think that it happened. I think it's pretty random myself.
I agree. I don't know if I'm taking too much out of the open that first 30 minutes or so in the afternoon session is you do see some two-sided action.
Yeah, sure.
Other than that, while I'm sleeping, I'm not getting a review of what happened in the Asian market.
Nope. Agreed. Next question, please. What percentage of my capital should I be using in this market? This market right now.
I mean, it depends on how much capital you have. I think smaller size accounts, you naturally have to be a little bit more skin in the game relative to your account size. I mean, with volatility in the 20 handle, like this is kind of the sweet spot. Like
Yes.
this is where you should kind of have a little bit more risk on, and that's kind of what we've showed in all of our studies. Is this 18 to 25 handle is kind of the good spot.
Totally agree. More than what you had a month ago is the way I would answer this. If you were comfortable a month ago using X amount of your portfolio, you should be using a little bit more. Now that doesn't mean that you ramp up the number of contracts or percentages in the positions you presently have. Like if you're following our guidelines, depending on your account size, I'll give you a pretty wide one, 2 to 5% per trade. That doesn't mean you go to 10% per trade. That means you go find other products to trade and go with the lower end of 2% on those new ones and then try to kind of ramp up that way. Not adding more to an existing position, at least the way I would do it. Next
Agreed.
question.
What does it mean when an underlying is delisted?
It means it's forever gone.
No, some of them come back.
They do come back. Some of them go to the pink sheets, which we don't support at tastytrade. It just means it's not going to be part of your realm anymore. And if a stock is going to be delisted, reverse splits are another form of not delisting, but they change the parameters to especially the option. I'm going to go in the option world because that's where we're living. It's best to close, move, take the risk off of that trade before the split or obviously the delisting here. So when it's delisted, it means it's gone. I mean, sad but true. All good things come to an end, and that one's come to an end. Delisted is not something that a stock wants to have happen to it.
Nope.
Think about it as being like fired. You are out. Even the S&P is down 10, NASDAQ down 35, Russell down 6, Dow down 70. Volatility hasn't moved up 20 cents. Bonds are up 5, more in the middle of the range, 116.21. Gold still down 25 and oil up 11. We're going to take a quick 90-second break and come back. We've got an option jive for you. And then we got the opening bell. We'll be back in 90 seconds. It's Tasty Live.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, Did we mention that it's free? Get back testing at tastytrade.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
It's option. Jive.
Nicky, we are back, son. Such a special treat right now. We've got Kai in the room. It's an option guy. How are you?
I'm doing great. How are you guys?
Doing good. Happy Monday to you.
Happy Monday. Happy week.
Monday's a good day for you in general? You better say yes because you're coming on the show. You're in our presence. Lie to me, Kai.
Oh, for sure. Yeah.
Awesome.
Favorite day.
Favorite day of the week?
Forever.
Perfect. What do you got for us?
All right. The summary from last week. So what happened is the government shutdown ends after 43 days, the longest in the history for sure.
Shut it back down. Put this market back to bull market. I don't like this government thing.
Oh, that's a good point. Everyone
as soon as it comes back, market stinks now.
I know.
Turn it back off and let the money printer go.
Everyone thought that should be the positive news for the market, but actually the market was so random they actually start to crashing down 2% the day after, right?
Mm-hmm.
Nobody knows anything, as always.
That's right.
And starting late week Thursday, so the markets start to sell off, and led by the tech sector. But this concern has been there for probably more than a couple of months about the AI investment, all the energy sector, everything. Just a sign.
Mm-hmm.
And Bitcoin finally dropped below 100K level, which is pretty interesting. Wiped a lot of accounts. If you follow the Twitter or the other social media, you see a lot of people crying and complaining about the using 25 times leverage or even higher, which I don't understand why people use like 25 to 50 times leverage, just try to be rich in 1 hour.
Well, that's the one. That's the reason. There you go. You just said
doesn't.
Right. It works till it doesn't. I mean, think 100,000 is just a round number. I mean, I think the bigger news is down 25%. That's a big move in a very short period of time. So they have every right to cry.
Yeah, I watch a couple.
I'm crying. I got a little bit of crypto coins. I mean, I'm crying. I wish I got out.
You're using futures, right? Not the
No, I don't.
Oh, really?
More the cash than anything else. Yeah, futures are too big.
Okay.
5 coins.
All right. And we have some the Treasury announced some large auctions of treasuries. This is not super important during normal time, but right now because we lack of some economic data. So this whatever the Treasury try to do is kind of very important test for the market.
Okay.
All right, going to this upcoming week. Not too many news. Again, so FOMO.
You got NVIDIA, FOMC, big week. This is the biggest week. Come on.
Biggest week, right? Talking about earnings, yeah, for sure. FOMO meetings, Wednesday, not meetings, sorry, just like the minutes. On Wednesday, give you a lot more information about the December potential rate cuts or not. Right now, I think it's just slightly above 60% prediction or somewhere between 50 to 60%. And the major retail earnings week, other than NVIDIA. I didn't put it here, but this week we have a lot of retail companies. Walmart, Home Depot, Lowe's, Target, all these big names, other than Costco. I think all the other big names are here, right?
Yes, yes.
And we have the Flash PMI on Friday. But NVIDIA, as you said, is probably the most watching.
For sure, and I think that's why volatility will stay bid a little bit. Just because you have some bid.
And today is Netflix split.
And today's Netflix.
They split on Friday after it went into effect Friday after the close. So today we have Netflix at 110. It might be something that we can actually do something in now. They're probably going to keep margin up on it and probably for the first like week or two.
Oh, I would think so.
Is what I would guess.
Yes.
And then,
Yes.
Things will tighten up in there, but my peeps in the chat.
Yes, that's why you
Most
look
of
at the
that.
option chain. You see nothing quoted there yet. That's
Yes.
because the feed hasn't come in from the exchanges.
You think that's another strong buy?
I mean,
I think it's going to be more tradable.
Yeah, it'll be more
That's gonna
tradable. I
be
think
the-
that's the way of putting it.
You can put on naked position for a lot of people.
Right.
Yeah, you could trade it like you trade all the other.
The Ivy rank is going to be screwed up in there. Don't look at that.
Yeah.
You know, that hasn't picked up anything yet either.
Yeah.
For sure. Okay, so looking at the indice performance, pretty much unched for S&P and Dow, and also Nasdaq, right? And Nasdaq is down 0.1. S&P is up 0.1, which is unched, and the biggest loser is the Russell, down 1.7%.
Yeah, the Russell's the biggest one for sure.
And the
We really went nowhere.
Yeah.
unched. I was looking at the number. I was actually I checked 3 times. Did I watch it correctly?
But I don't think I would have said that if I was reading the newspapers or just hearing about what the market did. I would
It's
think
not
that-
what it felt like either.
It's not what it felt like
No.
either. No.
Especially after watching the first 3 days, right?
That's right.
We were like up 2 to 3%.
Yep.
Yeah.
Yep.
And the expect move. So we don't even need to look at the numbers. Definitely within the expect move. So the this week, because the implied volatility is up a little bit, so the expected range is 126 for SPX. So it's 1.9% up or down. Let's see.
Let's see is right.
Yeah. Let's.
Go ahead.
We have something new I want to incorporate probably in the future. This is SPX 0 DT weekly performance. I just put a very simple one. So if you have any other requests or you want to see different numbers, I can try. So this is different from the macro analysis. This is kind of micro, what happened in the past week or past 2 weeks. I put together 2 weeks. We have some of the missing data because of the database. So in general, we have 7 winners out of 9. The percentage winners is 73%. Average credit is roughly, so I use 20 delta, $30 white iron condor, enter at the market the beginning 8:30.
Okay.
So average credit, we are able to collect roughly $7. That's because of the implied volatility was high.
Yeah.
If we're VIX trading around 16, 17, you're not going to get $7.
Or $4. Like,
Yeah,
Right.
$4. Yeah, roughly $4. So
I like this.
Yeah.
I like this.
I think
just for content of what's happened over the last 2 weeks, I like this.
Yeah, this kind of fits with the experience that we've had of mostly. I mean, you get like 1 or 2 out of a 2-week period. That's 20% of the time if you're doing these at a 20 delta.
The numbers work out.
That's exactly.
So this is a strictly follow the rules that we manage winners at 25% and we stop loss at 200%. So look at the biggest bar on that day. If we do not close at 200%, which a lot of people don't manage the iron condor, they actually end up with the winner. Because actually you forced out at 200% on that day, so they actually drag down the average performance for the whole 1 or 2 weeks. But we have majority of the occurrences reach the winners.
Very good.
Very good.
Yeah.
That's cool.
Yeah, interesting to see. IVR, most of the assets were up last week. Probably only the euro was down a little bit. Crude oil, I would say, is unched. 1 or 2% IVR doesn't mean anything.
Right.
But because of the overall market, implied volatility was up. So everything was up.
Yeah, I think bonds really were up too. I think.
Yeah, bonds were like jump from 4
Yeah.
to 10% IVR. It's definitely going up.
Right, which means rates maybe not being lowered. At least that's what it looks like at the moment right now.
The peeps like your SPX.
Oh, there you go.
Peeps in the chat. They've blessed it.
See that? Instantaneous gratification.
They said
for you,
more.
Kai.
More.
You don't get
Great.
that at home.
Sure. Yeah. Next slide. Some interesting thing I want to worth mentioning from different assets. Probably the biggest one is the Bitcoin, right? Down $100,000.
That's an ouchie chart. Ow.
That is an ouchie.
Yeah,
charge, right. That is a big ouchie.
Yeah, you got your blow.
You need more than a Superman Band-Aid for that one.
Yeah.
That ouchie. That ouchie.
What do you guys think? Is it going to keep going down? A lot of concerns around the AI bubble related and crypto overbought. Everyone starts to lose money, lose the momentum.
It is very sentiment driven, and the sentiment could not be worse, which probably tells you that maybe it's over.
That's the way I feel about it. I've been kind of saying Bitcoin has been weak, and the weakest
The
of the
market
group.
sentiment has been crap too.
Yes, it has been for going nowhere and doing nothing,
Yes.
right? I mean, so I think Bitcoin is probably closer to its lows than closer to its lows than making new lows. That's my opinion.
Vecchio had the fear and greed index stats on the show yesterday. Extreme fear right now. in the
Right, and
market.
every time you
we're
get that,
2
usually-
we're 2% from all-time highs, 3% from all-time highs.
Yeah, I forgot who said that yesterday or over the weekend. It says before the end of this year, crypto can reach $200,000 to $300,000.
Those are conservative. I mean, a million. You go to Kathy Woods and the rest of them, they can tell you anything. I mean,
one coin you should be able to afford a castle.
Yeah. You're in the infancy.
Well, no, the castle goes up 5x as well. So it's like basically the same. That's the whole thesis.
That's true.
Yeah, Bitcoin goes up as the money gets printed, and so it's basically just keeps you where we're at right now.
Cool. The top 5 and bottom 5 performance in the S&P 500, liquid ones. Cisco up 8% because of the earnings. A lot of the bio companies went up. Merck, ABBV, and the next is the Hershey and Nike. Nike was up 6%, which was pretty nice. And at the bottom part, APP, the extremely expensive and crazy one, down 14%. STX, Coin, PLTR, Hood, all big names down 10 to 12%.
Yeah, the high flyers didn't have a great week last week. If you had a portfolio of high flyers and not the S&P, like if you were diversified in the S&P, you saw no movement in the market. If you were diversified in the high flyers, you probably had one of your worst weeks of all year.
Yep. Yeah. It's down like 10 to 15% across all these high-tech companies.
Yeah. So, I mean, it's all depends, everybody's world is small, you know what I mean? Because it's what you have, you know what I mean? Not what the market in general.
You have limited knowledge and time and focus, right?
There you go.
Talking about the earnings last week, nothing dramatic happened. So none of these companies had double-digit move. So I just put Beyond Meat and Disney was down 9 and 8% the day after. Beyond Meat was actually got crashed. They have like 3 days down more than 8% in a row last week. So it's probably down like
meme stock. I mean, it's
down 30% or something.
Yeah.
Bad. So the rest of the week, if you trade earnings, probably just stay in the expected range, which should be a good one. Until last week, we have more than 3,000 companies announced earnings so far for quarter 3. The numbers didn't change compared to the ones from the week before. More losers, slightly more losers. Average returns negative 0.2%. Nothing changed on average last week.
Unbelievable. So
it really is how the math works out.
Yeah. But that's not how it feels because you only trade a handful of them. And, and if you get one that has like a tail type move, you think they're all tail type moves. And really, when you look at the whole basket, 3,000 companies, it's basically 50-50 and 0% average return. It tells you all you need to know about earnings. It's 50-50 shot over a long period of time. It probably doesn't help or hurt you. It's more of like an engagement thing.
Yeah, if you trade NVIDIA or Tesla, you would think the whole market is going in the same direction as this one.
Yes.
Right.
You would think.
This week earnings, we do a lot of retail companies, Home Depot, Baidu, PDD, tomorrow morning. So if you want to trade earnings, you should put trade before the end of the day. Wednesday morning, Target, TJX, Lowe's. Wednesday afternoon, the biggest one is the NVIDIA and Palo Alto Networks. It's interesting. This one, not too many people talk about in the past 2 months or 3 months, right?
NW?
Yeah.
Palo Alto? Yeah, it's kind of been chopping around 200-ish. CrowdStrike is the one that has been the mover of the cybersecurity stocks. I mean, that's had a wild ride. It had the move that it looked like it was basically going to zero when it shut down the entire world. But then I was like sitting there, I was like, wait, this thing shut down the entire world. It's probably like...
You probably have some influence here.
Yeah, you probably want to get long that, right? Like
that's true.
This isn't bad. This just makes you realize, like, holy crap, you can't this one company goes down and you can't fly, you can't access any documents, your whole, Microsoft Teams doesn't work. Come on, all this.
They got their hand in everything.
Yeah,
they are the black hand.
Yeah, they are everything. Jesus. Anyway,
Beautiful.
Good job out of you, Kai. Perfect timing, too. We can take a quick 90-second break and come back. We got more Tasty Live. All four indices are red. Volatility up by 26 cents. Bonds are up 4. Bitcoin's now down 160. I'm talking about the futures. Ethereum's now down $17. Oil basically unchanged after trading over $60 and flirting with going under 59. It's right there at 59.91. Gold down 27. Silver down 37. Net gas not down as much as it was before, but still down 2% or 10 cents. We'll be back in 90 seconds. This is Tasty Live. Opening bell next.
Turn on the machine.
Turn the machines back on.
Peace.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Nikki, we are back, son, and you know what that means. Time for a little bit more Tasty Live. That's right, with the opening bell imminent here in about 2 minutes. Even the S&P is making a little bit turn south, down 20 as volatility upticks to highs 2050, up 35 cents. NASDAQ,
One more.
You bought some NASDAQ, didn't you?
Yeah, I did.
Yeah. You're
2,500 on the spot.
You're on tilt now. Yes.
No. I took 40 handles, 50 handles out of the first one, so I'm right here.
Okay. I got you.
I got ammo for more.
Fair enough. Russell down 9. I think you're right. I think you're early. Russell down 1.
I know, but you can't get the bottom.
No, I get it. Volatility up 32 cents. Bonds are up 6, 116.22. Bitcoin down 200. Ethereum down 20. Oil basically unchanged, sitting at 60. Gold down $25. Gold's the only one that really hadn't rallied, although I didn't see it get up to 41.07 last night. This morning, when all four indices were higher, gold was lower, right here, down 25. Silver down 35. Nat gas down 10. Google is your mover to the upside, or at least it was, 285 and change on the Buffett news. It is up $10. Apple trading 268 and change, down around $4 or so. For earnings, you got Home Depot, Baidu, Trip, Pinduoduo, a couple other smaller ones in there. I guess Home Depot and Baidu would be the two that we'll look at. Do you have positions in either one of those?
I do not. Baidu has had a little bit of a move lower. I wish I held that little butterfly that I had, but I took a couple bucks out of that.
I know. It's so, but butterflies are so hard to hold. They don't expand really to the last week or so. And even
Had it
then,
with 1 week to go.
yeah.
But it was marked at $1, it was $5 wide. It's like, how much are you really going to get out of this? And now all of a sudden it's right in the sweet spot of where I needed it to be.
Ooh, there's your opening bell.
That was low ding.
Low ding.
There we
go.
that's a
Now
ding.
we're strong. Now we're strong. That's what I want to hear. Let's see what's moving the market real quickly as we go into today's trading. On the downside, you got Lilly down 24, Coin down 10, Nvidia down almost 5. Oracle's been a weak little doggy too, down another 5.
Reversed the entire move that it had in that like explosion higher
from September. When it went from like 220, 230 up to like 330.
Incredible.
Back down to 220. Yeah, I did not think it would get this low on that quick of a move. I agree with you. I got a little bit of long delta in there. I'll have to worry about. Tesla down 4, Apple down around 4.5.
Wow, that's the biggest move I think we've had from Apple in
quite some time. Hood down 3 or so. On the upside, you got Google up 11. Baba, you can see here, has earnings on the 25th, up 3 and change. Starbucks, ARM, up $1 and change. Baidu, which has earnings right here tomorrow morning before the market opens. If you're going to do something in Baidu, you got to do something today for earnings. It's up around 60 cents. What are you doing in Apple? Oh, getting
so I had a put diagonal spread that I put on a couple weeks back, or I should say, it feels like a couple weeks. It's only been 2 weeks.
Okay.
On the 6th, my thinking there, I did it in IBM as well. I closed out of IBM last week, but Apple was my play to the downside because it was the strongest stock in the market throughout all of the 2 weeks ago Friday sell-off.
Yeah.
And I was like, if anything's going to catch up, maybe it's Apple. This is the first downtick we've had in Apple, and so I had that leftover long put that ends up being $100-$200.
So you took off your short put. That probably
scalped out of the short put for 81 cents. I had 11 days to go till expiration. I put it on for $2-3. It came off. Now I basically scratched the long put, but net you make the $200 on that short premium because I had the 260 puts.
Very nice. Look at you.
Just a little
scalping fool you.
Do I take one of these NASDAQ off here?
You could try. Good work out of you. NASDAQ, you bought it under 25 on your second one. You just sold it around 60 or so.
Yeah.
Good job out of you.
Anything else?
Just helping your basis there a little bit, right?
Yes. But I got, I should be, at 20, or at like 25-ish should be I took like 50 ticks out of that.
Yeah.
I took 58 out of that on.
You closed 50% of what you had long at a nice profit, reduces your basis on the other one. You're probably right there a little bit. You probably have a profit in the second one, net, if you're looking at it that way. Yeah. Volatility up 20 cents, even the S&P's down 14. Let's see if this market has changed anything here to the upside. Doesn't really. AVGO up small now. TLT. Choppy market. Totally agree.
Nothing moving enough to take positions off. You're not getting paid. Volatility's staying relatively bid, so you're not getting paid on vol coming in. The market hasn't really moved all that much. You got a couple single name stocks that are moving a little bit, but nothing enough to really move the needle here. Microsoft up.
No, nothing really to move the needle here at all.
Freaking Micron, this stock, unbelievable.
MU. Yeah,
it's incredible.
It never seems to go down. I mean, look at it, up $7 and change, $8 now, up 3.5%. I think it cured cancer.
something like that.
Yeah, it does feel like it, doesn't it?
Yeah.
Wow, only 4 minutes into the day here, and I'm almost speechless. I'm actually surprised by this market move. I thought we'd get a little bit more movement to the downside. To your credit, maybe you get out of your other future there if you want to. You got NASDAQ up 2.5 right now, volatility up 10 cents. I'm a little bit surprised by the strength in this market so early.
So I just closed out that OKLO put calendar spread at the 80 strike. We were short the December 80 and the November 21st 80, which expires this week. I think this was a trade from Fast Market. Got a little bit it was a cheap way to play the downside here in OKLO because it's hard to sell these call spreads. The call spreads trade super, super cheap because you had tons of calls skew up there. So, doing a $5 wide, I did this at like $4 I just closed it at $4.38. I put the trade on at $3.40. So I took like $98 out of it. But to put $3 in risk on a call spread, a $5 wide call spread on the upside, you're selling those at 50 cents, 60 cents.
Sure.
And they were trading at nothing. And this trade I've been in for, it's been 10 days now. So it's been a little less than 2 weeks. It was an interesting way to play the downside into this move.
Very nice. Look at you, Pikachu.
That's not me. That was the peeps. That's Fast Market. I don't
look at our peeps. He's been
giving us bangers. NASDAQ up 14.
NASDAQ up 14. You are correct. NASDAQ up 14. Even the S&P is only down $1 and change.
Yeah,
very nice. So far, so good.
Yeah, it's been. We took a little NASDAQ out.
Yeah, volatility now basically unchanged, up 5 cents. Bitcoin up 1,000. Can't keep a good spoo doggy down. It's flirting with unchanged.
Take this B. I got sucked into B again.
You got what?
BE, Bloom Energy.
Oof.
You're
in there again?
It has a gravitational pull on me. I cannot.
You cannot. Even with the wide markets in December.
Oh, I hate.
Ivy rank of 105 means it's as high as it's ever been.
All right. So I did another one of these just pure risk ratio spreads on the upside, like a 1x3. Finance the long option with 3 short options further out of the money. It's nothing but tail risk. It's nothing but tail risk. Stupidest. It's the silliest thing to do to make $1, but I made $1.
It's one of the dumber trades.
It's one of the dumber trades.
Sure.
Not for the faint of heart. NASDAQ up 55, E-mini is basically unchanged.
And Bitcoin.
And vol is now down and Bitcoin's rallying. That was what you called it. Not that the day is over, but you were looking for a little bit of a downside. Kind of a scare the children.
Yeah.
I thought we had it last week, and then the dip kept on dipping, and I didn't like that.
No, it's not good when the dip keeps on dipping.
Like when
you're playing for a different direction. No, you are 100% correct there. Yeah. Well, good job out of the market. Good job out of you. I think we can. I missed him, and I didn't know if we were going to be able to celebrate Monday without Dr. Jim because nothing says Monday like Dr. Jim. He had a little scratchy throat.
He's
been out for 16 days.
This is the holiday before the holiday.
This is the holiday before the holiday?
Doctor.
Awesome. All right, well, let's take a quick 90-second break and come back. We got more Tasty Live, immediately following these messages. And then we got the skinny on options, abstract applications with Dr. Jim next. Nothing says Monday like that, man. You're going to stay tuned. Finally celebrate Monday.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade. All right, so the X date on a stock, what does that mean?
The X date for a stock refers to the X dividend date, which refers to the dividend of that stock. So if you have a short in the money call and the extrinsic value is less than the implied dividend, then you would be at heightened assignment risk. So the X dividend date is something you want to make sure that you are aware of so that you can either roll or close that position to avoid that extra assignment risk. What does it mean when you hear the term pin risk?
So pin risk refers to options that are usually on a round number and the risk of a pin at the end of the day or the end of the expiration for that underlying. So this typically is applied to SPX or very liquid underlyings that have monthly or weekly expirations where the stock price or the ETF price or the index price is right at an even number where a lot of volume and open interest is.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Nicky, we are back, son, and you know what that means? Well, nothing says Monday like this, man. I'm talking about Dr. Jim. How are you, my friend? Back from sick leave.
Normally I'm in the middle. Y'all got me on the side, like you're about to just kind of push me out of the
You're
program.
on
Like,
you're
I'm
on the
not
outs.
gonna
You're not worthy
I'm
of the
on
middle
the
right now.
outskirts of town, man. Like I'm not a regular day-to-day citizen. Like I'm just passing through. Apparently, okay.
You got to prove yourself.
Oh, I'm back.
There
to
you
the
go.
center,
There
man.
we
Look
go.
at
That's
that
better. There you
production
go.
team. Man, look at that. That's
Bat
unbelievable.
sandwich right there.
And
They are
that's
amazing.
100% right. That's
Yes.
100% right. And so fence is almost done, guys. Like we're almost there. We can see the finish line, you know?
Now wait a minute. You started this fence when?
I mean,
3
I
years
didn't-
ago.
I didn't do
3 years
anything.
ago is when it started.
No. My fence guy started this fence last Monday. It's just one guy. He's doing the whole thing himself.
Cutting costs. I mean, that's a much better return. Take a little longer.
I mean, he
Did
had
he
to
have to
get
just
rid of the
billable
whole.
hours.
How many posts did he put in?
Well, see that's the tricky part, and this was my question for you, right? So he did. He maybe did 8 or 10 new posts, but so here was my question. Yeah.
He dug 8 or 10 holes.
They're like 3-foot holes usually, right? 2-foot holes.
So wait, are you saying that's too much or too little?
That should have been at best a day job. I mean,
A day to do all 8? You mean, or
And
to
you got to
do
do
one?
the concrete.
To do all 8. 1 to 2?
But that's not all.
With one guy?
Tony, that's not all he did.
No.
That's not. And he had to go to the dump. I mean, he had to. You know, he had to take plenty of breaks. Like, I got to take care of my guy, man. I got to 100% take care of my guy.
You know what? This shows what kind of supreme leader you are. You're out there cracking the whip. 8. I need 10. I need 15.
Yeah, I know,
like the guy's
like
sweating. It's in
all right.
He's in his 50s.
Yeah,
he's working his tail off.
Oh my God.
And Tony's like, 8. I need 19.
Yeah, what are you, slacking?
Wait a minute, he demos it one day. He digs the holes another day. Maybe he puts in the cement on the third day, right? And it's got to set.
Yep.
He finishes it by the end of the week.
Yeah, but he's working half days and stuff. Because I told him, I was like, hey, man, he's a friend of mine. And he's actually extremely conscientious.
Okay, so if that's your question, you never hire a friend.
Chat's with you, too.
No, well,
the
he's not
YouTube
that
chat
kind
saying
of friend.
20's got to be the minimum.
Like, he's not on the inner circle like the Batistas are. Like, the Batistas and the Schultzes, man, like, we're like this. He's not like that.
Yeah.
Right? And so he's a couple levels, a couple degrees away from that. But here's my question for you.
Okay.
So to help, like, cut down costs and save whatever, like, he kept, like, the posts that were still good from before.
To reuse them?
Yes. So now, so here's the tricky part. He's hung some.
Were they in
some
cement? Were they in
panels.
cement? I'm going way too deep for this. This is. Were they
Yeah,
in
you're
cement
really-
to begin with?
Tony, wait. No, Nick, I told you. Nick, I told you before we went on air.
You did.
You think selling premium is complicated, bro? Wait till you get a new fence.
Wait a minute.
Like, this
I've
is
never
complicated stuff.
seen somebody use the post again building a fence. But I have to ask you: Did
Well, he just
were your
wanted
old
to-
post set in cement?
Yeah. So he broke it up. Well, no. Actually, no. I take that back. The old ones he didn't break up because he didn't have to. No. The ones he replaced, he broke up. He didn't have to re-break them up. And keep in mind, I have no idea what I'm talking about, so I might be completely misrepresenting everything he's done. But it looks phenomenal. But can I get to my question for you?
Sure.
Can I
Please
get
do.
So here's my question. So here's my question for you. So he's done a great job, but because
Sounds
it's kind of
like
a
it.
mix. Because it's kind of a mixture of like new posts and old posts at times, if you stand on the fence line and you look down, it's not perfectly straight. You got a little bit of these jobs, right? And so my question to you is, would you have them like re-break up the cement and hang the panels like with new posts? Or would you just say, because when you're looking at it like from like the house, you can't tell. You got to be standing on the back line of the property, and I'm honestly, it's a little bit of a bow.
Before I answer this question, I would like to ask you one
It's
question.
not more than 6 feet.
Can I ask you one question before I answer
Sure.
this question? Did you get multiple bids on this project?
No, I wanted to help my man out. I wanted to help him out. I'm a man of the people, Tony Batista. I help my people out.
I think you get what you get, and you don't have regret. And I think you just leave it the way it is. And if I was you, I wouldn't mess it up any more than you already have.
No, he's he's honestly doing an amazing job, and I want to help
Sounds
him
like
out.
it.
He's between
Please don't give him
jobs
my
and so-
address.
Yeah, because you're only a couple hours away. Yeah,
Please
yeah,
don't give him my address, for the love of God.
Well, I mean, just know that next year when the hurricanes hit, like, I got a guy. Like, don't you worry about it. I'm gonna take care of you. Hey, guys, forget about the fence, man. Speaking of taking care of us, how about our Bears?
I was waiting.
What do you guys think
Go to
about
Super
our
Bowl,
Bears?
baby. Go to the Super Bowl.
Man, I'm
Best
just saying,
quarterback
I
alive.
tried to-
Love that kid.
I'm just saying, you guys were doubting him in the preseason. I tried to tell you guys, I'm like, this team looks good. They look really good.
Are you on the Bears bandwagon now?
Now he is, yes.
I've been on. No, it's not. Guys, go back and check the tapes. Watch the shows from August. You will see. I was wearing my Caleb Williams jersey. I had my Jim McMahon jersey. I brought the Fridge Perry jersey out of retirement. Like, I'm all in, man. I'm all in.
Well, I was not, and I have egg on my face because they are the cardiac kids or whatever we're going to call them now. But the game has changed, and I mean, listen, if you can kick the ball out of bounds on a kickoff and get it at the 40, no lead is safe in the fourth.
No, I agree.
quarter anymore with the rule changes.
I
Anyway.
agree. So what do you guys think? You guys think we chop around in this market until we get some NVIDIA earnings on Wednesday? What do you guys think?
Probably. And volatility might stay a little bit bid here too. So yeah, I think this 20 vol is pretty good. Looking
This
for
was a nice little reversal, though. I mean,
yeah.
this is helping
Everything
the kids.
you could ask for. You still got the Russell and the
Reversal
Dow.
up or reversal down?
Both.
Yeah, both sides.
Yeah.
Yeah,
And we've had a lot of two-sided trade over the last couple weeks. It's been good for buyers, sellers, in betweens. I mean, it's been perfect.
Yep. Totally agree.
The YouTube chat, the peeps would like to tell you that for your next thing, you got to get 3 bids. That's the magic number. You go in the middle. You got to get at least 3 bids.
Yeah, I mean, normally I would do that, but I'm helping a guy out, man. It's not about bids. He can bill me whatever he wants to bill me. I don't even care. Like, if he wants to break the concrete up and do it all over again, it's fine with me.
I'm just telling you what my peeps are telling. You know, they're looking out for you. They say, Jim, do 3 next time.
Yeah, okay, all right. Tony doesn't like this. He doesn't like this at all. Okay. All right, well, let's do something we do like. You guys want to do some finance today?
Sure.
Man, let's do it. Let's talk about, so Beth, go ahead can we talk a little bit about convexity in a 0 DTE world?
Okay.
Guys, this is the world that we live in, right? The world that we live in.
Buy calls,
it's a
buy
0
puts.
DTE world.
Trade once, trade huge.
That's it. That's the only way to do it, man. Like, I saw you say that jokingly, man, but I saw you. What were you doing, like a 1x4 in Oklo or something?
1x3.
Something.
1x3
Yeah,
in BE.
you had
BE.
about, oh yeah, no, you had about 10, 12 grand of risk for about what, $80? That's how you do it.
Well,
baby.
that's an homage to the previous regime. I do.
No, not for about $80. It's a $20 embedded long call spread.
Yeah, but you're naked 2 on the outside.
Yes.
Sure,
yes.
yeah,
You
we
got-
can get.
Yes.
You got some risk there. But
definitely have
the
some risk.
diagonal spreads are a mild convexity to them. There's a little bit of gamma to them, which is nice to have.
Now, are you going to talk about convexity with bonds or with calls and puts and? Oh, okay.
No, I'm not going to talk about convexity with bonds. We're going to talk
Okay.
about convexity with options. Yeah.
Okay.
And so,
0
DT.
Come
Yeah, I see 0 day. Yep. I'm sorry. I didn't read on. I apologize.
And it's I think this because so many people. I mean, 0 DT. It's taken, isn't it? I think it's actually. Is it now most volume is 0 DTE now? Is that accurate?
Yes, it is. Yep.
Man.
Yep.
Tony, did you ever think you'd see the day? Like back in the pits, right? I mean,
I think I would have prayed for it when I was in the pits. I didn't think it. Remember, we had quarterly.
Really? You would want that much action?
Yeah. Expiration day, I made my nut.
No, I know, but that's once a quarter.
Once a quarter. Well, if I could do it once a quarter, then I want to do it every day. If I'm making my monthly nut in a day on average, I want to have it every day. I mean, yeah. I would have prayed for it. As a retail investor, a little bit different. I don't, I like it as a vehicle, but I like it.
So you like it? So you like it as a compliment, right?
I do. I like having the option. Just like
pun
anything
intended.
else. Yep. Yes. No pun intended.
All right, beautiful. Okay. Yeah. Well, we're going to talk about that today. Okay, great. All right, Beth, go ahead and hit us on the intro slide here. So, in today's world, 0 DT options have certainly taken the market by storm, oftentimes accounting for large chunks of the total daily trading volume. And as we just said, most of the daily trading volume. And as premium sellers, we know just how powerful and painful sometimes being on the wrong side of a convex relationship can feel. But with these two ideas combined together, there are some special aspects to this relationship that command our attention. And so again, you have two separate kind of, phenomena that we need to kind of address. You've got the 0 DTE world, and then you've got this convexity relationship that certainly is a very big player when it comes to something like bonds. It's a big player when it comes to something like options with gamma and expiration and things like that. But because you have the 0 DTE options where every day is expiration day, like Tony was hoping for and wishing for back in the pits, we need to be very aware of what we're kind of walking into and be very alert as to the gotchas that are hiding right around the corner, which is kind of similar to when you bring your friend in to do your fence. It's like, okay, you might have a little bow. You might have a little wiggle and wobble, and that's just the way it's going to be.
Okay,
right,
now by friend to do the fence, like you knew this person prior to this?
Again, I told you, he's not like a Batista Schultz connection.
Okay,
he's a couple of degrees away from that.
And
right, and so
and you get what you get. Go ahead.
There you go. Okay, so next slide. I'm pretty confident he's doing a much better job than any Batista would do. I will say that. I got to give my man his props. right? Tony, I know you restarted my car when it died on
I
me,
did.
but, you know, behind the thing. I know that. And I'm not saying you're obviously, you're a
That's all right. Out of
Renaissance
sight, out of mind. I get it, Dr. Jim. It's all right.
That's it. That's it. And so, okay, so what is convexity? Okay, so convexity has its roots in mathematics, and it solely refers to the shape of the curve of the metric that you're looking at. So you want to know, like when you move along the x-axis, how is the value of fill in the blank, whatever you're looking at, how is that going to change, right? And a convex relationship always kind of follows the same path. There's going to be an exponential growth in that value. There's going to be an exponential growth in that variable. And so that's why we have to be keenly aware of what's going on in a zero DTE world, because the variable in question is gamma itself, which is kind of interesting, right? Like if you think about selling premium at 45 days, getting out at 21 days or thereabouts, right? Those are kind of the reference points. That's all kind of built and construed to avoid gamma risk. Well, then you walk into a zero DT world and you are actually voluntarily stepping in, as we're going to see on the next slide, to the maximum point of convexity, the maximum point of gamma exposure. Do you guys find that to be a little interesting?
It's a double-edged sword.
Yeah, it's a better way of answering.
I mean, it's opportunity, but it's also a lot of risk, and I think that's...
As a wise man once said, every gimme has a gotcha.
Exactly.
And I don't know who said that, but man, it's a catchy jingle, and it just stays with you. You know, like you can't get away from it. Like you think you can, and it just finds you.
It's so applicable. You can use it in so many different ways.
Yes,
Great
you can.
jingle.
Yeah, you can.
Yeah, exactly. You know, you hire a friend, you help them out, but then the next thing you know, your fence isn't that straight. It's just the way that it goes. You look at gamma over time. So here you go. So if we look at gamma over time, so generally speaking, if you look at like, you know, on the x-axis I have time, on the y-axis we have gamma here. If you look at like 35 days to go, like if I'm looking at an option, 35, 45 will be very similar. You're going to see that where you're at on the gamma curve, it's not really changing that much from day to day. There's a slight little uptick. Like there's a tiny little increase from one day to the next, but you're not walking into the lion's den. Like you're not walking into a situation where your directional exposure, because remember, gamma is second derivative of the Black-Scholes model. It essentially shows you how delta is changing. So delta is directional bias. Well, gamma is the acceleration of that directional bias. So it is another measure of directional bias in and of itself. 35 days to go, 40 days to go, what have you, not much of a change from one day to the next. Okay, fast forward all the way to 10 days to go. Now you can see it's typically in those final couple of weeks when the gamma really starts to pick up steam. So now all of a sudden, and again, this has nothing to do with the underlying stock movement. I mean, that can impact gamma, of course. This has nothing to do with any metric other than time passing by. No metric change other than you're getting closer and closer to expiration. And then, of course, if you go to the very end, right, at expiration, at point equals E, which again, this is what every zero DT option is by definition, you are at the tippity top. You are at the maximum point of convexity with that position. And so on the next slide, don't go there yet, Beth. On the next slide, I've got a couple of things to consider and think about. But before I give you two the answers, because I know that the Batistas, you guys are kind of used to like just having the answers given to you. I'm very curious.
Well, no, you look over the shoulder.
Or my neighbor has them.
Sit next to the person that has the answer. They don't give you the answers directly. You sit next to them.
You have to threaten them.
Yeah, you protect them, and then you sit next to them. So you can see the answer.
Yeah, you guys know how to get the answers. You guys know how to acquire the answers.
Yes.
Okay. What do you guys think? So what is the solution? So knowing this, because obviously you guys know this, you guys have been trading zero DT for a long, long time, and obviously Tony back in the pits and convexity or whatever. So what do we do? How do we handle this?
Oof. Not well usually.
Define risk.
Yeah.
And that's really the only way you can do it.
Size is really the way that I would look to do this. Matter of fact, I'm having a conversation with somebody right now about, futures and future sizing, how big. I know it doesn't have it here with gamma, but when I'm saying go to the option side, like if you're trading futures and the micros are still too big for the move that they've been having, and some of these futures have been having some huge moves, maybe go to the option side. Maybe go to the weekly options with defined risk, putting on something a little bit smaller in there, giving yourself a little bit time to be right. I think the only way you can get over gamma risk is by getting smaller, and whatever smaller means, whether it's the big futures to meaning the mini futures, to the micro futures, to the options, not naked options, spreads, which you can use less buying power on, maybe going shorter in time to give yourself more of a future-like movement, because that's what they're looking at. But for your question, I really think it just comes down to size.
And SPX is another good angle to go, because your gamma, it ends at the end of the day, the end of the session. So everything's cash settled. So if you're defined risk and you know that position, the short option is going to have a lot of gamma at the money, and if it goes in the money, that gamma it settles at the end of the day. So the next day you don't have that same delta exposure. It's using those products and the availability of those products in itself kind of takes some of that gamma out of the equation, which is positive for you, I think, if you are on the short side of that trade.
So taking the gamma out of the exposure, you mean by defining the risk? Because the product is not really going to, whether I do SPX or it's anything else in a zero DT world, SPX is cash settled at 4 o'clock or 3 o'clock central, whatever. So that's going to be different from like something that's not cash settled. You still have the after hours market. Like, I understand that.
Yes.
But at the end of the day, whether it's 4 o'clock, 8 o'clock, and I know that can be a big difference, but still, you're not carrying any exposure to the next day, because that's not a zero DT option, right?
Well, yeah, but if you're trading like SPY, where your options settle to the actual stock, so your gamma exposure moves on to the next day. If you're in the money, like you have that. So like with SPX or XSP, the fact that it's cash settled, it kind of in itself mitigates some of the continued risk. It does mitigate the continued risk.
Yeah, because it's over. It's expiration.
Yeah, your gamma is realized on the position, but it ends that day, which is, I think, what people like about these products is that, it's...
You're not left with anything else to manage.
You don't have any overnight risk. There's no news that can hurt you in the no tweets, no, whatever that can, it ends. And I think that kind of, that's why I think people really gravitate toward these in general.
I think that's actually a really good point, because, if you think about SPX versus SPY, right? With SPX being cash settled, it's like, okay, if I'm going to manage this in the last 10 minutes of the day, then it's not really going to matter either way. But if I'm not, and I want to kind of, because obviously, as everyone in this conversation knows and everybody watching knows, the last 10 minutes of the day, a lot can change, a lot can happen.
Yeah.
So you may need those 10 minutes. You may want those 10 minutes. But if you're in SPY, you're exactly right. Now, all of a sudden, it's like, okay, it is truly gimmies and gotchas now. I'm going for that last move to push me over the finish line, whatever. Well, the gotcha that comes along with that is that, 4 o'clock or 3 o'clock central, when it dings, you got something in the money. Now it settles to SPY. Now you've got some overnight risk. Now you've got whatever else that you have to deal with. Whereas SPX, you don't have to worry about that.
That 10 minutes has a way different risk between SPX and SPY, and that's why you see in a lot of single name equities. I talk about like the Robinhood week, where it was like on the borderline of being included in the S&P 500, and the options actually held extrinsic value into the close, even though you couldn't trade the options outright. But people were looking at them and like, why is this option $10 out of the money marked at $1? Like, why don't I sell that with 10 cents to go? And that's because there's a risk that you have not only into that last 30 minutes, but into tomorrow if something does happen. And so I think that aspect of SPX is why it's so attractive to people, is that it ends and it's over, and next day you reset despite what your gamma exposure is. And on the flip side of that, it's why you have to really look at the Greeks of your portfolio as a whole if you're trading a lot of 0-day stuff, because your day-to-day Greeks are going to vary massively.
Sure.
And that's because of that short-term, hourly exposure that you have in these trades.
That's a really, really good point. And another thing too, you look at the spreads in the last 10 minutes, like it may be marking at $1, but it's like, which is surprising in its own right. But then you look at the spread, It's 75 cents, $1.25. I mean, the spreads are just super wide. I mean, SPX, that may be normal. But the point I'm trying to make is it's much wider than it normally is. Right? I mean, Tony, I'm sure you did this in the pits, right? You get towards the end of the day and everybody's still got to, they got to get out or whatever. I mean, you're talking about making your nut. It's like the last 20, 30 minutes, right? I mean, honestly, they're going to widen out, right?
Yeah, and there was a lot of gamma risk. Options go from being worth nothing to being worth something on a tick or two movement in the product. So you have it, to your point, Nick, it does go away because expiration is over and it's done. You don't have a carry-on position. And to your point, Dr. Jim, you get the most gamma risk intraday when you're right at that strike.
Yeah.
So, it's a double-edged sword to go back to what, and welcome to a trader's market, by the way. We're now unchanged on everything.
Awesome.
So.
There you go. All right, so Beth, hit us on the next slide. So here are a couple of thoughts I have for everybody. The game is in the gotchas, of course, right? So as a result, zero DT strategy, we're engaging with an option at its points of maximum price convexity. So what are some things we need to remember? Well, remember that long options have positive gamma, short options have negative gamma, which again, for us, that's second nature. And for people that have been trading a while, that's very, just kind of hat in hand. But for somebody that's just getting started, like this could be brand new to you. And just understand that, the path that you follow through the forest from this point, radically different, positive gamma versus negative gamma in this specific context. So if I'm long options, it could be a naked long, it could be a spread. Obviously spreads are going to be a lot different because you have the offsetting leg that's covering the original Greek exposure from kind of the main driver of the strategy. But still, with long options, it's probably simpler to look at this from a naked standpoint. You have limited losses with the potential for unlimited gains. I mean, this has been the attractiveness of long options from the very beginning, right? Obviously, I know the most I can lose, the most I can make is theoretically unlimited. That's obviously very appealing. It's very attractive. So there's an asymmetric risk-return relationship that works in your favor. So convexity causing any rapid gamma expansion as a stock moves is desirable. You don't want to shy away from that. You want that because again, you're like, I know the most I can lose here is $500, $300, $1,000, whatever. But man, if I get this move right because of whatever reason, like this could really, turn into a nice payday for me. Flip that over onto the other side. Short options, negative gamma. Now everything is turned over. Limited gains, unlimited losses, right? The same asymmetric relationship, but now it's working against you. And so now the convexity causing rapid gamma expansion as the stock moves is not desirable. It's obviously going to be very undesirable. And so what do? I mean, I think SPX versus SPY is a great suggestion. Obviously, I think size is a great suggestion. I think defined risk is a great suggestion. I'm going to go one step further, and I'm going to say, generally speaking, when it comes to zero DT options, man, I am much more comfortable playing the long side than playing the short side. And I think the reason why is because of a lot of things you see on here. And again, it's because think about what we normally do. Like what we normally do in a 45 out of 21, that's avoiding gamma risk. So when I'm in that type of world, I'm not super interested in buying options. Obviously diagonals and spreads is different. I'm talking about like naked options, right? I'm not super interested in doing that because I feel like so many things are working against me. But you put me at the very end, you put me at the finish line, it's such a different ball game that I think the long options are potentially more appealing than the short options. And of course you can do spreads and things like that, but it's hard to get paid on those spreads too, because there's no time in the strategy.
Yeah, that's fair. I mean, you have the limited risk, and that's the key here is that you don't have the, it's hard to sell something for 25 cents and take, $5 of risk.
I mean, you did it with Oklo. So I don't know,
that's
man. You're
true.
the guy
That's
we should
true.
be talking to.
That's true.
Well played, Dr. Jim. Well played.
I'm just saying, like, I was taking notes, man. Every morning I watch Opening Bell, I take notes. And I'm like, all right, the most important takeaway today, risk 10,000 to make $80. You got it.
No. That's not my game. That's not my game.
I tease.
No.
I'm just excited about the fence. I'm excited about our Bears. I'm excited about the fence. I mean, he might get the gates up today, guys. So we might get the gates up. I mean, that's probably going to be a 2-day job. So, I mean, it may not be today.
Did he dig these holes by? I'll let you get to your takeaways first, and then I got a few more questions to ask you. And
you
some
still
comments.
haven't answered my question of should I have him redig up the concrete and straighten
please,
out those?
baby Jesus, just have him go away.
I can't. It's not done. It's not done.
Oh my God.
My neighbor.
Sometimes
is so
you can't
excited.
afford. Sometimes you can't afford the discounted price, Dr. Jim.
I learned that from you, man. You can't afford free.
That's right.
Yeah, and this isn't even free. It's costing me a significant amount of money.
Yeah.
So zero DTE strategies are a great complement to your short premium portfolio, but it's important to remain aware of the very large convexity risk that these options naturally possess, and to also remember that it's still really hard to beat the tried, true, and tested entry points at 45 days to go. And of course, I mean, zero DTEs as a complement, I think it makes a lot of sense. As a foundation, I don't think I'm sold on it just yet. But go ahead, Tony. What do you got for me?
I just have a quick question. Did he use a fence hole digger, or did he just dig them by hand
with a shovel? With
a post hole digger. Did he have something that was run by gas? Just drills a hole down.
No.
He was just doing a post hole two-handed thing where he kind of just
it in. It's shovel. He didn't even have the. Yeah.
Shovel. Okay.
Shovel in hands.
Okay. Are you dating this guy?
I happily married 16 and a half, 16 years. I don't know.
A lot of years.
Not. Okay. All right.
Yeah.
Does he stay for dinner or anything like that?
He's a good guy, man. He's a good guy. Like we get along with him and his wife very, very well. And so he's a good dude, man. He's doing a phenomenal job.
Sounds like you're real happy.
Very happy. Couldn't be happier. Yeah.
I'm going to take a quick 90-second break. I'm going to let Dr. Jim go. Even the S&Ps, you turn them red, Dr. Jim. What are you going to do when you leave? Are you going to turn them green?
What am I going to do?
Yeah.
I'm going to go oversee the fence work, man. He can't be left alone.
That's a problem. We're going to be back in 90 seconds. We got more Tasty Live and a market measure next. Good job out of you.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
are back, son. You made some nice scalps in the NASDAQ futures there just a moment ago. A little 2-minute scalp for about 50 handles or so. You got E-mini S&Ps basically unchanged. NASDAQ up 44. Expected move in the E-mini S&Ps is around 36, down from around 42. You think about a 0 day since you closed an AVGO trade that used a little bit of buying power. PLTR used a little bit of buying power. What do you think about a 0 day? You just asked me on the break, is the day over? If you think the day is over, at least for the short period of time.
No, not the day over. Is the sell-off over? Have we capitulated? Have we hit the bottom? I mean, we had a little bit of on Friday last week, you had kind of the washout to the downside, and kind of basically flat. I mean, they were down a little bit. And today you've had kind of the sell-off, scare the children, pop some vol a little bit, and now you got vol basically unchanged here. It was lower a moment ago when we were rallying. You get kind of a little bit of a continuation to the downside, and then they bounce right back up. I feel like it's over. That's what I meant to say. Like, does it feel like the sell-off is over? Not the day.
I don't know. I think we just chop around. I think you have the highs and lows already in. What's that?
Got too much in the middle of this week to really go.
Yeah.
The market's not going to decide where it's going until we get those two things out.
Yeah. Agreed. E-mini S&P's up $1.50. What else? You got Home Depot for earnings we can take a look at later, and we've got Baidu. But right now,
are we doing you want to do our SPX?
I do. I would like to. I threw that out there to you, but you didn't say anything. So
what do you want to do? 20-ish delta? Let's lean.
Yeah, to your way. You can lean it a little bit if you're thinking that we have a little bit of an upside bias. I don't hate it. I don't see it, but I don't hate it.
66.95, 66.80. So it's 15 points wide.
Okay.
67.75, 67.90.
Yeah, that gives you a little bit of upside bias, right?
Yeah,
I mean, it is a short delta, but you're further away on the call side. It looks like trade around 460.
Yeah.
Maybe a little bit less than that.
Yeah.
Going around 450 and see if you get filled.
I've been trying 460.
No, 460. You're gonna have to go in around 450-ish.
Yeah.
And if we uptick a little bit here, you're gonna not get filled. Get filled at 445. Very good.
And I'll put in a GTC to close this. That's, what do you think? Like $80?
Sure.
You want to take $90? $100? What are you thinking?
Yeah, your $80 is good.
I mean, that's kind of been how I've liked to trade these. Are just
every time we've put them on, they've gone against us for about 40 cents or so.
Yeah, that's not a shock, though. I mean, most trades on a 0 day, you're going to have two-sided action.
Yeah. I'm just saying, like, you don't miss anything.
No.
In these trades, they're there for you typically all the time.
Yes.
All right, good job out of you. Let's get to a market. Go ahead.
Yeah, let's do that. The Palantir was a strangle from last week. It took $100 out of that. That was like 20% of the max profit. But again, some of these things are moving quickly. Like if you're taking advantage of volatility when it pops a little bit higher, you're putting some premium on. I mean, I was even looking at an SMH strangle that I put on in the middle of last week that's come in like 70, 80 cents. I mean, that's a 10% move in
big
premium. It's like you don't usually get that in 2 or 3 days. Usually 2 or 3 days, it's 10, 20 cents in one direction. It's not usually 80, 90 cents in your favor on a sideways move.
I totally agree. Totally agree. Take it and run like a thief in the night.
Yes. And then AVGO was a diagonal spread. Nice little bounce in there today.
Very nice. Very nice.
Do we buy NASDAQ again?
If you're going to be very nimble with it, sure. Seems like it's a very nimble type
we're
trade.
doing MNQ. We're doing little little engagement trades here.
Yep. Bottom at 95.
Yeah, I kind of like it 25 to 2500. 25-100 has been a good spot.
That's where we've been hanging out.
Yep.
Very nice. Good job out of you. Market
price is noise. Oh. Not quite.
Not quite?
15 ticks real
Yeah, you almost had 20 handles on it. I was just about to say it, then we sold off a little bit. You can put an offer in if you want to do it while you're watching the show.
Put it take 25 to get there. 120. I did this at what?
Oh, now
90,
you
95?
changed it. I'm just kidding you.
Oh, I know. That's what I don't like putting. I'm not a big. I mean, the SPX trades, I like having the GTC to close.
You have both sides. It's more of just a time play than anything else. This is a directional play.
Yeah, this one I don't like because if you get that spike up and you miss 100 points.
Yeah, right. Well, you can also get a move up and then a spike lower by 100 points, and then you love your stop order that you put in there. Right. And you're just putting a stop profit, not a stop loss here.
Not a stop loss. Yep. We'll add more if we get.
Mm-hmm. Got it.
Price is noise. IV is the signal.
Let's do it.
We're going to be exploring various investment options. Often leads to the belief that certain products offer superior returns compared to others. What do you think is the best product, the paycheck product?
Oof.
That was a joke. There's no such thing. I mean, like,
between I like SPY better than IWM, but I think IWM typically has higher implied volatility.
You got to be nimble. You got to vary your strategies, and there's no simple thing that you can do. Just that's it, and never look at it.
No, totally agree.
Like you always got to have.
Totally agree. Mm-hmm.
So we're gonna be focusing on IWM and SPY here. So we're gonna look at two ETFs, obviously SPY and IWM. Despite moving in similar price direction, these ETFs have distinct underlying prices, IVs, and components. And so we're going to kind of compare these two, trading these two, and look at the big differences between them. Do you think they trade similarly from a strangle perspective or implied volatility? Obviously, you have IWM, which is a little bit higher vol than SPY, but do you think like the trade metrics and numbers kind of work out?
They're going to be very similar, in my opinion.
For sure.
Very similar.
Beyond similar price movements, is there an advantage of trading one product over the other? In order to test this fairly, we have to keep many variables constant, and this involves normalizing through the use of IV adjusted notional value for our options. So we're going to take the options, we're going to adjust the options based on the implied volatility, so we're weighting them together. When you're doing like a pairs trade, a lot of times people want to IV adjust pairs trade, which basically looks at the risk of each product as a component in the weighting of those trades. So that's kind of what we're doing here. And doing this gives us a fair comparison of the returns and the risk between two products and strategy, because it's way different trading NVIDIA versus Coca-Cola, or if you have two, similar stocks where one has 50% implied volatility and one has 10% implied volatility, you're getting paid a lot differently to take risk in those products. And so you got to kind of weight those together. That's what we're going to do here. So the study, 2020 to present, so we're looking at 5 years of data here. We're going to sell the 16 Delta Strangle in both IWM and SPY. We're doing this on our typical time frame, 45 days in both, and manage at 21 days. The things that we recorded and that we're going to be looking at are win rate, average P&L, volatility of the ending P&L, which I think is a very overlooked part of a back test. A lot of people just look at the dollar and say, oh, well, this one's better than this one because you made more money. Well, you got to look at like the volatility of the P&L and how big those swings are, because that's going to tell you if you can actually hold that position and stay in it. We're going to look at CVAR, which is our covariance of risk. That looks at the 5%, basically the tail risk of those positions. The realized tail risk. Average premium per trade, we're going to look at the premium to buying power. We're going to look at the max loss and the ratio of each. We're looking at them IWM versus SPY. Is there anything we missed?
No.
I think we got it all, right?
I think they got it all. And this next slide is going to be very telling because it probably has a lot of information on it.
Yes, we got a couple really good slides coming up. So next slide here. For the study, we consider 2 theoretical contracts in IWM and 1 contract in SPY. So we're looking at, like you're weighting these to be 2 contracts. It's
look at you, a nice little scalpy.
Okay, we like that.
Yeah, very nice.
Nice little morning here. So the reason for selling 2 contracts in IWM versus 1 contract in SPY is because the IV adjusted notional value of SPY strangles is 2 times that of IWM. And so this is not only, IWM right now, what are we trading at?
IWM?
About 236. And when you look at SPY, is 670. So if you were just looking at notionals,
it's almost 3 to 1.
It would be almost 3 to 1.
Yeah.
But IWM, when you look at SPY, so SPY implied volatility is about 20%. IWM
30 something.
Has about 27 to 30-ish. So you have almost a 30% more implied volatility in IWM versus SPY. That's why we do this calculation. And here is the math for you, as we just kind of discussed here. IV adjusted notional value for both these products, it gives you a ratio of about 2. And there's the calculation that you can use of the underlying times 100 times the implied volatility. That's how you put them together and make them equal. So both these are equal to each other. For the next slides that we will have your graphs and charts and lots of things.
Look at this, 71 to 72.
Yes. So the first thing you'll notice is that the win rate between these two, when you adjust them to their IV notionals, is basically the same. They're nearly identical here. This suggests that the deltas are priced efficiently across these different products. I mean, we talk about this all the time of like markets are efficient. Here you go, is two, market indices with different volatilities that, are kind of similar because they're ETFs or baskets of stocks. When you adjust everything to make them the same sort of denominator, everything turns out the same. I use in my live events, I talked about how, we get caught up in the ticker, like the AMD versus Micron.
Sure.
The Microsoft versus Apple. If they have the same implied volatility and they're the same price underlying, you're getting paid to take the same risk, regardless of your own personal thoughts about the ticker versus the other ticker. It doesn't matter. It's all priced in when you're looking at implied volatility.
This is what we mean when we say they're perfectly priced. Like there's no advantage one over the other. Now you could get implied volatility spikes and contractions in one product or the other, but they're perfectly priced. If you've got a volatility expansion, there's a reason for it. And if you got a contraction, there's a reason for it. And look at you dipping back into the NASDAQ.
That's the spot.
You're just playing, you're just trading them. Yeah. Good job out of you.
Playing that spot. We'll see what happens.
Understood.
Next slide here. The charts. Look at this. This one hurts. This one's tough for you. I know this takes a little moment to digest. There's a lot.
There's a lot to see here. This is the one I thought we were going to see a moment ago. So here we go.
So the takeaways here, when you're considering each, it's clear that IWM offers higher premiums, but with much greater volatility. Shocker, right? When you have higher volatility, you're going to have more premium in those underlyings. With deeper losses, while SPY is more stable with similar win rates, but on the next slide, the ratio to show the real risk reward with these historical figures. So you can see, a lot of these metrics are not hugely different, but when you're looking at higher implied volatility, you're going to have wider ranges of P&L distribution, and you can get paid more to take the risk, and that's kind of what you're looking at in all these slides.
Very good. You should put your offer in again for your NASDAQ.
Well, what do you want to put it at?
Probably like 105.
105.
You're right there.
You got hands, right?
Well, I mean, I do, but
oh my God,
look at you. I mean, you're allowed to take a minute and a half scalp for 25, 30 handles. You're allowed to do it.
Next one here.
Nothing wrong with that.
No high fives. The ratio of risk reward for these strategies is unsurprisingly comparable. So when you adjust everything to implied volatility and you put them in the same bucket, it doesn't matter if it's IWM or SPY. If they had the same exact implied volatility and the same price, you're going to have the same sort of results out of these figures. The actual historical figures align remarkably well. So this is when you're taking the ratio of IWM over SPY in the last 5 years, and your IV adjusted, you're adjusting to the implied volatility. They basically have the same sort of metrics, and when you put these together, they're basically simpatico.
They're basically identical.
Couple takeaways here. Risk reward is efficiently priced in liquid underlyings to attain a comparable risk reward ratio between SPY and IWM, and you can use this just like when we were talking about Microsoft and Apple. You could do the same sort of of analysis on both these products. If you're trying to, do some sort of pairs trade, NASDAQ up 40.
NASDAQ up 38 right now. I can't believe you sold them at 05 all year.
So you may want to opt to trade 6 IWM strangles for every 3 SPY strangles. And the good thing about ETFs, and especially big market ETFs like these two, is that the ratio isn't going to change all that much. I mean, this is kind of, if you're thinking about this in the future, or if you're watching this in the future when we archive this, I imagine this ratio stays pretty similar.
I would imagine
across the board. That might be an interesting follow-up to this, is to see how wide this ratio has ever been.
Yeah, it's a good idea.
Beyond price movements, the product's implied volatility is another good indicator of the level of risk reward you will incur. There is no arbitrage available, as there is in basically all markets. The arb is all but zero. For a product with higher returns, your risk is matched almost 1-to-1. If you want more returns, you have to take more risk. No free money.
That's why people always ask, what can I expect to make or risk when I put on these trades? And I always say, well, what are you trading? What type of strategy are you trading? What's the implied volatility? I don't know. How much do you know? I want to make X. Well, how much risk do you want to take? I mean, if you want to take the risk, you can do that. If you don't want to take the risk, you can't do that. You got to lower your expectations. And that's really what they're saying here. There's no arbitrage available, if you can believe that. Good job out of you. Good job out of the team. Even the S&Ps are up 5, NASDAQ up 52. Taking a look at your SPX trade, it's moved by about 30, 35 cents. Volatility's really kind of stayed bid here. It's basically unchanged. Russell's down 4, and the Dow is up 2 or 3. Volatility now completely unchanged. Bonds are up 4. Bitcoin's only up 300 and change. Oil's basically unchanged. Gold's been weak all morning, down 20. The euro is down small. The yen is down small. It really is kind of a scalper's choppy market here with no direction. What's that? Your SPX trade?
It hasn't really moved.
No, that's what I'm saying. It's around $4.25 or so. Really, it's only moved about 20 cents, signaling that volatility is kind of staying bid in this choppy market. Let's take a quick 90-second break and come back. We've got my boy Q coming in here. Maybe we'll take phone calls. Maybe we'll do a earnings trade. We'll see. We'll be back in 90 seconds. It's Tasty Live.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
Delta, Vega, Gamma, Theta. It's all Greek to you. Well, guess what? Millions of people speak Greek, so you've got no excuse. Here's your alphabet. Theta is time decay. Time itself has value in the options world, and that value slips away the closer you get to expiration. Theta is how fast that happens. Tick-tock, time value drops. Delta is difference. How much does a $1 move in the underlying affect the price of the option? Long options have a positive delta because their value moves with the stock. And short options have a negative delta because their value moves opposite the stock. Gamma is get up and go. It's how fast delta changes. Gamma increases when the options start trading much more like the stock. Like the closer to the at the money and the last few days till expiration. Vega is not a Greek letter, but it does start with a V, and so does volatility. Vega measures how much the options price is affected by the changes in volatility. Now you know your alpha, beta, gammas. Well, gamma anyway. Pretty simple.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform, or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
Nicky, we are back, son. You know what that means. Time for a little bit more Tasty Live. That's right. With well, before we get to him, you just bought some NASDAQ futures, a couple of handles lower than they were right now. They went a little bit lower than where you bought them. They're right there at 85 right now. Mm-hmm. But all that means nothing when you've got this man. That's right, my man Q. How are you, brother?
Fellas, I'm doing well.
How was your weekend?
My weekend was absolutely horrible. My weekend, I mean...
You're too young to have a horrible weekend.
It was bad. I mean, I don't want to say it couldn't have been worse, but it doesn't get much worse than it did. So, Alabama played Oklahoma, and we looked so bad. Like, they didn't even, like, look good at all, but, like, we looked so bad.
That's a big game.
Huge game. Turnovers everywhere. I mean, that was me the entire weekend. You know, turnovers everywhere. Even, like, when there weren't turnovers, sometimes we'd still just, like, drop the ball and stuff.
So you let really something that you can't control ruin your weekend?
You know, it happens.
Shame on you. Shame on you.
It happens. You know, there's just nothing like, you know, devoting your whole life to a few weeks in the fall.
Now, I do it all the time, by the way. If you've ever been in the car with my son coming home from a hockey game or my son coming home from a football game, I mean, I'm the same thing. So
I mean, it's brutal. And
don't do as I do as I say.
Yes,
That's what my father used to tell me when I would say visit him in Lewisburg.
Yeah, well, now because it's like we've got 2 losses, we'll hopefully, you know, win against Eastern Illinois and then like Auburn Thanksgiving weekend. But then if we beat Auburn, we go to the SEC championship, I think, and then we could lose their 3-loss team. Do we make it in the playoffs? You know, do we get penalized for being in the SEC championship? You know, it's the same conversation every year, right? But yeah, it's, you know, it's a lot.
If it's going to ruin your weekend, and yes, let's penalize you. Why not?
Yeah, the chats, they're a little bit divided. They said like your demeanor, they had thought you had like a death in the family, but then the other side of the coin was saying, you know, if that's the worst thing that's happening in your life is a college football loss, you know, things are good.
Right, there's still stuff to be thankful for.
Yes,
for sure.
Yeah, you got to put everything in perspective. Yes.
Yeah.
We joke, we kid.
Yes.
But it hurts though. It hurts.
Of course.
But hey, Tony, how was your weekend? Everything was good.
I let things bother me that shouldn't bother me, but I had a great weekend. It was 70 degrees on Saturday.
Yeah, right. At least it was
72,
a nice day.
I believe. Yeah, we got up to. It was absolutely amazing. I love this global warming. If you love global warming, 855-238-2789 or 855-BE-TASTY. We'll have a time for a couple of small questions. If not, we'll go right to the earnings trades and look at that after we let Q go. But phone lines are open. If you want to ask a question, I'll get to you immediately. I'll even interrupt Q if I have to. And God forbid if I have to interrupt Nick, he'll give me the Google eyes. Look at you. Nice scalpy on the NASDAQ futures.
110.
Back at
like
110.
35. I also sold some puts in Intel.
I saw that. I saw it was down. Intel was down small, about 16 cents.
It's had a nice move lower. I mean, we were looking at this in like the 40-ish handle over the last month or so. It's come down to 33 or to 35. I sold the 33 puts out at $1.09. I sold all those.
Mm-hmm. Yeah, kind of a random correlation to the overall market of 0.34. You could see that on your right-hand gutter, right next to the liquidity meter.
IV rank of 33, not too bad.
Yeah, that was good. That was good. Yes. Good for you. Good for you. All right, cool.
All right, and so
We
let's get
interrupt
some
your
business.
program to
No
get to those
problem.
updates, but please go right ahead. Give me your
market's open.
Yes,
I
let's
got
see it.
things to do. All right, top 20 symbols going through the system in their IVR. And number 1, we've got Tesla 17, Google L 33, Nvidia 33, Amazon 26, Apple 16, Google without the L 33, iBit 67, Palantir 24, Micron 76, Meta 22, Netflix 22, AMD 41, SoFi 37, TSLL 14, Robinhood 30, MSTR 32, GLD 58, TQQQ 41, and Microsoft 22, and CoreWeave 26. You know what I thought was really cool? I saw Robinhood did like their Hood Summit, something like that. I was like, finally, someone else is catching on to the live events. You know, we've been doing that for however many years now. I was like,
It's not good when Robinhood comes to eat your lunch, okay? That's not
often imitated, never duplicated. It's all about the personalities, not about.
Well, of course, but it's nice to see, more live events and things like that in this space.
You seen the movie 300?
Yeah, of course.
We're the Spartans, okay? The small group of us, bad mother fighters.
Good movie, by the way.
Movie.
Hey, just because they're eating doesn't mean we can't.
Yeah,
eat,
it doesn't always really end up great for them in the movie, but
a lot of fake bloodshed too, which was pretty cool after you got used to it for a little bit. Yeah. It was cool.
Yeah, Sparta.
Yeah, it was good. Yeah.
Yeah. Right. I saw that. I was like, someone else is catching on to what we've been doing for the last 15 years.
Yeah.
And stuff.
Often imitated, never duplicated. It's like the pizza box from the 80s and 90s in New York. You have nothing to worry about. You'll be still coming out on the road with us.
Oh, of course. I mean, I can't wait. It's great. Road Warrior Travel Buddy. It's been amazing.
Awesome.
And then tomorrow as well, we've got a demo.
Oh, beautiful.
Which I will be doing as well. Me and Anthony. That'll be really good on vertical spreads. Placing them, we'll place some live trades in the account and stuff like that. Never, fake trades. Always live trades, which is super cool. And then we'll be doing vertical spreads and how to manage those. And
that's tomorrow, which is very timely. I just got, I don't know why, but I just got like 2 or 3 emails from newer traders talking about vertical spreads and what kind of delta they should have and how wide they should be. And this is things that you'll be able to go over.
Yeah, we'll be going over.
I mean, again, everything is a suggestion. You can go as tight as you want. You can go as wide as you want. I mean,
yeah, but just exploring like the differences between those two.
That's right.
That's what we can help you with.
That's right. And then we're talking about they have very little delta on the spread, although they are directional. Like if you sell a put spread, you're bullish. If you sell a call spread, you're bearish, but you have very little directional bias at the time you put on the trade, and that grows teeth as time goes on, right? It's depending on what the stock does too, right?
Yeah, and one of the things I love to talk about with vertical spreads as well, let's take a stock like Tesla where, the out-of-the-money options are trading for like $2,000, something like that. Then, you just spread it off. You could trade that in any size account that you want. And so that's something super great about vertical spreads.
And this has been a Tesla type market today in the NASDAQ, which we've been trading. Tesla was up 17 just a moment ago. It's up 10 now. It's been moving all over the place. It opened under 400 at like 398 or something like that.
Last week too, it sold off to like 380-ish.
Yes. Tesla's been its own little market, but really influencing what's going on in the overall market too.
Yep.
Q, good job out of you, my friend. And you do a great job on the demos too. So
yeah, please join us. tastytrade.com/demos. tastytrade.com/demo. Or if you want the real link, tastytrade.com/webinars. All will take you.
We just want to find you, right?
I just want to make it easy so that anybody.
Wherever you put it in, we can find us.
Demos, webinar. Now they all go there.
Perfect.
Yeah, all the same link.
Yes.
Very good.
I'm a simple man, it's just
hey, me too.
Q, I'm going to let you go so you can get back to work on the trade desk. Do you say your name when you pick up a phone call?
Of course, Tasty Trade. This is Quentin. Every time.
Awesome. Well, maybe you'll be lucky enough to get Q or Quentin when.
And they get special requests too.
Yeah, you could request if you like. If I'm available, I'll take the call for sure.
Quentin, right?
Quentin.
It's
all right. Either way is good. Don't
UE,
worry.
right?
What?
Is it UE?
UE, yeah.
UE.
I love you. A rose by any other name smells just as
Exactly.
sweet, and you are just
Q
as
works.
sweet.
Q works. All right. Thank you very much, fellas.
All right, we're going to let you go. You are right, son. NASDAQ just turned green. It's up 10. Tesla's up 14. It was just up 10 a moment ago. Even the S&P's down 6. Russell down 10. Dow down 94. Your SPX trade looks like it's trading around...
close, right?
Pretty close. Probably maybe 50 cents off or so on the downside for you. Would you like to take a look at earnings?
Yeah,
Home
what do you
Depot,
think?
Baidu. Baidu's been pretty strong. Do you have a Baidu position?
I do not have one. I was thinking maybe Home Depot might be a little bit more interesting. My take on the China stocks and the Chinese stocks in general,
I hate trading them.
I hate trading them. I'm never right. I'm too late, too early every single time. I feel like it's just something that my track record on them. I feel like they always have my number.
My track record stinks on them too, and they typically have my number too. So I agree with you there.
There's too much binary risk with them. Like you get these like announcements. It's not
tweet risk, the whole everything, right?
Yes, you never know what's.
Totally agree with you. And to put it into perspective here, Baidu has a monthly implied volatility of about 50 something, and Home Depot has half of that at around 29 or 30. Expected move in Home Depot is $14 for the next 4 days. Home Depot IV rank has been climbing as the stock goes lower, which is a little unusual, but it's been climbing because it has earnings, right? What are you looking to do in Home Depot? Relatively higher price stock, $359. I know what I would do. I want to answer what you would do.
I want to know what you would do.
I would probably look at some sort of ratio spread, but I would probably go to DEES. I would probably do a put ratio spread or something of that nature. You could look at Jan DEES. You'd be selling if you want to do something like a diagonal spread. In DEES, you have a 31% implied volatility. In Jan, you have a 29%. I like selling the higher implied volatility in the front month than buying in the back month, so you'll get a little bit of boost there from volatility contraction in the front month, maybe going down to 27, 28. You'll still get the contraction in January too, but it'll be a lot less. If you get the directional bias correctly, you'll make money that way. Those are the two trades. I know you favor one. I would favor the other. What do you
I was
do?
kind of in the same realm as you. I was looking at the 335 puts, just selling
in DEES.
Yeah, in DEES is like it's a 20 delta into earnings. It's not a stock that I have a huge directional bias on. It is near lows, so that is a way for me to at least put some context into getting some long delta here. I mean, the stock is kind of at the lower end of where it's been trading over the last year. It has been a little bit lower at points, but this has kind of been the spot. It's not something that I want to be married to. I'm not like trying to, take a home run shot here. I'd love to get a 50 cents or a dollar out of this on an inside move.
Yeah, and that's why you went out. That's why you're looking at DEES instead of the 4-day options. 4-day options would be a little bit. You can have the same bias, but it's more of a shorter term bias, right? Yeah. I don't think I have that kind of feel either in Home Depot. Home Depot correlation with the overall market is about 0.76. So you'd need to have a little bit hope that Home Depot is going to help, even though Home Depot has been a dog this time. It still has a high correlation of 0.76 to the overall market.
You want to do the ratio, the 45-35? It's kind of hard because
in DEES?
Yeah, in a $300 stock, I'd want to be like 15, 20 points wide on the ratio for a dollar.
Sure.
Like that's what if you look at like a Tesla, which is a little bit higher, and this goes to our market measure on volatility and adjusting, based on volatility. But those ratio spreads, we did those at like $2 for a 20-point wide put ratio.
Yes.
This one is $1
price
at $10 wide, and that's because of volatility. It's 30% implied volatility.
They're going down to much lower implied volatility, right?
Yeah.
Yeah.
Does that?
I don't mind your naked put.
Let's do the ratio. I like a little something different here.
It's an 87% poppers and 81.
Yeah.
I like them both. I don't think the six percentage points is that big of a deal. Your ratio spread will move a lot slower.
Yeah.
So going to your point where you don't really care that much about Home Depot. You haven't had a position on Home Depot really that recently. The ratio spread will move a lot slower if the trade goes against you.
Yeah. And markets are a little wide here too.
Market's going to be a little bit wider here too. You got filled at
one price improved to 169. I went in at 170, no taker. I moved it 5 cents and then got price improved a penny below my 170.
Yes, you actually got filled at 169.
Yes.
Correct? Perfect. Yeah, 169. That's the spread you put on. Like I said, 87% pop. Still got the good theta decay. Selling the 35 put, your break even is just over 30. Doing this, but you collect almost $4 and change. Here you're only collecting $1.69, so you're taking that down by about 60% or so, the credit you receive. But you're breaking your break even is going to be under 325, just under 324, which gets you outside the expected move. If we go lower on earnings, you'll have a little bit of a cushion here with that $15 embedded long put spread. So I like it for all the things that you talked about before putting it on. Like you don't really care about Home Depot. You're looking at it as a binary event. You're taking it back a month. Just all the process here, how you got from DECE and how you got into DECE from the daily options, how you got to the naked put into a ratio spread, which is synthetically the same trade. Even the S&Ps just turned green a moment ago.
This has been trader nirvana.
Been a scalper's market. You could sell it when it goes higher. You can buy it when it goes lower, and you've had an opportunity to manage winners if you're a futures type trader, which you've been doing quite well so far. Bitcoin is a little bit weak here, down $1.60. Down 165. It's still off of its lows by about $1,000. Ethereum doing the same.
Kind of spooks me.
Gold has been that it doesn't have any oomph to it yet?
Yeah. I mean, you've had two-sided action. I think it was above 95 about an hour ago.
Yeah,
so
for sure.
You've had a little bit of two-sided action, but I think
there's a lot of pressure in there.
There's a lot of pressure there, and as something that is just purely sentiment-driven, and the intrinsic value of it can be debated. It's really like a liquidity and a sentiment-driven asset. And for that to kind of continue to just get killed, it doesn't make me feel good about equities. Like I think if you have the 5 or 10K day in Bitcoin, that'll tell you that everything's over and that it's back to up only mode.
I agree with you.
Right now,
you don't have that velocity of the move in Bitcoin right now.
No.
Yeah.
And it's not nice.
It'd be lucky if the best thing that can happen is if it dies right here, and I don't mean dies in price.
Chops here.
Just chops around.
Yes.
Just chops around. Rally, sells off. Rally, sells off. Rally, sells up. It doesn't go anywhere. Much like what the market did last week. Then maybe you can have a little bit of a boost to the upside. Until then, it looks anemic and it looks sad. Unlike you, my son, and that's why we're going to take a quick 90-second break. You've been hitting on all cylinders. You basically have an unchanged market, volatility up 2 cents. Key on volatility, see what's going to go on for the rest of the market. Right now, it looks like status quo. We're going to chop around here. Your SPX trade that we put on.
Close.
What's that?
You got to be close here. Come on.
You are close. It's trading for about.
It's the markets move. 10, 15 cents over.
You're in at 365. It looks like it's trading around 380 or so. I know 390 is the mid price right now. It was just a little bit lower a moment ago.
The NASDAQ is moving.
NASDAQ's moving $30.
$30 a minute.
At a tick. Yeah, now it's up 20.
It's crazy.
It really is.
Is that good or bad?
Well, it's coming from some of the market leaders. I mean, Google up 14, 15. It's been up there all day long. I know that's the Buffett effect there. But you got AVGO, which has been a market leader, up $3 or $4. You got Tesla up also. I don't think I think so far you're in okay hands, although they seem to be fragile. Volatility is now down 6 cents. Chop around is what I think. I don't think we go anywhere. We're going to take a quick 90-second break. We got more Tasty Live immediately following these messages with Liz and Jenny next. Peace.
Peace.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st. Only at Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Now
Hello, everybody, and welcome to the Monday edition of the Liz and Jenny Show. My name is Liz Deerking. That beautiful brunette to the left of me is Miss Jenny Andrews. How you doing, Jenny?
I'm great, Liz. I'm great. How are you? You have a 19-year-old.
Yep, I have a 19-year-old. I can't even believe it. Time flies, and this is the first year I'm not with him on his birthday, so he's in college having the time of his life. 19 years old. What could possibly go wrong?
And I know you snap him every day. Can you snap him a video of us saying, "Happy birthday, JD"?
I can.
Here, get ready, record. Pull it up. Record.
Hold on. I'm not. This is boomers using technology.
And we'll give him a birthday shout out. Tell me when you're ready. Happy birthday, JD. Have so much fun.
Happy birthday, buddy. There we go. Okay, I'll send it to him. He's gonna love that
on the show.
He's gonna love that.
And it's the 17th. I was gonna say, is he 19 on the 19th? But
no, he's 17. And I was talking to him this morning. It was pretty funny. And I was like, "Hey, buddy, you're not 19 yet. You were born at 3:30, right after the market closed." And he's like, "Really? Interesting. So you could trade the whole day?" I go, "Yeah. Fun fact: I got to pick your date and your time because you were scheduled C-section."
Oh.
Yeah.
Oh, right, because it was Annabelle where the water broke while you were on the trading floor.
Yep, my water broke with Annabelle. With JD, he was sitting Indian style in my uterus, and he did not want to come out the normal way, so he was a scheduled C-section. Yep.
3:30 p.m., right after the market closed.
Right after the market closed.
Walked off the trading floor, walked over to the hospital.
You can take the girl off the trading floor. You can't take the trading floor out of the girl. But yes, so he thought that was pretty funny. So I was like, "Yeah, you're still 18 for a couple hours, kid."
That's pretty
On a total side note, Jenny Andrews, do you want to pop into this market? Because SPOOs are down 17 on 17th.
Oh,
Let's jump into the platform. This is what we're looking at right here. The SPOOs down 17. We've been all over the place. I want to take a look at the VIX. Give me 2 seconds.
See what it's doing. That could be our little tell. The VIX can be our little tell. VIX, ooh, geez, 21. That doesn't look good. That's not a good omen.
Yikes. Let's see where the VIX has been today. You know what? I'm going to go VIX 1 day.
So
VIX 1D.
And isn't that the volatility? Is that the volatility of the VIX?
Yes.
Wait, I never look. I don't often look at the VIX 1D. You know, you're going to have TP on Friday. Maybe you can ask TP how.
Hey, listen, TP is locked and loaded with his own agenda. So I don't think I'm going to get a question in Edgewise.
Well,
he has called me 3 times about these shows that we're doing. So, I mean, if I could ask him a question, I'll ask him. But I don't know that we're going to have time.
Well, I would put it on your docket because I don't typically look at this, but there are people who do. So maybe when and why and how.
I just think it's an indicator. I was actually I thought it would be the chart of the VIX.
No, I thought it was the volatility. I thought it was the volatility.
It's the VVIX is the volatility on the volatility.
VVIX.
So watch. VVIX is the volatility of the volatility.
And does this chart look like the VIX 1D?
Not really.
Let's see the VIX 1D.
Ready? See the chart?
Oh, wait. Oh, yeah, so, okay.
No.
No. Yeah, I would go
through the VVIX is the volatility on the volatility, the vol of the vol.
And then what's the VIX 1D?
I think the VIX 1, because VIX is based on the 30-day. I think the VIX 1 day is based on the 1-day options.
Oh, the 1 day, like a volatility of just the one. Oh, that makes sense. The volatility of the 1 day options.
Yes, and the VVIX is the volatility on the volatility, but the VIX 1 day is the VIX 1 day.
That
right there in the name.
You cleared it all. You cleared it all up for me.
It's right there. It's right there in the name. But the VIX has been a good leading indicator whether we're going to stay up or down. But I did want to hold on.
21. That's kind of high. So I don't know. I think there are a lot of numbers coming out this week. So maybe
there are, and Frank gave it to us in a Teams chat today. So here's the 17th.
Yeah. Creeping.
Oh, these are 3-hour bars. Hold on, I'm going to go to 1 minute. Only just because it's fun. I mean, and fun for just me and Jenny. Here's the VIX. Here's today's VIX.
Since the open, so you can see at 8:30, we looked like, there was not much going on in the market. And now SPOOs are down 15. We've got a little pop.
Yeah.
21.
Yeah.
I don't know. It seems to have been lately an indicator of some downward momentum. we'll see what happens today.
Yeah, we'll see. We'll see. We've gotten some two-way action because we've been red and green on the screen almost all morning, back and forth, back and forth, back and forth, which is pretty
At
crazy.
9:15, when I put on my SPX 0 DTE, we were only down like 3, I think, something like that.
Oh, at night. At what time?
9:15.
9:15. I went at 9:05 and 9:07. I did 2 tranches.
It's funny because I did one at 9:10, and I did one at 9:10, and that came off at like 9:14, and then I did one at 9:15, and then that's still on. But my one that came like my 9:10 one, it was funny because I said I'm gonna do one at 9:10 and one at 9:15, and my 9:10 one, when I went to look at it, I took it off for just $100. I was like, I'll take this off for $100 because I'm putting on another one at 9:15.
Yeah, there
it's
you
almost
go.
like the double dipping. But my 9:15 trade spoos are down 3, and that is still on. And I could tell you that where spoos were because my short put of my at the money put spread is the 67.30.
Hold on, and I'll go to that in a second. So SPX, and that brings us into one of our questions about some SPX things that we have today. What was your short strike?
67.30.
Yeah, you're not too far out of the realm.
Yes, we have questions on like why SPX, why not SPY, why do we talk so much about $10 wides? Can't you do other widths? And you certainly can. So let's answer these questions on the
So
zero.
we've been doing this. We've been sticking with SPX. I'm just going to give like a little brief synopsis. So Jenny and I stick with the SPX because it is pretty big, it's pretty liquid, and guess what? This is the SPX pit. So there's a lot of reasons behind it. We are smack dab in the middle of the SPX pit, so we do like trading it. It's what Jacob has been doing his studies on, the 0 DTE SPX. So it's just something we stick with. I don't see anything wrong with doing SPY, especially if you're defining your risk and getting out of it.
So they asked like, what is this all cash settled? And they said, don't you need the cash to back up a position anyway? Like if you're in SPY and you let it go, don't you need the cash to back it up? So
cash settled. That's what they're asking about.
Yeah. So like when we say SPX is cash settled, if I'm short if I'm short the 67.30 and that ends up in the money at the end of the day, it's just it's just the cash exchange in my account. So if we're trading 67.10, then $20, $2,000 will come out of my account.
Hold on, I think there's a different.
You don't take assignment. You don't take the assignment. Like if you're in SPY and one's in the money, then you're going to come in tomorrow. If a short puts in the money in SPY, you're going to come in the next day with 100 shares of SPY.
So I'm going to come at it from a different angle, and I think we're saying the exact same thing. But so if I put this trade on and I sell it for I'm going to lock it then. If I sell it for 19.55, I sold this trade for 19.55 during the day, okay, and I don't take it off, and we close exactly right here. There is, I might have made, and say we sell it for 19.55 and all of a sudden it's worth, $19. I've made $55. Even though this is in the money, I will not come in with an SPX position, right? So usually in any normally listed non-cash settled, if one is in the money and one is out of the money, you have to take action or you will take ownership. Because if this were SPY, or if we go flash forward to a different, I'll go over there with SPY, the cash will be removed from your account, as well as you will come in long 100 shares.
And so the appeal of these cash settled products, which, this is we do not recommend this, but there are a lot of people who will put on positions in these cash settled products because you could put it on and let it go. It just, wherever, to Liz's point, if you sell it for 1950 and it ends at 1900, you just get that $50 in your account. You don't have to ever close them. So if for accounts that are below that $25,000 mark, for accounts that are subject to pattern day trading, you can put on a trade and you can just walk away and let it go. You won't come in with any position the next day. Whereas SPY, if you put on a trade, you have to close it by the end of the day, or you can come in with a stock position the next day.
Just wrapped around the at the money, same concept. So say I sold this, I'm gonna lock it. I sold it for $250, and say flash forward, we close, and I can make $50 on it. It's now worth $2. Say. Yeah. Even if it is worth $2, I'm still coming in because one would expire worthless, your out of the money would expire worthless, and your in the money option, because this is a normally listed option, will be assigned, because I'm short it, so I will be assigned and I will come in long 100 shares of SPY.
Right. So SPY, if you put it on a 0-day, you have to take it off it if it ends up in the money, or you're going to come in unless they're both in the money. If there's a short and a long in the money, one will exercise, one will assign, but then you're paying exercise and assignment fees. So I think part of it is about pattern day trading rules and people who don't want to get in and get out, who have below that $25,000 threshold. Now that's going to be changing soon, and hopefully very soon. But for now, that still exists, and a lot of people want these 0 days so they could just put it on and forget about it.
And I will say it's a lot of people, and I did appreciate this. This is from the chat. Some people like to just put it on and say whatever happens throughout the day. And there is some research for that, right? So say you just sold this and you walk away and you go fishing. You know what I mean? And you don't have to worry about anything because it is cash settled. Now I understand, and I want to bring this up too. So SPY is smaller than SPX, but there is the alternative of XSP, which is also cash settled.
Right. XSP is a smaller version, also cash settled. You could put it on and walk away, and you're not going to come in with a position. You're not going to come in with 100 shares of XSP, because you can, if you look at the bid, if you find a product and you see there's no bid and there's no ask, that means it's cash settled. Versus you go to SPY and there is a bid and ask, that's a tradable underlying. And if an option's in the money at the end of the day, you'll get exercised or assigned, automatic exercise or assignment.
Yes. And this is an SPX, and I went to this while you were talking, and I thought this was pretty interesting. I'm just going to go to the 0DT. Take a look at this. We were talking about why we use SPX, and a lot of it has to do with the massive liquidity. So this is a $6,700 product with dime-wide markets. That's crazy.
Yeah. Right.
And look at this, the volume traded today. So volume is today, and open interest is what is been open interest is the one that goes back and forth for days. Look at the volume of what is happening in these 0DTE SPX.
And what is going on right now? SPY's down 27.
Yeah.
Yeah. It's the VIX. VIX doesn't lie.
VIX don't lie.
Okay, so I think we did have other questions too. If we've done a lot of studies on $10 wide, what's wrong with $5 wide? Nothing.
No, there's nothing wrong with $10 $5 wide. There's nothing wrong with $20 wide. There's nothing wrong with whatever you feel comfortable doing. We just hung our hat on the $10 wide for a little bit, and that's what Jacob has done. But there's lots of other studies on narrower ones. Now,
I mean, we've been liking the lower drawdowns. I don't know if it's going to be interesting. Tomorrow we have an interesting option drive from Kai, and it kind of looks at last week's SPX trades if you were to sell the 20 delta $30 wide, and it shows that what happened last week with it. And I mean, we kind of like the smaller drawdowns, because last week there were quite a few days where you could have had full loss.
Yeah. And you mean for the $10 wide?
Kai looked at SPX 20 delta $30 wide, but there were a handful of days where you're
risking quite a bit. In my opinion, when you lose, you lose, and I'd rather the lower drawdown.
Yeah. Now I know if you're doing a $5 wide in SPY or SPX, you're probably bringing it up and getting closer to collect enough.
This was our old Jajun.
Right. Yeah. Yeah.
Yeah. So those were all good questions. And this won't be the last you hear of it. It's pretty interesting, though, when people are just joining us, because we've been doing these SPX. Actually, we have as a network. The entire network has been doing SPX 0DTE. We weren't the first person to bring it up. We were the first people to be in this pit, but we weren't. They have done a weekly SPX 0DTE study for the past 2 years.
Right. They've been around, 2.5 years. This summer it'll be going on 3. So It's kind of cool. It's a new product, and it's a lot of people have been trading it.
Yeah. A lot of people have been trading it. I can't believe SPY's down 31.
I know.
That's a lot of side choice. Can I see where, only because this is going to affect me the most. Let's see where Bitcoin is. 93.
Yeah, but it was 93 last week. It's still staying in that. Go to the chart. I think it was, how low did it get last? Was it new lows today?
Yeah. New low today. New low today in this
recent realm.
Yeah.
I don't know what to. I don't know. A lot of people are asking, what are you doing with all your crypto? I I'm using options. This morning, this morning I was selling put spreads in IBIT. I'm trying to use options to help if Bitcoin doesn't rally or come back, at least get some premium from the options. But if it keeps going down, it's gonna get uglier.
Your transitions are spot on accurate. We got an email from our buddy Fabio, who is in Italy, by the way. Hello, Fabio from Italy.
Hello,
He's
Fabio.
watching it. So he was asking, and he used IBIT as the example, but he was asking if we would ever invert in a strangle or a position like this. Because when you look at this is technically an iron condor position. So, and he actually said, would you invert in your IBIT position? So if you take a look
Crazy that it was 6 days ago we put this on.
Now, inversion would be something like this. So if you're looking at your short strikes, something inversion, and this is typically not in the weeklies, but you'd be buying back your untested side, and then you'd be selling to neutralize your deltas, bringing it all the way down to here. This isn't something that I typically do in the IBIT or the weeklies. This is Tony mechanics. You sell a strangle, roll your untested side.
Okay, if we have a defined risk spread, if we have a put spread, I'm not going to invert on a spread. Like that's
no. But they were asking about strangles, and then they said the closest they have in our account is IBIT.
Okay.
Would you invert IBIT? Because technically, if you get rid of the longs, what you have is shorts.
Yeah, right. So no. What we could do with this position, and honestly, what we do when something gets deep in the money is often change it into a zebra. We'll take that, 57, 52 put spread and change it into a zebra. There's still $1 left. There's still $1 left in that 52.
I would almost say, let's take this, close it, and put a new one on. Now, this isn't rolling. This isn't inverting. We're just saying we looked at the position. I wouldn't do it in IBIT. But if you I don't think we have any other strangles in here, do we?
No, but I agree with you, Liz. And that's how I looked at my IBIT today. I put a new one on, a new IBIT position on for this week. I wasn't trying to roll a mess because IBIT has fallen from 69 to 52. Wasn't trying to roll a mess. I just put a new one on, thinking if I can make money this week and keep churning out, trying to churn out some premium week by week, it'll chip away at the loss I've taken in crypto over the last couple of weeks.
And I would kind of look at it with a fresh set of eyes. I'm not rolling this. I don't want to roll so rolling it would be going to the same strikes. I don't want to do this. You're gonna pay 27 cents to roll it to the exact same strikes. I don't want to. I would close it and look at it. What would we do next week in IBIT?
Right, and maybe we do something different. Maybe we do something. Maybe we don't do a Jade Lizard. Maybe we do something slightly different. I don't know.
I don't mind the Jade Lizard. Take a look at this, because you'd go 56. I mean, you're getting 23 cents. You have to buy something for 23 cents, and then I would sell the 51. That's not bad.
Yeah, that's not bad. I was going to say get more aggressive with the puts, but that is aggressive with the puts. We're just one strike out of the money.
Yeah, we're one strike out of the money. Yeah. And we're actually selling the one that we were long. I wouldn't even mind going 52.
Yeah, right. The market, when will it settle down?
I mean, it's really nothing. It's a blip in the radar. Look at this. I'm just going to show you.
I think
everybody at ease. Let's review the tape.
No, I think crypto is what has really been painful for a lot of people.
Yeah, and that's what we were just looking at was our IBIT. What are we down in it? We're down 237. We should close this.
I will close that and put on a new one.
I'm just going to cancel I'll close the call spread too, but I'm going to close the put spread.
But as far as inverting and strangles, sometimes you have to just look at things with a fresh set of eyes and make your adjustments, even if you have to pay for it. I don't love inverting. That in those positions, I'm always looking at.
So you and I have never really been inverters. No. I will roll to. So I have when I do have strangles on, I will roll to a straddle before I will invert, and then I will take it out in time and uninvert.
And pay to just have a normal. But and again, when the market, and not that the market's down, but like the way things have fallen, I don't like having the rolling down, and having those naked calls where if we bounce back up, it's going to shoot right through those calls.
I know. So that's not what we're doing. We're looking at this with a fresh set of eyes. I'm actually going to go to the 11-day because I don't want to go back into the 4-day. And I'm going to, kind of go through our process where we take, was I 56, 57? I think I was.
And did
right?
the boys have a crypto guest this morning? I don't know if you saw them at all.
I was talking to you.
Oh yeah. So I don't hear any crypto news, but
I saw Quinton on, so I don't think they had a crypto guy on today. We used to have crypto on, but we canceled our crypto segment because they had theirs right before ours, but I don't think they had it. So let's take a look at this. We're going to do the same thing. I'm doing a Jade Lizard-esque type. We're getting 50 cents. So if it gaps up wildly, we'll still get 50 cents. But I've got the 56, 57, and we'll go through this again. We do it backwards in IBIT only because we have to buy something. So I'm collecting 22 cents. I'm going to find something for wrapped around 22 cents. So I'm buying the 45, and that's going to release capital. And then I'm going to pick a put that I want to sell. Now I'm fine with the 51, but I'm also fine with the 52.
Either one. That's fine. I'm fine. And again, it's trading 52.87. If we collect $1.50, our break even is, 50.53.
Yep.
So we're giving ourselves a decent amount of room.
Yeah.
So did you hear them talking this morning about how there were so many people so leveraged in crypto? And I was a little confused by that because, again, how do you get so leveraged in crypto? I thought
everywhere else uses leverage. We don't.
So and I don't know about IBIT, but if you buy 100 shares of IBIT, does it use $5,200 or does it use half?
Half.
So that's regular 50% margin. But if we're in zero hash buying Bitcoin, it's just you buy.
It's cash. It's cash secured.
Yeah, you buy a $3,200 Ethereum coin. It's using $3,200. So when they were talking about so many people that were super leveraged in crypto, really taking a hit, in this platform we can't get super leveraged in crypto.
Well, what are those? Is it MSTR? That's the.
Oh yeah, let's go take a look at the chart.
Oof.
Whoa.
That got cut in half. That escalated quickly. That went from 450 to 192 really quickly.
And so I wonder if it's some of these big firms who are unloading a lot of their crypto.
Yeah.
I don't know.
Interesting. And
all right. Sometimes I wonder because we have, and not necessarily in this account, but we've got a lot of, and look at our account, how little it is. We trade in one lots, and look at that SBET. That SBET is also a crypto product. We trade in one lots, and we're down $600 on that 100 shares that we probably got put that from a short put or something or somehow.
Well, here's what I'm going to do. I'm actually going to remove, because you can see we sold a put and a call against it. We have a strangle right here against it. Yeah. We made 140 on the call. We made 85 in the put. I understand the stock.
We lost 85 in the put.
We lost 85 in the put. I'm going to close both of these because I don't want to come in long anymore, SBET.
No, maybe roll that 12 put out.
I'm going to close them both, and then we'll put something else on.
Because I think you could, at the 12, there's probably maybe juice in the 12 if you roll to the 12.
I'm sure there is. Okay, so I will cancel that. Okay, so I'm going to close this.
And then go to D's and sell the 12. And then you could sell the 12 call too. And take another $1.24.
That's not bad. Yeah. We had to do something with it. I mean, but it is kind of wide markets.
So we've got, people have a lot of other crypto products more than just Bitcoin and Ethereum. So sometimes I wonder, should I just close all these random crypto products and just keep everything just in Bitcoin? Which I think is a common question. Get out of all the little junk and just keep it in Bitcoin.
I mean, that's what we had been, when we would have Dan on, and I think I've heard Ryan Gray say this before too, that it's not bad just to stay in the higher, not the higher names, but the more well-known names.
Yeah.
What happened to the not Big Mac, the McRib?
Didn't work.
Uptrend.
Didn't work.
The McRib uptrend. It's so funny. All right, I'm gonna pop into Twitter real quick, see if we got to see what we've got going on here today. So here, hold on. I want to go.
And I'm gonna just push out our trades.
50 minutes ago, I'm actually gonna go bottom down. So we've two. Okay, so 15th was Friday. So then Ajit comes in. Strategies for zero DTE strangles, wide iron condors, which are neutral or directional credit spreads. Once in a while, after a large move either way, and if the volatility is still brewing, short straddles. Okay, I will send a table for that will explain. I like that Ajit's going to send a table.
I know.
And we'll get to that in a second. Here's Blue Wackadoo, and he's got some room to the downside, so I think he's still in pretty decent shape.
He gives himself more room, right? He usually makes his spreads pretty wide. His shorts are usually there's a pretty wide spread between his short and long.
Yeah. Okay, so I'll do the genie blink for you there, and then rolled the putties up, peeled off 2 contracts to de-risk, then added two lots at, and we dance. I love it.
He's back. I think he took Friday off, but he's back today, and it's Monday, and I thought, oh, it might be a slow Monday, but I hope so.
You hope so that it's a slow Monday?
That it's a slow Monday.
It's not. It's already not.
I mean, I thought it was going to be because Monday's usually double down Monday. I was hoping we'd have a slow Monday.
But you had yours on and you got out of your SPX at what, like 240 on Friday?
Oh my gosh, 245 on Friday. And again, what are our mechanics? Like close it at noon, but at noon. So I had both sides. At some point I took my put spread off for a dime, and it was my call spreads that were, at noon. I don't know. I can't remember if they were almost a full loss. It just wasn't worth closing. They were so close to a full loss. I'm like, I'm not closing this. I'm just leaving it. And then I actually put in an order to scratch it. And at 245, I heard the ding, ding, ding and got out of it.
Well, I mean, that's what I think is interesting is like you said there, that's another reason because it was SPX. You were just like, whatever, if it's a full loss, it's a full loss.
Yeah.
Why close it if it's a full loss? That's kind of our theory on even durational trades. I'm not going to close something if it's a full loss because you only have upside, no more downside.
Right. Yeah. So if it's almost a full loss, I'm not closing it at noon. So if the mechanics are closing at noon, now I think in Kai's study, their mechanics were closed at 200% loss. So if you collected $7, you'd be closing it for $21.
How wide is your spread?
I want to say that he was doing $30 wide, like the 20 delta, $30 wide.
Oh, he was doing $30 wide. Got it. And we'll take a look at that tomorrow. I think that's going to be in there.
But I think you said like on Friday, you would have hit that close at 200% loss, but at the end of the day, it would have been a full win.
Yeah. But that's another reason why you can let them go. I have a tendency to let my SPX run, and I know the mechanics are closed at noon now. We do have those mechanics. But to your point, when it's a full loss, why would you? And the cash settled allows you to take that chance.
I love how Ajit says, here's the general guide on how to play 0 DTE in the safest possible manner.
In the safest.
So
Ajit, we love you, but I got to tell you, this is from Ajit, not from us.
2 delta is 3 standard deviation, 5 delta is 2 standard deviation, 16 delta 1 standard deviation. So, he's going very far.
And he does a lot of, he does do some naked options. So it's all here for everybody to see it if they needed to. Thank you very much, Ajit.
In the safest possible manner, according to Ajit.
And then thank you for sharing, Ajit. Very helpful. The last 2 columns, why it works. Risk notes. I love it. Why it works.
Yeah.
Ajit, I love it.
Ajit's great. I'm so glad we got to meet him in our office.
I know, it was so fun.
Mm-hmm.
Okay.
Today, actually this week, so you've got Home Depot, Baidu, and Futu, and then tomorrow Target. What's BLSH? Is that a newer product?
It is. I think it's called Bullish. Well,
BLSH.
Yeah, bullish, ordinary shares.
Can we look at it? I feel like this is something that was...
Bullish isn't very bullish.
Yeah, a lot of these... I wish we could get a list. I want a list of 2025's IPOs and look at them and see, where they are now compared to their IPO price.
2025 hot IPOs. How about that? Because there's a lot of them that, we didn't even hear.
Yeah. What are Corby and Circle doing today?
Down. Ooh, look at this.
I know.
15.
I know. This is my slow Monday I'm hoping for.
It's not. It hasn't been a slow Monday yet. You have to cancel the slow Monday stuff.
Circle down again, down 5% today. Circle moves with the crypto, right? I mean,
yeah, it does. It does. So I don't know if we're going to do any earnings. We're not on last call today. I don't know that I'm dying to get into any of these. Tomorrow we'll be on last call, so we'll trade Target bullish. We'll see how that goes. And then Nvidia, I think everybody's kind of waiting for Nvidia on Wednesday.
Can't believe Nvidia is so late in the earnings game.
I know, it's crazy, isn't it?
Yeah. Do we still have Target?
I gotta shamelessly self-promote. There's my tall kid. It's the weirdest picture ever. It's a picture from a wedding we just went to, but yeah, there he is.
It's super cute. I can't believe he's 19. And I feels like yesterday when he turned 18 and we were, trying to open up a trading account for him.
I know, yeah.
I'm sure so it's been a kind of a wild it seems like kind of a wild 2025 for him to have seen and traded and get.
Well, no, I mean, he honestly took more of a break than I expected his first semester of college because pledging was a lot. So he it hasn't been wild because he hasn't been doing much.
Yeah. Okay.
Do you know what I mean? So it isn't really that wild of looking at the markets. Now he is more concerned about why the market is moving the way it's moving. And I love when I get those questions. Why?
Well, he has some high flyers in his account. I do think he has some high flyers in his account only because I know, when he turned 18, I bought him 4 or 5 shares of Oklo. There's $100 worth of Oklo. And then I told him to buy Birkenstocks, which that probably hasn't gone well either.
I think you get out of it.
Oklo was good for him because when he bought it was like $12. But he's watched it fall from 200 to 100.
I don't think he's watching it. That's what I'm saying. I'm pretty sure right now when you're like, has he lived through it? No, he's too busy right now. And because he's getting his grades are great. So that's perfect. But he hasn't I'm pretty sure he has no idea what the heck's happening.
I mean, my son's account has taken a hit in these last few weeks, for sure. He's probably lost half of his profits on the year, as far as the year goes. So I think in the last few weeks, he's lost half of his profits.
The NASDAQ is now green.
Yeah.
I'm looking at VIX. Hold on. VIX is still up, but not as much.
It's still high. It's still high to me.
Yeah, it's still up, but not as much. If we would have gotten on here and this would have reversed, I would have been like, it's coming right back down. Yeah. Okay. The other thing I want to talk about before, I know we have other tweets coming in, and I will get back to them. Today was a really fun day for me in my account because I attempted to buy 10 shares of Netflix. I did.
I bet other people didn't. I know you mentioned this last week, like, oh, you buy 10 shares of Netflix, so you'll have 100 on Monday. I hope there weren't too many panicked people this morning.
Well, I didn't panic. I just remember rubbing my eyes because I did look at my phone. I was like, whoa, I'm down $110,000 in one account. And that was because it takes, and you got to keep in mind, that's what we said even about the options. I got rid of my calendar and decided to just buy 10 shares to have it in to see. So now I can sell calls and things against it. But when it opened it up, it thought I had 100 shares
of Netflix at
$1,000. So that's why I was down. I
think it still thought you had 10 shares at $1,000 because 10 shares at $1,000 to $100 would be your $100,000 loss.
Yes. So it thought I had, but it did not price it at 110. It priced it at $1,100.
Yeah. So it looked like it was marking like you were out $100,000 on 10 shares of Netflix.
Correct.
Yeah, because it was marked like you bought those at $1,000 and now it's $100.
And to be honest with you, it is still marking that way. It never corrected itself, and I think it'll be like that today. So I always keep an eye on my net liquidation value, never my P&L day.
Or yeah, $100 from $1,000 100 times.
Yes.
Yeah, $100,000.
Yes, and that's okay because it just was marking that way. But I knew when I look at it. So
are those shares always going to mark that way?
I don't know. I'm going to sell them if they are, I'm going to give it a couple of days just to see how it shakes out.
Yeah, because usually I'll get out of things before the split, and if I want to get in, I'll get in after the split.
But I did. That's why I was glad I performed this experiment, and I'm glad I'm experimenting in my account instead of somebody else's because I had options that went through. So I had options that were long in this cycle. And look, there's no gaming of the system here, but I think they get wonky.
Yeah, then they lose some liquidity. Let's go out to regular Ds. No.
This could be, there's $2 wide strikes out here.
It could be a decent Jade Lizard candidate.
That's what I was thinking. There's $50 there, so you'd have to go
and then the 104.
It's not bad.
No, it's not bad. No, I don't mind. I don't mind it.
So that brings us down to 103-ish. So Netflix hasn't been there since April 22nd.
Yeah, let's do it. Jade Lizard and Netflix.
I don't mind. No, I want to look at some. I mean, we don't need to prolong this by any stretch of the imagination, but only because when you get questions, sometimes you start questioning yourself. I love Jade Lizards. I do like Jade Lizards. We invented them. We know what's happening with them. A lot of people say, why would you not do a ratio spread instead of a Jade Lizard? What were we collecting in there? $2. $2. So you can kind of do that same thing and get to the break even. What do we have? A 103 break even? I can go, and I'm going to get, here, let me get it $2 on.
You got to get $2.
Yeah, you're going to get 170. You have the exact same break even.
Yeah, sure. And you're getting $1.79. Sure.
I don't want to do this. I like Jade Lizards. I'm just saying you can replicate it. So you get to that point where it's like, oh, now our break even's a little bit farther. You know what I mean? So there's nothing wrong with it if you wanted to just do the other side.
No, I mean, it gets you to the same break even, the same credit. And then if it goes up, you're making it all. You don't lose if it bounces back up. So, I mean, sorry, Liz. I don't know. You can if you want. If you don't, there are times where I'll just do a put spread, or I'll just do a put, or I'll do something on the downside, and I won't do that Jade Lizard because I think, what if it bounces up? I don't want to not make any money if it blows through that call spread.
For sure. I just wanted people to realize that, yes. Like, the answer is yes. And I love when people ask this because I feel like that means light bulbs are kind of going off, where they're like, well, why wouldn't you just do this instead of this? They're all versions of the same trade, right? It's just what you're more comfortable with. I will say this gets our break even to close to the same, a little bit wrapped around the same collection. It does hold up a little bit more, but no big deal. Let's just do a Jade Lizard because it's ours.
Yeah.
I wish it wasn't $2 wide strikes.
I just kind of feel like it is kind of close where, the call is $5 up.
I'm not going to lie to you. Let's just do $1 we're going to do $1 out of the way of the expected move.
Yeah. $1.30 on a put, and the 130 put.
Yeah. That brings our break even to, 130, 131. I'm sorry, 101 something.
Yeah. Because now to me, it's easier trading Netflix at $100 than $1,000 for sure. I mean,
for sure. Netflix was something we couldn't touch with a 10-foot pole.
Yeah. Or you could do a spread. But I'm not. I'm not a huge.
If we need the capital back, that's the first thing we'll spread off, right?
Yeah.
Okay, I'm going to go back to Twitter because we've got tweets coming in. Ajit, so 0DTE. Post 1 hour after open, break even 6667 and 6773. So he's big by big, short strangle, collecting 780.
Well, Vol's there, but the market's been moving, so it's the Vol's there. You're getting far.
It's enticing. So I don't know what his strikes were, and I can go back and look, but I'm pretty sure it was.
Nasdaq up 25. We got SPOOS down 4. Like, this is close to where it was at 9:15 when I put on my trade.
So I'm just going to kind of go like this.
Yeah, it is. 67.28. We're $1.50 away.
Yeah, we're $1.50 away from where it was. So this is enticing. I understand why $8 would be a very good collection. You're putting up so much in SPX.
Now, this is the type, and we saw this on the road when Tom on the road was putting these on the road show in Austin. This is something where he is rolling and managing. If we start rallying up, he's rolling up the puts, or moving down, he's rolling down the calls. Like, if you had this on in the morning and SPOOs are down 30, you're rolling down the calls. You put this on and SPOOs aren't really moving much, then 10, 20 minutes ago, we were down 30. You're rolling those calls down. Now we're bounced back up. It's tough because you can get yourself rolled into a pickle.
You can roll yourself into a pickle. But you're right. If you've got that much risk on the table, you have to use defense. All right, I'm going to go back to Twitter, going back up. Oh, volatility snapshot. Here's the layout. This layout shall help y'all gather all your volatility thoughts. Bottom middle is the different VIX tenors, which is very helpful.
Thanks, Ajit.
Thanks, Ajit. I love that. I love getting this. Ooh, and then look at this.
50 times leverage in Coinbase.
Not using the stock Coinbase. They're saying you can get into Coinbase and use 50 times leverage with your crypto. Not saying, and just to clarify, I don't think if you are selling Coinbase, if you're selling a put in this, there's no leverage here. That's just saying in Coinbase, you can use 50 times leverage.
So my question is, like if we're all these people over leveraged in crypto, what does that do for Coinbase itself as a product? Like, what has Coinbase been doing? I'm actually going to go into my Coinbase account. I haven't looked at it. And I don't think I realized if I'm buying crypto because I used to before we had it on our site.
No, I think you have to opt into that type of leverage, Jenny.
Oh.
So I think you can if you wanted to.
Yeah.
So here's Coinbase. Coinbase has fallen from, it looks pretty similar. Like it's gone from 440 to 268. Same with Bullish.
So this is the level I remember in, so yeah, you see back in May. So when the market was falling like early, February, March, I remember I was trading coin a lot back then. And this was right around the level where then I got out and then it ran up to 440. I was like, geez, can't believe I got out at 270, 280. Well, if I was mad about it then, I could get back in now.
Jenny, look what you shouldn't be mad about.
I know. Let me see what
I'm going to go back to SPX. So somebody in the chat was saying the euro closed and that's why we rallied, and it does close exactly at 10:30. We used to say that all the time. Our show usually has some weird pops in it because the European markets close.
Oh, and that was talking about time. Another question I had was when we say all these times, like put it on at 9, close it at noon. We're in Central Time. We're always referring to Central Time.
Yeah, we're just self-absorbed. We refer to our time at all times.
I know. It was funny because my son, and boys, Liz, you've got a 19-year-old boy. So he had an interview today, but the interview was with a company in Colorado. And last night, I woke up during the night. I was like, he's not going to show up. He is not going to show up at the right time. Like he's going to show up because he's on Eastern Time. I'm like,
and was it Mountain Standard Time?
Yeah, so the Colorado, it's a 2-hour time difference. I'm like, he's going to show up for this interview 2 hours away from the correct time. So
wait a minute, Colorado is 2 hours earlier than us.
Eastern time.
Yes.
Then Eastern time. So 1 hour from us.
Yes.
So anyway, last night I had to call him, wake him up to make sure he was showing up at the interview.
Well, I think he would have been early, right?
Well. Yeah, because it was 7 a.m.
Yes.
7 a.m.
Like, where are you, dude?
9 a.m. Yeah, right. It would have been. So it was 7 a.m. there, 9 a.m. for him. It was early.
Yeah, that is early.
Yeah. And so it's funny because we have viewers from all over and so many of these different companies. So this morning he was interviewing with BAE, and we probably have viewers who work there. Probably.
What is it?
Yeah, I don't know if they trade.
Oh, I thought you were giving me the ticker symbol.
I was wondering. I don't. BAE. No, they don't. They don't trade because it's actually like a British company.
Oh, yeah. Then they don't. We know that. We're versed in that.
I was like, so you're interviewing for a British company.
Guilty as charged. We're working at a British company.
I was like, maybe we'll take a trip to London together.
That's pretty funny. I'm going to pop back in. Okay, so this is from The Great Gatsby, and I appreciate this. I refreshed and went down. If you guys had to create a guide on how you pick trades from start to finish, what would that look like? Where do you guys start?
Here, let's each do it. Like you're going to find a trade and I'll find a trade, and we'll kind of walk you through how we might find a trade.
Okay, go ahead, Jenny.
All right. If I'm new and I'm not even familiar with things, just go to the watch list. So watch list and
you want Tasty Default? You want something else?
Yeah, we could be in Tasty Default. That's you know what I like though? I do like 52-week low.
I know you do. That's what I was asking if you wanted me to move this.
Let's see. Let's go in Tasty.
Wait, where is it?
52-week low.
52. Where is it? There we go.
Yeah, 52-week low. And then sort by price. Sort by last by price. Because I kind of like to find a price point that suits the account size, right? So if you're looking for a price point that suits the account size, like here, our account, what do we have? 25, 30,000 in this account. So
I feel like Verizon's a good one. You know what I mean?
There's not a lot of premium in Verizon.
No, but the next thing I'll do, and just kind of jumping off that is, then you'd go over here and sort by IVR.
But nowadays we've got decent IVR. Like maybe for us, even look at like $60, $70, $80 product. Because for our account size, I think those go up a little, see what we've got in that realm. Target, but they have earnings.
Yep. UPS.
UPS. Yeah, let's go to UPS.
UPS, there you go. But if I were, and I agree, I appreciate with what you're doing, and this is exactly how we probably would have started, just because you're chasing high implied volatility. But I would, if I was starting all over again, I would keep them to the most liquid of liquid products. Because I think sometimes illiquidity, especially in a whippy market, when something is illiquid, it can move. And I don't think Target UPS is illiquid. I'm just saying, like, that's why I would stick with like a tasty default list, something like that, because there's some liquidity already there versus like, and I'm not using BAE, it doesn't even have a stock symbol, but when you're going to look at some of those that are very, very, very thinly traded, just be careful, because I do think that's when you can get yourself into trouble.
Right. So, but I'll use the watch list. I do like going on the 52-week low. If you open up December, is there anything in there? No. $9. Yeah, because we're trading almost 95. So you're $5.
Oh yeah, that's a deceivingly, yeah.
So you're at, if you look at the chart, we're near a 52-week low. Well, that's what it said. It's on the 52-week low list, but it's popped up. No, I don't love this. Let's go back. I'm going to find a trade and then you find a trade. We've got 15 minutes. So go back to the watch list. And I guess and sort by IVR. Let's sort by IVR and then you'll see the earnings on the side. So anything with that purple bell, they've got earnings. It's funny. I know Campbell's Soup, there's not a ton of premium, but I don't hate it. I don't. Sometimes you can get some premium if you go to Campbell's Soup. This could be.
Why do they have a 99 IVR?
I don't know.
Oh, because
they have earnings. If you go to December puts, I just want to see what you can get. Yeah, like the 30 put for 75.80 cents. That's not bad. It's using $500 to make $80.
That's not bad. That's your earnings trade. I don't mind putting this in.
No, like if you can get 80 cents. This one, when Liz talks about liquidity, there's not a ton of volume. It's not super liquid. I've been in and out of Campbell's Soup puts. You get $80 using $500. It's not terrible.
It's not terrible. And I know why you have done this activity. Wait, hold on. I'm sorry. Because it's got
you got to go to overview, very top. Overview.
It's got a
decent dividend, 5% dividend. I'll sell puts in there if I get put the stock. It's not terrible. And you look at the low is around 29.
Yeah.
So
I'll ship this.
Yeah, $80 on a Campbell's Soup put. It only used $500.
Yeah, it wasn't using much at all. We'll see if we can get filled. Did we get filled in anything yet today?
Yes, just some cleanup.
Okay, so iBit, SBET, and Netflix.
How low? Look at the chart. How low did Campbell's Soup get this year?
I mean,
yeah, 29.
Probably where our break even is.
Yeah, where our break even is.
Yeah.
So I do like little baby trades like this.
And then the other thing I was going to say is if I were new and I was looking at a trade and I didn't have anything in my account, I would probably go, and I know this is confusing, but I would go to something that's a general market. And I just went to XSP because I know Mike does this all the time on the Options Trading Concepts Live. He constantly has something in here because it's manageable to be in it. Here, I'm just going to go like a random, I'm not going to do a Strangle, but like if you're going to do a Jade Lizard in here, it is manageable because it's smaller.
Mm-hmm.
But then you're in the general market, right? So 23.
Right.
This is crazy. No, there's no way you can go all the way down this far.
What are you trying to do, a Jade Lizard?
Yeah.
It's going to use a lot of buying power for
it. It does use a lot of buying power right now.
I mean, I used to not mind IWM strangles, but I don't hate.
I mean, now that things are down lower.
I don't even hate $10 wide. Like, go to 16 delta, 16 delta, 16 delta, and do a $10 wide.
Hold on, let me go back to delta. 16 delta, $10 wide. You're going to get less for the calls. This has normal skew.
This is from Frank Walsh. Best thing about Campbell Soup is that quarterback Jaden Daniels is now a TV spokesperson.
Is he?
Thank you, Frank.
So now that there's implied volatility back, which I do like, you're only getting 184 for a 16 delta, 16 delta. But I wouldn't mind. I wouldn't mind staying in something that's a general market, be it SPY, be it triple Qs, be it IWM, because then you have some regular market exposure. You know what I mean? Some kind of basket exposure in something that's very, very liquid. So I know you said 16 delta, $10 wide, but what if we got a little bit more aggressive? I'm just going to go $5 wide on the top, and I'm going to go $5 wide on the bottom, $5 wide on the top. So we're getting 177 on a $5 wide instead of 183 on a $10 wide, even though we brought it in.
Yeah, she just brought it in instead of the 16 delta. She brought it in. Sure. Yeah.
So
now we know plenty of people who would just sell like SPY put spreads or IWM put spreads, or just keep churning those out month after month after month.
I know, and it was funny because being on the road, you get a lot of people that come up to you and talk about a lot of things, and I love it because I don't know that anybody. I think our viewers are like snowflakes, right? I don't know, and if it did happen where everybody comes up to us and they're saying the exact same thing, then we'd be like, oh, maybe we should take a look at this. Now, the jade lizard and the spike lizard have gotten a lot of notoriety. The spike lizard is amazing.
Is
if
nice.
You have a little bit of coin in your gene, right? Like It's a great trade. And can we kind of walk through that real quick?
Sure, go ahead.
Okay, so it gets a little bit confusing, but the spike lizard is you start with the big lizard and then I'm going to move it. So I'm going to start with the big lizard. Oh, sorry, I got to sell both. Sell some. I've got $13 and I can buy. So there, I've got a $10 wide call spread and I'm selling one put. So the spike lizard is you just move it all over to the put side. So see, I created the exact same trade where I've got the 237. I'm just selling two puts and buying one put. So I've still got that $10 wide spread and our break even is exactly the same. Brings it all the way down to 226. So I'm going to buy, and then creating the spike will give you the break even of the jade lizard. So then you complete the butterfly.
And now this might sound tricky, but after you put this all in, Liz, go to the analysis page to take a look at it. Can you believe SPYs are up 8 now?
I know, I can't believe it. Well, it's been a wild day. I do want to see where the VIX is, but we only have like 3 minutes left. So here, I know I'm paying 243, so I know I need to get about 130, and I'm going to sell 2 puts. Brings your break even down to 214. I'm going to go to the analysis page right here. Oh, curve analysis.
There we go. Okay, so if we stay in this $20 range, there's the $225 to $245. So it's actually a $40 range. So you've got that $40 range where you could make money. The risk is getting long 200 shares of IWM at $215.
Yeah, so this is the, if I had to pick one common theme of people that come up to me and say they like it the most, it's people that are very experienced in trading and they say the spike lizard has changed our lives.
I know.
So that's what.
Do I close my SPX now? Do I close?
Hold on. I might, mine, and I have quite a few have not dinged yet. We are still up, but not as much.
I'll tell you. I sold that 67.30, 67.20 for $390. It's trading $250.
Oh, what percentage is that?
35%.
So honestly, though, Jenny, 35% on a day when you were tested originally?
Yeah. I kind of agree with that. 35% on a day where we were tested.
Yeah. I don't see anything wrong with I see nothing wrong with taking your loss. I actually liked what you did on Friday where you scratched it instead of trying to be like, I'm going to make money. Because at the end of the day, it was a crapshoot. It could go either way.
Yeah. So, and I probably, in the first one I put on, I sold it for $390 and took it off for $100. So that was less, right? 40, 80, 20, 25%, not even 20, a little over 20%. And then 35% on the second one.
Yeah.
And I don't know. That's not terrible. Like you said, 35% in a day. on a day when you're tested.
It's not terrible, 35% on a day when you're tested. Just want to make sure we got to everybody. We did. Jenny, we are trying to wrap it up on time. So the options trading concepts live are after us, and Jamal and Mike are doing a great job with it. So stay tuned for the boys.
All right, Liz, have a happy birthday. I know JD's not here, but I'm sure you'll be talking to him. Tell him everyone wishes him a very happy birthday. Everyone out there, remember to trade small, trade often.
Laugh with us, learn with us, and watch Liz and Jenny show.
We'll see you tomorrow live from the SPX pit.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on tastylive.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
Yeah, enough fun on the block all day, all night. Is an A and no stress, no fight. Fun on the block all day, all night. We just living it up, yo, that's real life. Wake up, sun grinning through my window. Text my crew like, what's the plan? Let's go. Shirts, wrinkled jokes, twisted, nothing too official. The outside flexing on my bike, out the bell with the whistle. Corner store, pick up chips, 2 shoulders. My board in the slides, trying to dump on the stroller. Kids running loose, auntie sipping lemonade. Every front porch got a beat, yeah, it's homemade. No drama, to see waves of laughter. If we got problems, could we solve them after? Grilling on the curb, grill marks on the shirt. Somebody brought the tools, man, let that Luke word. Fun on the block all day, all night. After with my people, yeah, we feeling alright. Fun on the block all day, all night. Good vibes only, yeah, that's real life. Fun on the block all day, all night. Hands in the air, no stress, no fight. Fun on the block all day, all night. We just living it up, yo, that's real life. A's at the table, crowd tilted sideways. Grandpa talking trash, man, he wild for his age. Kids on the hydrant, street gets wavy. Auntie hit the double dutch, yo, she still crazy. Ice cream truck roll out, yeah, we all chasing. Pockets on lead, but the vibe's still blazing. Cops roll slow just to see what's good. They know the drill, it's a party in the hood. We laugh, we boast, we live, we boast. It's all fam, out here raise a glass, make a toast. Sidewalk royalty, king of my block. Every place got a story, every joke hits the spot. Fun on the block all day, all night. After
Hey, what's going on, everybody? Welcome to Options Trading Concepts Live. I am Jamal Chandler, joined by the one and only Ryan Grace. What's up, man? How you doing?
I'm doing well, Jamal. Nice to see you. How are you?
Good. How was your weekend?
Yeah, it was pretty good.
Yeah?
Good weather here in Chicago, of
It
course.
was, yeah, which is helping my natural gas position. I like it. We need that to come down some.
Had a slew of great NFL games, some close ones. Bears with a last-minute field goal.
Hey-yo.
Well. So, yeah, man, I had a good weekend. How about yourself?
I can't gloss over your boy, Josh Allen. That dude had 6 touchdowns, did he not? Did I hear that
3
right?
on the ground, 3 in the air.
Damn.
2 interceptions as well.
He did.
And I think the Bills also fumbled. So there was that. But yeah, he had quite the performance, which unfortunately for the Bills, and as anybody watching this knows, I'm from Buffalo or I'm a Bills fan. The Bills, as I see it, have to put up 50 a game in order to win. You need your quarterback to score 6 touchdowns when your defense lets any running back go for their record or career day.
Yeah, who, by the way, they did have some running back on he's not even a starter. He's like the third string dude.
Out of University of Syracuse.
Yeah.
Wasn't drafted, maybe, if I'm correct in that. Yeah.
Now, but what I find fascinating about the Bills, honestly, is that they are basically zigging while everybody else is zagging, right? Like, they don't have a number 1 receiver. Yeah. They don't have a guy who they're paying $30 million a year or whatever the top receivers are getting right now. And it's just like, give Josh Allen the ball and let him go ape. It's pretty dope.
Fun to watch.
Yeah. Bears, another close win. It's kind of dope the way they pull them out. Loving it. Look, for a lot of you out there who are in the city of Chicago who haven't chosen a team, you still have time. I'm telling you right now, you still got time. They're looking good. It's been fun to watch. As far as the weekend for me, it was actually the first chill weekend. No football for my kids. So last week, I don't even know if I talked about this a little bit, but my kid was in the playoffs. We had 1 game to go before the championship. We lost. It was a tight one. And it was crazy. They scored essentially on a interception pick 6 where one of our kids slipped and they got it. And that was the only way they scored. And they were an undefeated team. I know. It sucked, man. They were an undefeated team. And we couldn't get anything going on offense. Neither could they, actually. We held them. They didn't score. And the one thing I'm proud about my kid about, not only did he have a sack in this game, which he basically had a sack in every game this year, but actually the best play was towards the end of the game. We had basically, it was a minute and change. We had turned the ball over on downs. They had a nice long run. This one kid broke a run for 30, 40 yards. My kid, who's a D-end, ran him down and lunged at the end to stop him from scoring.
Wow, okay.
They still had the ball with 40 seconds left, but at that point it was okay, they were on the 5 and they just knelt on the ball. So we never gave up a touchdown on defense. And I was like, man, I'm so proud of him for that. He could have easily gave up. The game was over.
Yeah.
And he ran the kid down. It was dope. It was
Never
dope.
quit.
But this weekend, no football for us. It was it. It was just chill, like you said. Enjoy the weather. Went out a little bit. Walked around. I even so I don't know if I told you. I bought like a Bronco like a month and a half ago.
Oh, nice. No, I didn't know.
Yeah, love it, man. And I thought the days of taking the top off were done.
Oh, no.
No, we took them off this weekend. You know, we had to take them off. We took them off. Just the front two parts. So it's like you can take the front two parts off that are in the front seat, and then like the back part, and then there's an additional back part that you can take off, but you got to like unscrew some stuff for that. So I haven't done that yet. That's probably next summer. But we took the top off a little bit. You know what I mean? It was like 70,
you
bro.
have to.
Yeah.
I've done that before with a rental.
Yeah.
So
yeah, it's great. These markets are something else. Just to give you guys a recap real quick, E-mini S&Ps are up on the day currently. It's been a struggle at times, but currently up 9. NASDAQ's up 90 points. Russell and the Dow are both in the negative, so that tells you there's something probably going on with interest rates today, right? Volatility, tiny bit up when you look at the X contract, which I think expires this week. It should, coinciding with SPX expiration. I'm sorry, SPX options expiration. Not just SPX, but equity options expiration on this Friday. Turns out it's going to be a pretty busy week here, Ryan.
Really busy week. Now that the government is back open, I'm actually in the process of just trying to pull up my economic calendar here.
I know, right? Me too. Like I kind of lost it. I didn't even know where it was anymore. I hadn't had to look at it. And all of a sudden, we got a gang of stuff this week. There's some Fed speakers speaking. I actually don't talk about that as much anymore because I don't know how much those really move the markets. Maybe that's going to change given how much there's been some change with the Fed Watch tool when we watch the potential chance for a rate cut coming up in Dees. It actually took a hit last week, I felt. Did you kind of notice that too?
Yeah, absolutely. Where we're no longer pricing in even a 50% probability of a rate cut here. I think it's about 40% right now versus where were we just a couple of weeks ago. It seemed like it was guaranteed. Not so much anymore.
Yeah.
You think volatility in the market, though, maybe kind of shifts those probabilities again back to a potential cut? I mean, you've heard of some stress in the repo market in terms of funding stress or pressure there. You've got a little bit of volatility. I don't think that the Fed is looking at the S&P 500, for example. But let's say you do get some data here that comes in a little bit weaker, shows that there's possibly some slowdown. I mean, do you think that shifts the probabilities?
I think it's very possible. Honestly, I think it's already started to happen, really. I mean, when you look at where we were last week, and as, you know, it was interesting, like watching, I think the theme of last week was essentially, oh, we do actually kind of care about the government reopening. It became a thing as you started to see some of these issues seep into some of these companies that we pay attention to, and eventually the stock market. Airlines was probably the biggest thing. We started noticing that issue there with air traffic control, and that started to create an issue there. Which again, it's something that we rely on, you know, as a country, right? I mean, in general, air travel, and so that, I think, is one of the reasons why we started seeing this shift with all of a sudden it's like, okay, we're going to get a deluge of data and a deluge of data. Is it deluge, whatever you want to say it, I guess. And all of a sudden you started noticing that the chance of a rate cut started to change. Speaking of the rest of the data, of course, this week we got the FOMC meeting minutes from like forever ago. Right, I don't know how much those are going to mean.
Is it relevant? Yeah, non-farm payrolls, is it relevant?
You know what I mean? Yeah, September non-farm payroll is coming out on Thursday, which is a weird day to come up with that. I'm not sure. I don't know if that helps you or hurts you if you're trading expiration, which again, a lot of people still do. We try not to for this exact reason. But and then you got OPEX, and again, also on Wednesday, pretty sure the VIX, the November VIX will expire Wednesday morning, so we could have quite a week.
And you have I would argue, the momentum tech AI bellwether, which is NVIDIA reporting after the close on Wednesday.
Good God, Wednesday might end up being the craziest day of all. Let's see here. SPX, Wednesday, 70-point move expected. Wednesday, you could see that jumps an additional 30 points to 101 points by Thursday. So, yeah, I mean, I think between all of Wednesday and Wednesday night, Thursday might just be pretty damn wild. And then you get to Friday, 115 points expected for the rest of the week here. So I don't know if that's over or underpriced. I really don't. I don't know. I don't know what to make of it.
Yeah, I mean, you're definitely seeing signs of some of the air coming out of the momentum trade, right? The narrative has shifted a little bit to where now everybody is, I wouldn't say bearish, but skeptical of some of the CapEx spending, some of the growth that's been priced into to the AI theme, I suppose. I think that it continues personally, but that doesn't mean that you couldn't see a hiccup on a month-to-month basis, that you couldn't see a slowdown in some of the data. I think into next year, it's still a positive environment, but it does seem like in terms of, you look at the strength in the dollar, you look at the direction of rates here, you look at, and even the way that gold is trading to some extent should maybe give you some pause that you could get a little bit more volatility in the equity market short term. But I still think generally, you're going into a more constructive environment, but wouldn't be surprised to see some more vol here.
Yeah, I think
into December possibly.
Yeah, no, I think you're right. I think that's kind of the way things are setting up. I don't know. I mean, what do you think? What do you think changes that? Like, because you're right. I mean, in the past week, it seems as though people have gotten nervous about how much spending is going on in AI. You're hearing stuff like, and I don't even think this really matters a whole lot, but you're hearing more of like, these people who a lot of other people seem to care about, right? I'm trying to think, was it Peter Thiel who supposedly sold all of his NVIDIA position? Somebody else sold all of their NVIDIA position. But again, they were people who were in so early that they made probably 50x on their money. But it's just like, these things are occurring at the same time, right? The fact that they're out of their position, and people are starting to wonder, is it the end of the AI trade? And you're seeing a lot of the names that struggled in the past week. A lot of those names that we've been following, the Oklos and et cetera of the world, I mean, they've taken serious haircuts here. I was just noticing this one today, like this thing was upwards of 190 at one point, and now it's down to below 100. Oklo, which has been one of the bigger names as far as energy goes, and it's just it seems to be all happening at once right now. Like you said, I don't expect that spending to change, but what do you think? Is there any positive news that could reverse some of these flows we've been seeing? Because you're right. Outside of the Google announcement today, right, that Buffett, which clearly still matters in the market, which is a trip to me, but still matters when they buy something. Outside of Google, a lot of these other names are kind of struggling right now.
Yeah, they really are. I think the positive news first and foremost could come from NVIDIA earnings, and maybe that calms the market down a little bit, or maybe it, on the other side, kind of reinforces the shift in sentiment here today. That said, I mean, I think that as long as you get confirmation that you aren't seeing deterioration of the economic growth, that things are slowing down, we've seen some signs of kind of somewhat of a disinflationary environment on the horizon, or that we might be in at the moment. But if you see that with growth too, I'd be really concerned. When you look at crypto, you might be seeing some signs of that already being priced in. If you think about Bitcoin as a forward indicator for some of this stuff, which it has been previously, we've seen it as a forward indicator for a slowdown in economic data. We've seen it as a forward indicator, certainly for volatility, and we've seen it as a forward indicator, well, I guess along the volatility side, just in terms of just taking down some of those riskier positions. We've got a $95,000 maybe or $90,000 Bitcoin price, which is a sign of that. So again, I think it's still going to be positive over the next 3 to 6 months. But if you get some signs of a slowdown, that would be more of a concern. But I guess on the other side of it, to answer your question, what might reverse it is just that you're not seeing this whole thing fall apart. NVIDIA earnings are okay, or maybe on the kind of Fed side, the policy side of things, you get some assurance. But I don't think that you're going to get any assurance out of the Fed until you get more volatility in the first place.
Yeah, it does kind of feel that way. If you guys are joining us, it's Option Trading Concepts Live. I am Jamal Chandler, joined by Ryan Grace. Mikey Trader Mikey B is out today. He'll be back tomorrow. But in the meantime, I know you have some slides. I got questions too on Bitcoin stuff and MicroStrategy, et cetera. But I'll let you go through your slides first, and then we'll get back to that and get back to platforms.
Yeah, let's do that. Let's take a look at a couple slides here today, highlighting some of the weak performance that we've experienced and the volatility as a result. We'll go through our trading ranges, but I do think it's fair to start to question whether or not, this is the end of the cycle. That doesn't mean that you just go straight down every single day, but I think it does shift how you think about the market and how you might be trading this, where you're probably looking to sell some strength and lighten up on some positions until you get, a shift otherwise. But we've had this daily price momentum that's been bearish for seems like a couple of months now. Have to go back and check when that actually was triggered. If I pull it up on my other screen here in real time. We first got that signal right about a month ago, middle of October. What I will caution is that weekly momentum has now shifted to bearish too. Is what it is, not what I want to see happen, but I think it's important to pay attention to. We'll see where we close this week, but as of right now, we've seen that with Bitcoin. We're not quite there with ETH. We are there with Solana. And you just don't get those signals all that often. So for example, and I just measure this via exponential moving averages and crossovers. It's on an 8, 13, and 21-day period. It's maybe it's rudimentary, but it's a way that helps me stay on the right side of the trend. When I look at the last time that we saw that weekly price momentum shift bearish, so these moving averages cross over and then price trades underneath it, that was back in, looks to be about January of 2022, end of 2021. You definitely had different, circumstances at that point in time. You did eventually get the FTX collapse. That was
late 21, right?
Yeah, really into 22, and then we ultimately bottomed out there throughout the rest of the year, I believe in the spring. But that's the last time that you saw this price momentum shift. So I think it's worth paying attention to. It doesn't mean that we couldn't get back into neutral territory by the end of the week and you could be back at 100, maybe, who knows. But you have to respect the price action here. If you've been in this from 75, you've had an opportunity to take some profits. I'm still bullish in this, absolutely, over the next 6 months, 1 year, 3 years, et cetera, long-term position. But again, want to caution that we're seeing some pretty clear signs here in terms of what we measure. That said, performance is pretty bearish, has been across the board here for crypto, as we mentioned, maybe a forward-looking indicator, starting to see a little bit more volatility in equities, but not necessarily seeing the same momentum signals in the NASDAQ or in the S&P that we are seeing in crypto. All that said, if we jump to the next slide, last slide here that I've got is just looking at expected moves given that 1 week, one standard deviation move that we calculate via spot price and implied volatility. So implied vol is a lot higher. Sentiment is bombed out in crypto here. If you look at kind of the different fear and greed indexes, you're really close to pretty crappy conditions, a lot of fear in the market. You see that reflected in vol here as well for implied vols for Bitcoin and ETH. ETH on a 3-month basis is as volatile as it's been. Options are a little bit more expensive, so there might be a trade idea there. But when we look at the expected moves, 6,500 for Bitcoin, get you back to 100. If you're long here, you're trying to buy somewhere around 93, 89, those would be levels I'd look at. I'd probably want to take some profits into 100 if you get there. ETH, same thing, 27.82 is being priced into the downside, so a break of 3, which we haven't seen yet. Doesn't mean that we won't. Solana has been a really poor performer, but can be very volatile at times. Same thing with SUI and XRP. I wish there was a better takeaway for you, Jamal, but we've been in this market or these conditions in crypto for the last month or so. Really looking at this as okay. Let's see if you get a bounce. Let's see if some of these key levels hold. At that point, kind of looking at 108, 105 in Bitcoin, 3,500 in ETH. They haven't held, and it's continued to trade a bit weaker. I don't think it just goes straight down, but you probably think about if you're long in these areas, low 3s in ETH, do you sell out of some of that? You look for a trade on a bounce, but it's maybe an environment in which you're selling any rally for now until that changes.
Well, you can correct me if I'm wrong. And I just thought about this a little while ago. Like you mentioned some of these other times we talk about 2021, some of these other times where things are bearish in crypto. But correct me if I'm wrong. The crypto's weakness right now is not related to anything any issues that crypto have, right? I don't know any major stories right now that's causing crypto to be weak. I don't know about any FTXs or any other things like that, or it seems as though it's been more just because the market has been weaker. It's just been, it's a little bit more volatile in the weakness than the market has. But I don't know any specific crypto story that's causing crypto to be weak.
Yeah, I don't see any, risk-off headlines per se. I think when you look at what's been going on in terms of how this is traded over the last few months or so, absolutely have had bigger whales that have held positions for a very long time, people rightly so, taking profits at all-time highs, whether those all-time highs were first at 112, 115, 120 or so. You've seen a lot of selling there. The market has absorbed a lot of that flow, though. There were reports earlier, months ago, of 8 billion, 9 billion or so being sold via Galaxy's desk, and that was a big, apparently, OG whale holder that's been in it for a long time. On the other side of that, you see the ETFs kind of absorbing a lot of that flow. But you've definitely had a lot of selling pressure kind of as an overhang in terms of people that have been in the market for a long time. Like when you look at flows, there's obviously been a bit of that. You've had kind of this ebb and flow with these digital asset treasury companies that, kind of live by the sword, die by the sword. So when they're buying, you're getting all these headlines. There's a lot of leverage that's being employed at times too in the market. That's very bullish. And then the opposite of that is where we are now. You go back to the beginning of October, and the market really blew up in terms of the leverage. Really got taken out of it. We haven't quite recovered, and I think that recovery was, for many people in their minds, myself included, as we talked about this, predicated on, all right, what are we going to see out of the Fed? What are we going to see out of this potential trade deal with the U.S. and China? What are we then going to see out of the government reopening? And you got kind of cold water that was poured on each one of those. If anything, you got kind of a bearish move out of the Fed in terms of a repricing of rates. You got more of a truce between U.S. and China, and we don't know whether that's going to hold. And you haven't seen a ton of liquidity come back into the system just yet. On the horizon, you've got QT ending, possibly, most likely have lower rates over some time frame. If you read between the lines, I think last week I saw a headline where there was a closed-door meeting between the Fed and primary dealers to talk about repo market stress. That doesn't happen all that often, so maybe there's something else that is coming in terms of some relief from the Fed policy perspective. But that's what this trades on the margin. It's digital gold, I guess, is the best way that we like to describe it. It's highly volatile. And so in those environments, it's going to do really, really well. And I think at least for now, you're in the opposite of that environment from a policy perspective.
How much do you think crypto cares about whether or not the jobs market is good or bad, or whether or not we actually do this 25 basis point rate cut?
I think it cares in terms of the read-through. It could be more volatile in the short term, of course, but if you get bad news as good news in the sense that you get looser policy, you get more liquidity. Let's just say, what takes you from where we are today to an expansion of the Fed's balance sheet, those things over an intermediate to long-term time horizon are positive for crypto. It's going to trade really well when there's printing. Let's say that these $2,000 checks, that gets approved, you get the stimmies, the government is expanding, or the Fed is in terms of the balance sheet. I think that's very bullish. But could it go to 80 in the meantime? Possibly. But I do think it matters if it, kind of implies the Fed's likely to cut sooner than later.
I feel like that is not going to go well. Seriously, politics aside, because again, everybody knows I don't really pay attention to politics, but if you remember, the one thing they talked about in 2020 and early 2021 was how much money was being pumped in the market from these stimulus checks, right? And that became inflationary. And lo and behold, we saw what happened to inflation over the next year and change. I wonder how that's not going to do the same thing.
Yeah, I don't know what the probability of this actually happening is, but I think we've seen the playbook for this.
Yeah.
Right? That kind of the way that things are set up, right? You have almost this kind of howling out of the middle class. And people are just more prone to take bets. They're a little bit more, we're going to bet on sports. We're going to bet on crypto. We're going to bet on tech stocks. I don't think that money is going to go into savings necessarily,
Nah.
A lot of it
free money that you just acquired. Why would you put that in savings?
All right. I think a lot of it just finds its way into assets, and you see asset price inflation. Would be surprised if it didn't, put it that way.
Yeah. It's
not banking on it, but let's just say that happens. I think this is probably the result.
Yeah. It definitely feels like that. Yeah, it's been interesting watching this crypto move here. And we can go back to the platform. because you see it started basically around the beginning of October. And we probably about 25% haircut as of right now. And again, it hasn't been because of any, FTX type situation or, Binance, somebody getting arrested. It was none of that. It's just been general weakness, which again, I mean, you can personally, I mean, look, assets, you don't want assets to always go up. You need some correction to be able to get in at pretty cheaper prices. And it needs time to breathe and everything. We're not just talking about crypto. We're talking about the markets. We're talking about gold, like all of them. And I think when things are down, it's like, it's funny. And I don't know if this is going to be true anymore, but it's like what I always think about when I think about my fantasy football team. Every week that goes by, whether I win or lose, as long as somebody isn't injured, I'm okay with that. Yeah. Right? Because that just means my team underperformed a little bit this week, but they got next week a better chance to prove so. I think when you have a situation where you have an asset that's struggling a little bit, as long as there's not bad news behind it, it's okay.
Yeah.
It is what it is.
I think, look, I am very bullish on this in the long term. I think it goes to much higher prices. I also think, you have some tradable opportunities in the near term. Like I said, I would look for the 93, 89 range, maybe get a bounce off of that. The big level underneath there is kind of that air pocket back to here. It's on the chart around 75, where you were in April. That was as the market was wrestling with what's the impact going to be of all of these retaliatory tariffs. This reset. I remember there's that picture of Trump. He's got that big flashcard or whatever, tariffs on everybody. So that's what we needed, I guess, at the time to take us to 75,000 in Bitcoin, and you rally ultimately to 126. You've pulled back here to, let's just call it 90. I think we're a little bit higher. Does it go to 75? Maybe. But I don't know, after this move, what else you're looking to play for, unless you get an environment in the economy that just completely breaks down. I mean, I don't see it going to 75. Maybe it gets there, just technically speaking, but you also would imagine that there's some very key levels where you'd see buyers step in with a longer term perspective.
I'm sure there's some people who are like, well, I mean, dude, I was really interested in 75 and it got away from me. I'm not interested in 93. I'm just going to wait to see if it goes to 75. Outside of those people, is there any other cryptos that you're looking at right now where you're like, this is a pretty decent price in this area?
Yeah, there's a lot in DeFi. I mean, again, sentiment has been very, very negative, and in crypto it can shift. I mean, either the world's ending or it's going to all-time highs every single day. There's no real in-between. And so you're on the world is ending, crypto is dead end of the spectrum right now because it just hasn't gone up every day.
It's kind of like Bears fans. They either think, the team sucks and everybody needs to getting rid of, or they're going to the Super Bowl. Yeah. That's kind of how it goes.
Yeah, you want to win every single game. We're going undefeated this year, and we're going to win the Super Bowl. And if that doesn't happen on week 3 sort of thing, exactly. You're pissed off. I'm there as well as a Bills fan at times. But, yeah, I mean, outside of that, where I have, I guess, where I'm not necessarily adding positions, but where if it gets a little bit weaker, I'll add things like Uniswap. We don't have it on this platform, but Aerodrome, another decentralized exchange.
What is this?
So Uniswap is Uni. This is a decentralized exchange. What's interesting about this is they just recently put forth a formal proposal to activate what's called the fee switch. So in in Uniswap's code base, there's this fee switch, which if it's flipped on, will allow the protocol to pass some of the fees that are generated from trading to the treasury of Uniswap so that it can burn those fees, buy back the tokens and then burn those tokens. So it's kind of like a stock buyback. So if you have this exchange that generates revenue, all the revenue today goes to the people or the institutions that provide liquidity on the exchange. So they get the 30 basis points, the 5 basis points, whatever it is on the notional of the transaction, that goes to the liquidity providers. We talked about that with how you can generate yield through pools. The fee switch takes, I want to say, 5 basis points of that, and it uses it to then, or will use it to then buy tokens, the Uniswap token that's outstanding, and burn those tokens to reduce the circulating supply. So very similar dynamics to a share buyback.
Okay.
The token holders accrue value via this process because there's less tokens outstanding. Presumably over time, they generate more revenue, they burn more tokens, et cetera. So there's a little bit of a flywheel there. We wrote about this over the weekend, so anyone can go to the Tasty Crypto website and check out the newsletter, and you can read the article there. But a little bit of a base case and kind of bull case model around where could you get to by 2030 if you obviously see continued adoption of decentralized exchange and DeFi, but you need to see Uniswap growth. But if you were to see that, which I think is a fair bet, what would it imply in terms of the burn and the token supply reduction? So that's interesting to me because it has a real catalyst and it's a real thing. Otherwise, I think it's just looking at, is there going to be a resurgence of DeFi? I think so. So if some of this stuff just gets absolutely smoked, then there's probably a trade there.
So you said, but this Uniswap is not the same Uniswap you were talking about.
It is, yep. So that's it. Yep.
Okay.
Yeah. So that's the Uni token there, Uniswap. So you can see when that announcement came out, it's retraced a bit, but you can see it's about $5. The announcement around the proposal still has to be voted on in December, but the announcement comes out and this rips to $10. So it kind of immediately prices this in. It's pulled back a little bit. I think it would be a different story if we had slightly more conducive market conditions, I guess. But the other piece to this too is to make up for the prior years where they haven't been able to do this or this hasn't been in place. They're going to do a one-time burn of 100 million tokens. So that's going to immediately reduce supply by about 16% or so, which is what you saw with the repricing there, where it took you to almost $11, $10 and change. So I think long-term it's very bullish for Uniswap, but again, you need to be in a better operating environment right now.
Yeah. Yeah, I mean, it's obviously like some of the lesser known tokens are going to struggle a little bit more than the Bitcoins and the Ethereums of the world, which we've seen a little bit. But I mean, these are the ones that I've kind of had my eye on. Some of the ones that I probably stepped in a little bit earlier in the summer that now I can look at better prices. So that's kind of the thing that I've been focusing on more recently. But yeah, it's what I find funny is like somebody even mentioned it on the chat here, which by the way, please come in with your questions. We'll be getting to the chat in a little bit. I saw somebody mention crypto winter, and that's kind of funny to me because down 25% is not crypto winter, guys. I mean, it's just not.
No, this is a correction, absolutely. Typically, we've seen corrections between 25, 30%, and you're still within a bull market. I track the momentum signals, as we mentioned, in terms of the moving averages. You have moving averages on the screen there. When those start to break down, you want to pay attention to it because that is then a scenario in which, okay, maybe that 25% correction turns into a much larger drawdown and maybe it struggles for a bit. That's what we're kind of seeing right now. But at the same time, I think what makes this really challenging, and it's never easy, but what's made it a little bit more difficult here recently is that there are clear liquidity catalysts on the horizon that could positively impact this asset, which we know historically have. If we get to stimmies, again, very low probability, but you get the end of QT in December, that's step one. You get balance sheet expansion possibly. You get a little bit more clarity on rates. Those things I think all on the margin are pretty positive and are still out there. It would be odd to me, Jamal, if there was an announcement around a new program. I don't think that they call it QE, but if the Fed took some actions to kind of reinflate things here, or to possibly resolve any potential issues, which we talked about, some backdoor meetings, closed door meetings, between the Fed and the primary dealers. If something happens, it would be odd that wasn't on the margin positive for crypto.
Yeah, because they have been talking about the Fed drawing down its balance sheet, right? Like that's been the talk.
Yeah, we've seen the balance sheet reduce from closer to $9 trillion down to like $6.5 trillion, maybe not quite 9, but it's come down quite a bit. I mean, we've had this quantitative tightening policy, I suppose, if you want to call it, in place. What really it means is that as that debt that the Fed holds matures, they don't reinvest. They just let that balance sheet roll down versus actually being a buyer of bonds in the market. So when they're in the market, that's definitely more liquidity coming into the system, and we've been in that environment for a couple of years now. That's ending. You have rates going lower, so not the only thing that matters, but that does have an impact on crypto.
Someone was asking, is there any way, you were talking about the idea of whales mostly being sellers, and they were just curious, is there any way to see who is selling somehow?
You can track wallets and everything on chain in terms of, the biggest wallets, the whales, so to speak, and then are those tokens even moving to begin with? What amount or percentage of total supply is dormant? What amount of crypto, but Bitcoin in this example, has been dormant for X period of time? Is it moving? Where is it going? You can see whether those wallets that hold a lot of crypto are sending that to an exchange. So if you see that, that's a signal that they're going to sell. So if we see a lot, just generally speaking, it doesn't even have to be like whale wallets or I'm tracking this wallet or that wallet. If you just see the flows moving towards exchanges from wallets that haven't been very active on chain, it's probably because they're going to sell. The opposite is true too. If we see a ton of flow coming from exchange wallets, so we know that on chain, they don't have just one, but big exchanges like Coinbase, Binance, they have hot wallet addresses. There's hundreds of millions of dollars of crypto, Bitcoin held at these addresses. And if we see that moving out of those single addresses to individual cold storage addresses or just individual wallets, then that's a pretty good sign that, you could be in a bullish environment. People are buying off exchange, moving it off the exchange and holding it. So that's one way to look at it. But there's some different software that's out there or just websites that you could use. Arkham, I think, is one of them. Let's see. Yeah, Arkham is one where Arkham Intelligence or intel.arkham, ARKM.com, intel.arkm.com, is going to give you a dashboard and some tools to be able to track this. I don't look at it that closely, but this is just some of what you see in terms of, when there's nothing else to report on. These big wallets are moving. But this stuff is always ongoing.
Intel.arkm.
ARKM.com.
ARKM.com.
Yep.
Okay.
Yeah. Sure. So that'll get you the Arkham Intelligence dashboard, and that'll allow you to track wallets that at least are known to be associated with certain institutions, certain entities. We've talked about like jump trading at one point. They're dumping the tokens over the weekend ahead of some volatility like a year ago around the yen dollar kind of depeg or unwind, the carry trade unwind, not depeg. But you can find those tagged wallets and you can see how much they hold, what are they doing, if you want to do that.
Andrew Cartato wants to know what you think about the stock Circle. Obviously, the stock just came out with the IPO earlier this year, and all I know about them is they are I don't remember. They are a stablecoin holder?
Stablecoin issuer.
Issuer.
Yeah, stablecoin issuer of the stablecoins in circulation. When you look at market cap, the biggest by far is US dollar Tether. So that's Tether, a company I think people have heard of. You've probably seen reports around. They're super profitable. It's like Tether and OnlyFans. Who's the more profitable company with no employees and billions in revenue, right? So Tether is the biggest by far. Circle is the company behind USDC.
Okay.
So that's in the U.S. probably the more popular token. It's definitely gained market share as well. There's an interest rate component to this. So when you think about these companies, Tether, Circle, anybody that today is able to just issue dollars in tokenized form, but then generate a yield off of those dollars and keep it all for themselves, they're going to make a lot of money if they can keep their operating costs down. That said, the risk is that interest rates move lower on them. Their margins are not as wide. So you do have that possibly playing out. But I think if you just look at this and you say, okay, are you bullish or bearish on stablecoin growth and Circle as a major player? Absolutely, I'm bullish. Now, what's the correct valuation of that? Well, I mean, this IPO'd, a few months ago. If my chart's correct, we're at like 260, now you're down to 70. Yep. Probably a bit overvalued at the time, a lot of excitement. You eventually get an unlock period. You get maybe some selling pressure post-IPO. I don't know what the price is, but yeah, it seems to be a little bit oversold here short term. I think this is an interesting area. Do you sell puts at 50? I don't think it's going to zero. It's come off at 250. I think this reflects what we see here in crypto broadly. So I'm bullish on this. Is this the best way to play it? I don't know, but certainly bullish on this. And there aren't that many crypto equities that you can invest in. You've got Coinbase stock. You've got some of the different miners. You obviously have these like crypto proxy vehicles, these investment companies like Strategy, Circle's another way to play it. How much crypto exposure do you want is the question. I'd prefer to just hold ETH here. I don't own any Circle, but like if you look at the options, maybe there's a trade where you can lock up, you say, hey, I'm pretty bullish on this stuff. I'm going to go out in January of 2027. And it appears that the lowest strike you can sell there is the 45 strike. So you're more than a year out. You take in $600, your buying power is 1,100. It's pretty good return on capital if you want to tie your capital up that long to make a bet that maybe Circle doesn't go underneath 45. I don't know. But bullish if that helps anyone.
Yeah, strategy is at October 2024 prices at this point. And I saw this morning they bought more crypto, not even more Bitcoin. I mean, they are not changing the strategy.
No,
they are still doing the same as they've always done.
Yeah, it just depends on your time horizon, right? If you're looking at something like Circle or Bitcoin or any of this, and you're saying, well, what's your view on the next week? Well, I think you see probably, the path of least resistance is lower until something changes. Yeah. But whether it's AI, it's crypto, it's robotics, it's nuclear energy, I think that's what you want to be in over the next few years, over the next decade. Doesn't mean you buy it today, but I don't think the story's over.
Yeah.
Right? Like I think stablecoin market cap growth goes to like $1 trillion by 2030. It's $300 billion today. That's what I think about Circle.
Yeah. Yeah. I mean, right. I don't believe the story is over, and I think that's been the sort of sentiment in some circles, if you will, no puns intended there, but it's been the sentiment in some circles over the last week or so, like, is that story over? You've seen the haircut and a lot of, not just crypto, obviously, taking it back to all these other things we talked about, the Oklos of the world. You've seen how they've been beat down, obviously, even bigger names, right? Meta has really taken a beating more recently, and the market is kind of showing you how they feel right now, but again, it's right now.
Right.
Well, we'll see how this all...
And correct me if I'm wrong, but the Meta repricing here stems largely from taxes. Is that right? I mean, this isn't like no one's using our services, we're not bringing in any revenue. I believe that came out in the earnings, and you have the gap down there.
Right. Don't worry, people will be tripping all over themselves to buy this at 800. They don't love it now at 600, but that's how the market goes.
Right? Like, I would love to buy Tesla at 3 or lower than 3. I think you want to be long Tesla over time. Right. Doesn't mean you buy it at 400 or 500, wherever it was. But I think there's like a bid in the market for these companies if they go a little bit lower. And then, you bounce and you missed it. And we go on eventually to new all-time highs, I believe.
It's usually kind of how it works. Speaking of the different companies, could we check out the list of what everybody is trading today, what all the Tasty traders are looking at and seeing and trading today, because that's always fascinating. Top 20 symbols here. Speaking of, Tesla's number one, 16 IVR. Google, of course, with the big move today on the heels of Buffett purchase at 33 IVR. NVIDIA, Amazon. I mean, there's no surprise here in a lot of these names. Tesla, Google, NVIDIA, Amazon, Apple are some of the top 20, the top 5 of the top 20. And then it still cracks me up that people trade Goog versus Google. And I mean, Google's the A shares. I don't know who and why trade Goog, I should say. I don't know why. I mean, I guess if you're selling, it doesn't really matter, but it's the same thing. Like, are you trading both? I don't really know. Whatever.
Yeah, I haven't followed it that closely, but that's a good point. So you have the A shares and then the...
Yeah, and again, one's for voting, one's for not, but it's just always kind of interesting to me. iBit, of course, is up there, number 7, Palantir, number 8, another stock that's taken a hit more recently, but I'm sure it'll find its way back. Micron, 9, Meta, 10, Micron 75 IVR, and they already didn't they have earnings? Am I tripping on that? No, they have not. This is part of the reason why but wow, 75 IVR in Micron. iBit 66 IVR. Netflix, AMD, SoFi has been on the top charts for a while now. Of course, is this TSL? I don't trade any of these things anymore. I used to love names like this, like 2 times or whatever, 3 times.
Okay, yeah, some of the inverse, CTF, CTNs.
Never really traded any of them. I know a lot of people like trading them, but whatever. Robinhood is up there. MicroStrategies, as we just talked about. GLD, of course. TQQQ, Microsoft, CRWV. The top 20 names essentially are tech-related names.
They never change. This would be the same list as last year before.
I wonder. I mean, again, and one of the things I kind of noticed in a small way last week was there was a little bit of a rotation into some of the lesser traded names, like the consumer staples type stuff. There was a little bit of that rotation as you saw some of the selling happening in a lot of the names we just mentioned. But those names don't find it to the top traded list, at least not for Tasty Traders. It just doesn't happen.
Nah, they just don't have the volatility that I think we're hungry for, Jamal. I like crypto because it's volatile first and foremost. If it didn't move like this, whether to the upside or the downside, I probably wouldn't be as interested. We wouldn't be interested in the small-scale nuclear reactor stocks, even if those things don't really exist today, right? We're not trading that. We're trading the volatility.
Totally. Goog, and do they have a divergence 287.56? There's only a 50-cent divergence. I'm not even really sure. Is that 40-cent difference? I don't even know. I don't even really care. I just trade the A shares. I don't really know. I'm curious to know if anybody does trade for a divergence. Really not a big divergence here. We got about 10 minutes left in the show. Any questions you got, we will go through in the chat. Otherwise, we're just going to do our own thing. Markets have reversed a little bit here, and this has been the day. I don't know if the market is sort of. I feel like the next 3 days could sort of be one of those situations where we sort of trade sideways as we wait for data to come out, as we wait to hear from this FOMC, which again, those meeting minutes are from a while ago, and there's a lot of things that I would say have not happened since they had that meeting, which a lot of it is data. I don't know how much you can really take it seriously. But, and then of course, we got the jobs report coming up too. So I feel like we could end up trading sideways as we wait for those things to come out.
Do you think there's a world in which, given the impact of AI, you actually see jobs data where it would deteriorate in a way that you normally would, or maybe it wouldn't, but because of the AI impact on labor, it throws kind of what you would normally expect out of the Fed off a little bit? Like, could you, I guess here's my point. To rephrase, could you be in an environment where you have a relatively strong economy given the traditional measurements of just labor markets, or productivity, maybe more so, given productivity on the back of AI, where the Fed still has to cut rates? Like, do you think there's an environment in which AI kind of distorts things?
Distorts the jobs report?
Not so much anything in the short term here, but one in which where we would actually be in an environment where the Fed has no choice because of the financial system to keep rates lower and to almost stimulate, even though from a productivity measurement, things are increasing, right? So I guess what you're seeing is you would see a breakdown in the labor market as it pertains to human labor, but you could still see record earnings and productivity, record earnings out of companies, but productivity growth out of the economy. But the Fed would have to almost step in to, I guess, alleviate some stress in other areas.
I think that's exactly where kind of we might be headed a little bit. And again, I mean, there are going to be some jobs that are culled for the most part because of AI. But just like everything else in human history, we find a way to adapt and we find new jobs, right? Like the fact that we have the jobs that we have right now 50 years ago was not a thing, right? And so I just think just from that standpoint alone, there are going to be a lot of jobs that are eliminated, but they're going to be done a lot more efficiently, and eventually humans will just find other things to do, or maybe even former things to do, whatever that may be. But I think we're probably going to have to start looking at the jobs report from a different lens going forward because of the fact that AI is being such a disruptor, if you will. But it's really, you can consider it a disruptor in some ways. You consider it advancement in others, right? So, yeah, I think it's very possible. And the idea that they'll have to keep rates low because of people who are, struggling job-wise, that might just be a temporary situation until those things start to change out. Or maybe we just shift the way that we look at everything, and the bad jobs report is not as bad as it may necessarily seem. It's just changing, Or we start including how many AI jobs there are in the jobs report.
Right, how many robots make up the population?
Yeah.
That's the really wild thing. If you go out a little bit farther, the humanoid robots replacing the workforce, starting with factory workers, but almost all engagements. I mean, you see what Tesla and many other companies are doing. I think the goal is let's put one of these in your home at some point from a consumer product lens. That's where it could be obviously extremely disruptive. Tough to even think about how to price that in.
I don't think I could sleep well at night if I got a robot in my home, dude.
Right? It'd be weird.
I don't know, man.
People said they wouldn't
when
be
you wake up in the
comfortable.
middle of the night and it's like standing over you. You know what I mean?
Right?
Like,
We've seen too many of those horror movies, but people said they wouldn't be comfortable getting in a stranger's car. And now, it's commonplace. UberX, Uber, I think you adapt. There are still the horror stories where like this Uber driver was a serial killer or this, there's always going to be those edge cases. The robot did kill this person. It went dark quick. But I think generally, people will adopt this stuff.
Yeah, no, there's no doubt about it. I'm just saying I'm not going to be the first or the 10th or the 100th maybe. I'm going to be way down the line.
I'm with you there.
Seriously, I really am. NVIDIA, of course, is the big dog of the week. You talk about, and I've got a couple of things on here. I got a calendar and I also have a diagonal, but again, multiple days, at least 2 days away. So all of this premium is not fully earnings premium, but nevertheless about $14 expected move, a little under 10% for the week here, about 8%, I guess you could say, for the week. I don't know. I mean, it's funny. I put these trades on actually when the stock was trading like down on the lows last week, somewhere around 170 something, I think, or close to, I thought, is 180. So I put these trades on here, targeting the 200 strike. I normally wouldn't, I was actually not going to do anything because most of the earnings plays that I had done, I usually do calendar call spreads for earnings, and most of them really didn't do a whole lot. I can't remember I think Amazon worked, maybe Google worked, but the rest of them did not. Meta obviously did not. Microsoft obviously did not. And again, just talking about the big names here, because what I noticed from the few earnings that I played, especially these big ones, they probably beat, but they didn't smash, if you will. And so as a result, the stocks were either punished or just slightly lower than the expected move. And that doesn't necessarily bode well for me, like when I'm trying to play for the big upside, splash play, right? And I just wonder if NVIDIA is going to be the same situation. If it's going to, again, I don't think the stock's going to, I don't think we're going to see a core weave type move that we saw, right, for earnings. I don't think it's going to be that for NVIDIA. But I do wonder, again, a lot of the MO for a lot of these stocks and earnings has been just blah.
Yeah, I mean, they've run up so much over the last 6 months or so. If you miss the top, and I think this is true of Bitcoin or true of crypto as well, if you don't have any further catalysts at this stage, given the gains that people do have in there, that itself is probably a catalyst just to take some profits in the short term at least. In this environment too, where volatility is picking up a little bit.
Sorry, I just noticed this question somebody asked. I didn't want to miss it. They asked way early in the chat if you're buying SOL at 135 level or waiting until the sub 100 fib retracement.
I haven't bought any Solana here recently. I mean, of course, if Solana goes, look, first of all, very bullish on all of this stuff. Time horizon is 1, 3, 5 years. I think Solana in a bull market where the Fed is spraying it down with the money hose, which we could still be in, you could see a longer cycle. And that's the other thing that I failed to mention earlier, where people really anchor in this 4-year cycle. And because of that, like you are there right now at this point in time where it should be, if it is historically accurate, the time to get out. So I think that's weighing on some people. But let's say that that's extended, or let's say that you do get to the point in time where this is just does the crazy shit, as I've mentioned. I think Solana's a 10x. I think it goes to 1,000. Doesn't mean that it stays there, but I think you see much, much higher prices. So if you get to 100, I'm a buyer. Haven't been buying any here, but if it goes a bit lower, probably will add some for a trade, but not looking at it from a technical kind of like fib retracement or anything like that.
And that's essentially the April low, which everything was pretty low at that point in time. So that 100 level.
Yeah, I don't think you get there given the catalyst on the horizon, what you needed to go there in the first place that elicited the volatility. But if you do, I don't know if you stay there.
Yeah,
I would
if you get
imagine
there,
people are
I
like,
think a lot of other things are going to be down too.
Right?
Just, quite honestly. For lunch today, it's an Indian spot, 9 cents. Yeah, like 9.
Yeah,
sense.
I'm ready.
Looking forward for it.
Starving.
I'm looking forward to that. Is there any assignment risk with SPY at 21 DTE theoretical? I don't know exactly what position you have on, but there's always potential assignment risk, especially as you get closer and closer to expiration. It just depends on how deep in the money your position is. So, not really sure.
I guess what? Look at extrinsic value. If you don't have any extrinsic value, there's probably a good chance you're going to be assigned.
There you go. Yeah, I think I've gotten most of these questions here.
What else are you trading, Jamal? I got some questions. What are you in right now?
Me, I really got a lot of things I'm sitting on that I need to get paid on, really.
Okay, so you're going to sell into any strength, as we talked about, and kind of reassess. Is that fair?
I need the strength first.
Okay, yeah. I'm in the same boat.
Into it. As you can see, a lot of my positions are somewhat red, but again, some of them are diagonals. They are, a lot of my book right now is a January, December, either diagonal or calendar call, outside of the few things that I'm short, that are kind of in the money. Like we talked about some of these energy names, the IonQs, the IRAs of the world. Those are the ones that I've, they're sitting at these sort of near or at the money situations on some of the short puts, or way out of the money, like the IonQ. I think I'm short the, where's my position? Oh, no, here it is, the 55. So I got a couple of these that kind of are annoying, but I got time, so I don't necessarily need to worry about anything. And I feel like we're going to get some clarity one way or another this week with all this data coming out, with NVIDIA coming out. I feel like this is that kind of week, so I'm just kind of waiting on that to happen. I'm looking forward to it.
Yeah, I think when you look at this stuff too, this is, again, true of crypto. Just take it for granted it's going to move like this in the upside. You're comfortable with it. It doesn't feel one way or the other. This elicits a much worse emotional feeling when it moves by the same amount just to the downside. But I mean, you look at the average true range in here, like IonQ is moving on average on a weekly basis about $10 a week right now, and it has been for quite some time. And so it feels crappy today, but you could easily be right there back at $60 tomorrow, sort of thing.
That is the hope, Ryan, for sure. Guys, we can sit here and talk to you all day, man, but it's our time. We got to roll. Thanks for watching the show. As always, if you want to reach out to us, you can do that. On Twitter is the easiest way. I'm at Jamal Chandler. Mike is at Trader Mikey B. Ryan is at Ryan Fred Grace. And also, you can always check out at Tasty Crypto, too, and get all the tons of great stuff there. Folks, thanks for watching Option Trading Concepts Live. We will see you tomorrow at the same time, about 23 hours time. Later.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new tastytrade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
tastytrade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Crew like, what's the plan? Let's go. Shirts, wrinkled jokes, twisted, nothing too official. The outside flexing on my bike, out the bell with the whistle. Corner store, pick up chips, 2 shoulders. My board in the slides, trying to dunk on a stroller. Kids running loose, auntie sipping lemonade. Every front porch got a beat, yeah, it's homemade. No drama, just heat waves of laughter. If we got problems, could we solve them after? Grilling on the curb, grill marks on the shirt. Somebody brought the tools, man, let that loop word. Fun on the block all day, all night. After with my people, yeah, we feeling alright. Fun on the block all day, all night. Good vibes only, yeah, that's real life. Fun on the block all day, all night. Hands in the air, no stress, no fight. Fun on the block all day, all night. We just living it up, yo, that's real life. A's at the table, crowd tilted sideways. Grandpa talking trash, man, he wild for his age. Kids on the hydrant, street gets wavy. Auntie hit the double dutch, yo, she still crazy. Ice cream truck, roll up, yeah, we all chasing. Pockets on lead, but the vibe still blazing. Cops roll slow just to see what's good. They know the drill, it's a party in the hood. We laugh, we boast, we live, we boast. It's all fam out here, raise a glass, make a toast. Sidewalk royalty, king of my block. Every place got a story, every joke hits the spot. Fun on the block all day, all night. After with my people, yeah, we feeling alright. Fun on the block all day, all night. Good vibes only, yeah, that's real life. Fun on the block all day, all night. Hands in the air, no stress, no fight. Fun on the block all day, all night. We just living it up, yo, that's real life. Yo, we just living it up, yo, that's real life. Yeah, we just living it up, yo, that's real life. We just living it up, yo, that's real life.
What is going on, everybody, and welcome back to Risk and Reward. Every time I start this show, I go to say good morning, and then I go to say good afternoon. Maybe I'm just going to start saying good noon, and welcome back to Risk and Reward. I'm joined today, as always, by my wonderful co-host, Errol. Errol, how are you feeling? What's happening in your world?
What's going on, guys? I hope everybody had a good weekend. Hope you had a good weekend, brother. It's been a really volatile day so far today. I know we sold off out of the gate, ripped to the upside over 100 points, sold back off over 100 points, ripped back to the upside over 100 points, selling back off over 100 points again now to the day's lows. So it's been an exciting day. Other than that, the volatility is pretty cool. It was a little bit warmer than last week. I think that's what pretty much stands out from last weekend.
Yes.
So, a little less snow today.
Yes, we got snowed, crazy snow last week. Now we're just back into relative fall time.
Yeah.
It's a little bit colder again this morning, but we broke 50. We broke 50 a little bit this week. You know, these things happen.
Yeah, them lips been a little chapped. Got to bust out that chapstick.
Yeah, that's true. That's true. I'm a Vaseline enjoyer myself.
Yeah. What about you, though? How you been? What's new?
Yeah, not a whole lot. Electric football game on Saturday. A&M did everything they could to lose that game in the first half,
Did they really?
wound up coming back to win it in the second half.
Oh, they won it.
The market is kind of like the Aggies Saturday. Well put, Mike Evans. Exactly. Yes, very, very volatile. And yeah, that's the best way to describe that game as well. So that comeback was certainly the highlight of my weekend. But yeah, just a lazy weekend for me. I greatly enjoyed it, but I'm happy to be back.
Nice. Yeah, it's definitely volatile indeed. One one thing. I haven't been keeping up too much this year, but I do know the Broncos are 9-2. So really happy about that. What have you been seeing on the Broncos, and can you give us a little insight?
I've been trying to tell you all season the Broncos are legit. I think they have the best defense in the NFL. I mean, they beat the Chiefs yesterday, who are obviously another giant contender in the AFC. Right. I think that they're in sole possession of the number 1 seed in the AFC right now. I think the Broncos are for real. The offense is weird and inconsistent and can be stagnant, but the defense is good enough to beat anybody. I think. I love it. That's kind of what's propelled them throughout the whole year. They have so many games this year where their offense has fallen short of the mark, but their defense is good enough that they just hang around and win.
Yeah, no, love it. It's about time. It's been a little tough since Peyton has left, so Bo Nix, maybe he could take it. With that being said, we're selling off to the lows here, guys.
Yes, that we are. Unfortunately, for me, I would add. I do have actually 3 working orders right now. Sorry, I'm scratching my nose here like crazy. I don't know why my nose always itches under these lights. I have 3 working orders right now. This is not something that I would typically do. I'm usually a bit more aggressive on trying to get fills, but today I saw 3 spots where I was like, you know what? I think if this gets lower, it would trigger a buy for me. So I've got working orders on long Amazon, long I almost said Bank of America, long Boeing, BA, and then I am also trying to get a leap in the brand new 3-4 hours old XRP ETF, just for funsies, really, more than anything else.
Trying to get filled in those right now?
Yes, those are the 3 I'm looking for fills on. The Amazon and Boeing both were in a situation where I wanted them a little bit lower before I got my fill. And then the XRP thing, mainly just getting into that for fun, and the spreads are insane because it's like a very new asset. So I just threw in a terrible price that would put me up like $150 instantly if I get a fill, and I'm going to let that sit all day and see if somebody will take the other side of that.
There you go.
But yeah, that's it's pretty much been my day to this point.
Yeah.
BlackBerry continues to slide, so that's good for me. I'm a BlackBerry hater.
Some BlackBerry.
As long as I have this position open.
BlackBerry, we gotta speak about Nokia. How's that Nokia position? I think that's working out pretty well today, right?
You're Nokia. I don't have Nokia.
Oh, no more Nokia.
I never had Nokia.
Oh, okay. It was just BlackBerry Nokia then.
Yes. I used Nokia as sentiment justification for BlackBerry.
Nokia's been playing out pretty well. We still got that Zebra on in there. We're up like $40, so we haven't moved too much, but a little bit of directional volatility there.
The shining stars of the day are Google and Netflix, and for very different reasons. We're going to talk Google first. I actually have some slides ready to go here, talking Google and talking a little bit about our best friend, Warren Buffett, as we love to do so often. So for those who have not seen, Berkshire disclosed this morning, or maybe over the weekend, I'm not sure, but this is getting priced in today is the point, that they have a $4.3 billion stake in Alphabet, making it the firm's 10th largest holding. So it's pretty, you're pretty wealthy firm when you can put $4 billion into something and it barely cracks the top 10. But, let's dive into the specifics here, and it has sent Google flying. So first of all, here's the headline, all of the top line details, if you will. Obviously, as I said, $4.3 billion stake in Alphabet, now their 10th largest equity holding. The investment probably came from Warren Buffett's lieutenants, Todd Combs and Todd Weschler, but it probably still has Warren Buffett's blessing, as he is still technically CEO through the end of the year, even though he's kind of been sunsetting his responsibilities a little bit. So this is that's really it on this slide. Actually, we can go next slide. But this is a very unconventional move for Berkshire because Warren Buffett has for a long time been against these high growth tech companies, with Apple notwithstanding. He's always viewed Apple as a consumer products company. Can we jump over to this next slide here? I know I'm going fast. There we go. Anyway, so they made the purchase on September 30th. They're just now disclosing it, as they are required to do. Right. Their total portfolio is $300 billion, so this is about a 1.4% portfolio allocation.
Something light.
Yeah, something light, just a little, little flyer.
Too aggressive.
Google opened up 5% on the morning, and then as I was just saying, this is a strange move, as Warren Buffett has been against high-growth tech companies like Google. He's always said that he just doesn't understand technology well enough, and that he won't get into anything that he does not completely understand, which I think is an admirable viewpoint to have. Yeah. Apple has always been his notable exception, because he says that Apple is a consumer products company, not a tech company, and he understands how those work. It's an interesting move from Google. Google is decidedly a tech company, and one that we had some very bearish conversations about on this show. And now Warren Buffett is happy to take the other side here, which is interesting.
Yeah, especially with ChatGPT coming into the picture, you're kind of curious about how that's going to affect the business landscape of those two companies competing for kind of the same piece of the pie. So I'm curious about his thought process here of going with Google, at this day and age. So that is an interesting move there.
Yeah, it's I don't know. It's unconventional, and I really just have kind of a hard time wrapping my head around this. I mean, like when you look at Google compared to, I mean, Google's like off high. I mean, even when they bought this September 30th, yeah, I mean, it's up big from where they bought this on September 30th, but they were buying on highs when they did that. I mean, it was a mini dip off the highs, but still very much the highs. Yeah. And you juxtapose that with like a Meta, for instance, which was much further off highs and in a much more reasonable spot on September 30th. And they elect to go with Google instead. I mean, I've said it on air before. Google, I think, is the stock that I am lowest on of the current Mag 7. Like, if you said pick a stock that won't be in the Mag 7 anymore 5 years from now, I would pick Google. So
let me ask you this: what kind of affects your most recent sentiment on Google? Does ChatGPT play a little bit into that?
Oh yeah, that's it. That is my current sentiment on Google. Is just that I think we're getting this takeover of AI, and I think that all their search engine revenue is really going to get cannibalized, because even though, OpenAI is using Google on the back end, when I ask ChatGPT something, it does the research for me. That doesn't, to my knowledge, doesn't count as a human pair of eyeballs as far as their AdSense goes. So yeah, I just think that ad revenue and their search engine revenue is really going to get hit hard, and at which point Google would still be way too big to fail. They have YouTube, they have smartphones, all this stuff. So I don't think that they're going anywhere. I just think that they could take the biggest hit as AI emerges and starts to cannibalize their primary revenue stream.
Yeah, no, completely.
YouTube did get football back. That's true.
What do you mean by that? Like subscriptions and
Yeah, there was this thing going this whole year where ESPN Disney was I don't know the exact specifics of it, but the TLDR is that people haven't been able to watch football on YouTube TV in the better part of a month now. This weekend was the first time that they were able to. But that was like the whole advertisement at the beginning of the season was like, buy YouTube TV and you can watch all these games, blah blah blah. And then like the primary thing people were buying it for got stripped away, and so it was this thing where
it got stripped away as in maybe
it was a negotiation of contracts, It was that ESPN wouldn't give YouTube TV the rights, or Disney wouldn't.
And they used that to heavily market this next coming up football season.
Well, no, it was like preseason. YouTube TV was like, everybody buy YouTube TV. We're going to have every NFL game. It's going to be great. You can quad box college football games, all this, and it is really a great service. I've heard nothing but good things from everybody who used it. But then all of a sudden, somehow mid-season, they had a contract dispute with Disney where in the middle of the season, after everybody had already bought the package, the games all got pulled. And so there was like a 3-week period where no one could watch any of the games that they were promised, and they were still paying the YouTube TV subscription. And everyone was very frustrated. But then finally, I think on Friday, they hit a resolution on that deal. So then this weekend, the games were back on YouTube TV for people who use it.
Specifically more so football, huh? Taking advantage of the football crowd, would you say?
Yeah,
obviously, probably more sports.
Well, I mean, YouTube TV. YouTube TV has NFL Sunday Ticket rolled into it. I think somebody in chat can correct me if I'm wrong, but it's like YouTube TV is like the greatest, football watching package right now. Like you get, especially for college football, you just get like everything.
Yeah. So they're really leveraging the football community, huh?
Yes.
Because I just think back to like some of the Premier League soccer. I don't know if we got any soccer fans out there, but we got games on Peacock, we got games on Paramount, right? Depending on what league that it's into, it's on a different service. So just curious if they'll do something like that for the soccer fans out there.
Yeah, absolutely.
Good news.
Google has Business Cloud. Yes, good point. That's another revenue stream for them as well. And yeah, like I said, I don't think Google is going anywhere. I don't think Google is going to fail, and I'm not getting short Google. I just think that search engine revenue is a giant revenue stream for them, and I think that it's highly plausible that sometime in the next 5 years that search engine revenue is gone, is zero, as everybody slowly moves to LLMs.
Oh yeah.
And then, I saw Disney and Hulu packages will be added to YouTube TV next year as well. That's interesting. So they're just doing it the other way. That makes sense.
Yeah.
Sunday Ticket is extra cost. I see. Thank you. Good intel.
Ranch is all ears today. On Ranch. All ears.
Oh, it's good, Ranch. Good to see you. Google has a lower PE to begin with. Yes, that is the main thesis that I see proposed for why Berkshire decided to make this move, is just that Google has a lower PE relative to the rest of the Mag 7. And especially when you're talking about a tech company that's, generally speculative in nature, I can understand why you want to go at that lower PE, but also I understand why there's less lower PE. And I would say that PE is a pretty fair measure of excitement, is kind of how I would put it. And I think that the reason that there's lower excitement is because of all of this AI stuff that's happening as well. So it's sort of a convoluted thing. But obviously, it's working out pretty well for them to this point. In the time before they disclosed the position, but since they have bought it, Google moved up. September 30th was 243. So 243 to 286. $43 on 243 is like roughly 1/6, which is like roughly 17%, something like that.
Yeah.
So it's working out well for them. What's 17% on $4 billion?
Hey, if it's working, it's working. With that being said, you want to check out a little bit of NASDAQ over here?
Oh, you guys talking about I don't know who has the best of what because I don't use it. LOL. Jared, I would say that I find myself in that same camp. That's all I'll say on that front. But the service that you named, I'm not familiar with. I might have to add that one to the Rolodex. Allegedly, everything I said is alleged in Minecraft. All right. Next thing on the docket, Netflix. Let's talk a little Netflix, and then we can get into some MNQ stuff if we want to go your platform or TradingView, whatever you think.
Yeah.
But yeah, Netflix has split. Is the short answer here?
Netflix is splitting. Okay.
Yeah, they have split as of today, 10-to-1 split off of the $1,100 level. So we're talking $100 a share, $110 a share on Netflix now.
Yeah.
What are your thoughts?
I mean, we'll see. We'll see about the volatility that it kind of brings. Usually, when it comes to the stock splits, it's kind of like, let's see how the shareholders are feeling and the active traders are feeling about this underlying. But I mean, Netflix is trading a 20 IV rank right now, 14.5 million shares. So, I mean, it's moving on the day. I mean, just looking at the options chain doesn't have any earnings in the way and no other news. So,
yeah, it's an interesting one. I mean, I think it's overdue. I just objectively, I think I said that. I think I've said this before.
Yeah.
But objectively, I just don't understand why anyone would want their share price to be over $1,000.
Yeah.
Like, I feel like even $500, I sort of start to be like, man, just split. Especially when you're a company that is as well established as Netflix. If you have never split before and your stock is 3 years old and you're touching $500, I can understand not wanting to get cute and split. But yeah, the Netflixes, and I thought this about Chipotle when Chipotle let themselves run to $1,300, and Amazon did the same thing too recently, right? Pre-split, they were over 1,000. I never get it. It never makes any sense to me.
Yeah, neither do I. And as for the bad coffee, now that bad coffee is full price. That bad coffee is full price.
That's in response to that. Well, thanks to YouTube, you guys are basically celebrities now. Fame unlocked. Celebrity is a relative term, I think. But thank you for the kind words, Samel. I appreciate that. And then I bet they even get a moderate discount at the local bad coffee and toast shop. Have you met Tom Sosnoff? I haven't ever gotten a discount at Bad Coffee, not once. I mean, I've gone to events at Bad Coffee where we were taken care of and we didn't have to pay for it. But my independent trips to Bad Coffee, they don't know who the hell I am. they say run me the money for the coffee. Trying to pull the I know the owner card at any establishment ever, so I just fork over.
Like, hey guys, Tom got to be back there somewhere. I swear I know him. He got to be back there somewhere, please.
You guys know who I am? You know who my dad is?
But no, Netflix will be interesting. We'll see how that one pans out.
Yeah.
Some stock splitting news. Again, I'm in the same boat. Whenever we're getting the $300, $400, $500, it does kind of seem like it's pricing it out of the arena of active traders. So we like a cheaper stock here.
Berkshire did it so that the poors don't speculate and trade around what's supposed to be a long-term investment. Anyway, that's the two biggest trending topics of the day. What do you got going on? Any new positions today for you?
Not too much. We can take a quick look at NASDAQ. I would say not too many new positions. We had one scalp to the downside today. If we could jump to TradingView here in a moment. But we had one scalp to the downside. Rivian is playing out pretty well, which we can take a look at. I know you like Rivian. I got a Zebron in there too, so kind of just holding the reins in there. But we got NASDAQ right here. So we can cover that one quickly, but this is the one.
Rivian might be the easiest stock to trade in the history of the market.
It might be, right? I think we're gonna have to put that into our bag of stocks that we legitimately look at, like on a week-to-week basis.
Yes.
It'd be fun if we tag that one back, back to back.
Yes,
so.
This is my first time doing the downside thing, but yeah, I agree.
Cool.
I won't. We're getting ahead of ourselves. Talk NASDAQ.
All right, a little bit of NASDAQ for the day. So I'm on the 1-minute chart to give you more perspective here. Market opens up over here at about 8:30. So as we opened up, we ripped to the upside immediately. These are the value areas that we have in going into this week. These levels were built from last week. So if you're curious, these value areas are from the previous week's worth of trading activity. So with that being said, that means these ranges that you see shaded is where most of the trading activity occurred from all of last week's trading data. So we got a breakout into the morning and we were able to get a short to the downside. It was about 7 to 8 minutes. We're going to bring this down to, not to get too crazy, but we're going to bring this down to the 15-second time frame. Not to get too crazy, but you're able to see it a little bit better inside of there. But once we started to trade near that value area high, started to consolidate there, got a little bit more rejection. That's that one standard deviation move And because we got that insane breakout in the morning where we went straight up, we didn't have any downside yet. Felt a little bit comfortable taking a short here. So held that one to the downside when we took out these lows. And since that trade, pretty much been sitting on the hands. We've been getting so much volatility since then. But that was the only one of the day so far today, brother. But
that's nice.
A lot of up and down.
Yeah.
I don't know. We're at the lows today.
Caught a big one on that move, though. That's good.
It is a decent run. I mean, you ask me now, I wish I was still holding because now we're down here at the lows, but we're trading at the next value area here now. And I'm going to sit on the hands. Even if we see some opportunities that maybe we could scalp quickly, we're just going to sit on our hands for the day since we got a decent opportunity in the morning.
Yeah, it looks like we're making an effort to move right back to unched. Honestly, I wouldn't be surprised with that at all today. That would be so like this market if we just get giant volatility and then close at nothing.
No, yeah, I mean, and today's the day where it can do it, right? I mean, volatility has expanded a little bit, but I mean, not once, but I mean twice. We rip 100 points and then we give it back. Like, is the market going to give us another 100 points to the upside and then give it back again? I don't know, but it's shown us it's done it once, not once, but twice today. So, I mean, it has the legs to do it. And I mean, that increased vol from last week. I mean, the range that we're trading in this week, we can kind of tell the difference already. Just these big whipsaw swings, definitely a pop in vol. You can kind of feel it, just watching the market.
It's true. It's true. Yeah, I saw Dan say watch the vol crush and VIX.
Vol crush and VIX. Let's check out VIX real quick.
Yeah, that's a great point. And this is kind of I think I might look to get short some VIX if this moves a little higher.
Yeah. So VIX, we're trading at 20 right now, 2021. Barely scratched the surface of 21.
21.52 is what I have on the Tasty platform.
I might have the other futures.
Yeah, you're looking at
the other futures product up.
Some slightly different product, I think.
Yeah.
There's all the different volume products get very confusing to me.
No, I got you. But yeah, VIX near 20 right now. That's better than what we had this weekend.
Yeah, we're at 21.56 and climbing shortly. Climbing a little bit, I should say. I don't know why I chose shortly there on the day. We're maybe 23. I think if we get a confirmed break at 23, that would kind of be my short entry point here.
Yeah, for VIX to the downside.
Yeah, we really have not shown. I mean, really have not shown any propensity for VIX to hold over 23. Just quick chart action now. We've spent aside from pretty much the entire month of April, which is its own thing, we've held over 23 VIX for 7 days so far in 2025. So that's April notwithstanding. We were over 23 for a long time then. But in general circumstances where we don't have a Liberation Day level dip going on, we've barely ever held over 23. So I think if we can get past that 23 level, I'll be looking to get short some VIX and ride it back down to 17 or 18, whatever we land on.
No, I like it. I like it. I mean, getting the pop in VIX, it's just nice to get some type of opportunity in the market here. We can take a look at gold. Any eyes on the metals over here?
No, I think it's interesting that we've dipped again. I don't know. I don't know what's happening with the metals. They cannot make up their mind. Perhaps we're just assessing, 360 to 388 range on GLD to be fair value for gold. I really don't know. Over there, that looks like it would be 4025 to 4100 range is basically how that translates.
Yeah. Taking a look at gold right here. I mean, just looking at some of the volume profile analysis that we've done, I guess we can reference some of those levels. 4,044 on these gold futures over here. We've gotten a little bit of responsiveness from that level. Is it a support? Is it whatever? I don't know. But the market has acknowledged that level so far. And we haven't done much since we got the pullback. So this is an interesting one. It was a pretty aggressive pullback. It was aggressive pop off the pullback. And now we're back to our remaining levels that we just ran off of. So gold is still at some very indecisive levels. It seems a lot of traders are figuring out how to position themselves, at least.
Yes, I'm very happy to have liquidated my SLV shorts. Those certainly would not be going in the right direction for me. But yeah, I'm fascinated by the moves that we're getting in these metals.
Bitcoin at 92,700, good Lord.
Yes.
Our days are pretty smooth right now, but I know if I saw NASDAQ down this much, if we could do the relative response to what my response would be to seeing NASDAQ as to what Bitcoin is doing right now, I'd be pretty shook. That's a pretty big down move for the overall sentiment of probably, all crypto. Anybody that has to do with crypto.
Yeah, and this is my biggest argument against crypto as a currency. I always hear people say, oh, Bitcoin in the future, Bitcoin could become a real legit currency. You could have a Bitcoin debit card and be spending Bitcoin in stores and transacting Bitcoin for US dollars at ATMs. Yeah. Not until they figure this out. Yeah. Because currencies don't do this. This is an asset, is what this is. A currency, no current, well, that was about to be an incorrect statement, but if a currency falls, what's this? 127 to that's 30 grand. Yeah. If a currency falls 25% in a month, the country is falling apart. Like at the seams. There is a war happening, or there is some kind of hyperinflation going on, or whatever it may be. But you can't. This could never be a legit transactable IRL currency until I can be sure when I leave the house for the grocery store that I will still have the same amount of money when I get to the grocery store, or at least close to it. But when I have to be worried that I could take I could go to the grocery store, shop around, and then an hour and a half after I left the house, I'm checking out, and suddenly we're down from 97,000 to 92,000. That doesn't compute. There needs to be some kind of stability. And I was thinking that we might be reaching the stability with Bitcoin at this 110 to 130 level. I was like, okay, this is moving a little bit more like a currency now. It's cyclical, it's stable, and then here we are, crypto doing crypto things again. That's not an anti-crypto thesis. I love crypto as a trading vehicle, as a money-making vehicle, and as a store of value. I think that it will grow in the long term. But as a day-to-day currency, that's my soapbox.
No, I mean, it's a tough one. It's getting hit pretty hard today. I know we heard a lot of numbers around 100,000, 95,000, and regardless of the numbers that we've heard, we're trading below all of those numbers. So volatility picking up on these Bitcoin futures over here.
Also, to mention it as well, because I see somebody mention it in chat, Coinbase. Coinbase, very interesting situation going on here. I mean, they're down 7.5% today and have been sliding. I theorize, and I haven't seen anybody else allude to this for some reason, I theorize Coinbase is getting hurt because these crypto ETFs are coming out, to me.
Right.
I think that the presence of IBIT and BITB and BITO and ETHA and now this XRP, I think that these ETFs really, really hurt Coinbase because they just continue to further and further decrease the need for to be able to transact with the crypto directly, before, just 2 years ago. 4 days ago. If you wanted to buy some XRP, you had to have a Coinbase account or similar to be able to get your hands on it. But now there's an ETF for it. And we saw the same thing happen with Bitcoin and Ethereum. They're working on a Solana ETF. And so I feel like those things all really hurt Coinbase.
Yeah.
Just in terms of accessing the average trader who isn't a crypto hard and wants just a little bit of crypto exposure.
Yeah. I think it's kind of spreading it thin a little bit in terms of getting access to certain products where you can kind of concentrate some of that activity within one.
Yeah, I think so. I mean, I think, yes, I think so. I think that it's just, somebody like me, if I'm bullish on XRP now, I'm not going to go out of my way. I have a Coinbase account already, but I have a Tasty Crypto account as well. Love Tasty Crypto, by the way. If you guys aren't using it, what are you doing? But why would I do that when I can just buy some XRP? It doesn't, it's hard to gauge.
Compute.
Obviously still has a ton of value if you want to buy more niche cryptos or if you just want to actually own the Bitcoin on the blockchain for whatever reason, which there's a whole slew of valid reasons for that. But I just feel like it hurts because, people aren't going to, if people want to trade Bitcoin, they're not going to do it on Coinbase anymore if you can trade options on it. It's
Yeah. Agreed. We are trading at the lows over here on NASDAQ. We got a couple hours left of market open. We'll see how the market digests the rest of this market volatility.
Oh yes, brokerages offer crypto now. That's a fantastic point as well. That should have been my segue there. Yes, everybody has crypto now too. So who needs a Coinbase account? Wonderful point. Yes, we have Tasty Crypto. I mean, you name it. Every brokerage will let you do crypto. Coinbase it feels like Coinbase needs to add a brokerage side if they want to stay viable. To me, really. Although, granted, Coinbase is a wallet. We have a wallet on Tasty Crypto as well, but if you buy crypto on Robinhood, that's not actually, to my knowledge, that's not actually you owning crypto in a wallet that's transferable. It's just you own a proxy for Bitcoin, essentially. Somebody can correct me if I'm wrong. Anyway, I don't know anything about crypto. That's enough crypto yapping for me. This is the extent of my knowledge. I'm just saying, it's an interesting spot. I think that's why Coinbase is getting hurt.
Yeah, Grumpy. Bitcoin down pretty big today, trading around 92,000 right now. Next stop, $9. That is a pessimist of crypto right there.
Yes. I also have some Bitcoin in my Tasty account.
Yeah.
0703.
Now, with that being said, though, we'll see how the market pans out for the next couple hours.
Cold storage ground beef. You got cold storage ground beef on the blockchain? Safe place to put it. All right. Cool. Well, that's going to be all the time we got. You have anything else?
Nope, that'll be all for me. We'll see how the market pans out. We got a couple hours left, so it'll be nice.
Yeah. All right. Well, that's going to be everything from us today. We will be right back here tomorrow, same time, same place, 12 o'clock p.m. Central. Be sure to stay tuned for Futures Power Hour coming on next with Christopher Vecchio. Thanks so much for watching. We dearly appreciate you all taking the time out of your day. We will see you soon. We love you all.
Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
We are back. It's still Monday, November 17th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Thomas Westwater. Thomas, how was your weekend?
It was good. You know,
Little cooler weather here, but Saturday was pretty nice. Sunday cooled down, but we still got outside, so that's nice in November.
I think the most important thing is that I'm finally not struggling in the Tasty Fantasy Football League. If things work out this week, I'll secure a playoff spot. However, Mike Butler is deciding to break my heart. So if the Tasty Nation wants to tell Mike to bench the rest of his lineup for today's games, that would help. Outside of that, Thomas, though, it's been an interesting day for me here. Stocks are selling off. Metals are holding in there. Bonds are my primary point of focus today, but not talking treasuries. We're going to talk about what's going on in the AI space shortly, but we're not going to do it through the equity perspective. It seems that there's a little bit of a corporate bond issuance albatross hanging around the neck of the stock market today. We woke up to news that Amazon would be moving forth with a $12 billion investment grade bond offering, its first US dollar deal in about 3 years. The details, it's going to be done in 6 tranches. It's about 1.15% above treasuries for a 40-year. That's not the news, though, Thomas. The news is the fact that now we're seeing this risk for AI spread into other corners of the market. And we'll explain why in a moment. But before we get there, I want to benchmark where we start this week, Mr. Westwater, because this is a week where we finally get the unclogging of U.S. economic data. Thursday, non-farm payrolls report. And it's an important one because we've seen a significant deterioration in those Fed cut odds over the past few weeks. A month ago, we were looking at chances of a 25 basis point rate cut in December, sitting fairly close to 100%. While they were ebbing and flowing away from that number already, they certainly weren't sitting at a 39.86% chance. So we're not even at 40% anymore. Stocks are down today. Are we going to get enough data clarity over the next few weeks to see this rate cut come back into play?
Yeah, I mean, I think we will with the data coming out, but the risk now is the cut odds go back up because the data is worse than expected. So I think either way, I myself have growing hesitancy to take on some risk in the equity market.
I feel the same way too. I'm still holding my MES position. It's obviously struggling today, but in terms of legging into a new NASDAQ long or shifting S&P exposure over to something away from MES and back into calls or call spreads, being a little bit more aggressive about it, not my cup of tea right now. The data that we do have available, Thomas, hasn't been good. And the jobs report that's coming on Thursday, a lot of the private sector trackers suggest that jobs growth ground to a halt in September, if not turned negative outright. And that's before the shutdown. And so you sprinkle the shutdown in. And what does that mean for an October figure, which will be incomplete when we get it, but it will look fairly soft. And then December 10th, we get CPI the morning of the Fed meeting. So, Thomas, this is a number that we should be paying attention to. We can benchmark it here at the start of the week. Market's pricing in a 40% chance of a cut. That's not the primary consideration for the market here on this Monday. I mentioned at the start of the show, Thomas, that we were looking at weaker equity markets, and S&P trading at 67.20 right now. NASDAQ at 24,970. That's a 0.5% loss for each of them. We go over to the Dow Jones off by just over 0.5%, and then your Russell down by 0.93 and slicing through all sorts of key technical levels here. But Amazon here, right? They are now moving forward with this bond offering, and it comes after Alphabet did a $25 billion bond offering earlier this year. Meta had $30 billion bond offering. Oracle did an $18 billion bond offering. This is unprecedented in recent times. It's driving global issuance above $6 trillion this year, and U.S. high-grade issuance is forecast to hit about $1.8 trillion over the next year. This is a different evolution of where things are going because tech giants have historically relied on their cash flow or some hybrid with equity to facilitate the funding. And moving into these plain vanilla investment grade debt speaks their desire to leverage low cost funding and ultra low spreads that we're seeing in the credit markets right now to support these large capital outlays. Part of me thinks this is becoming a bigger issue as a result for the market because this is no longer just our stock price is too high. Now companies are issuing debt to facilitate this AI build out. And that is something that typically occurs in bubbles, right? Too much build out occurs. I don't know if this is a good thing or a bad thing. I couldn't help but notice today the other piece of information that was has been making its way around. I've seen it on Bloomberg. I've heard about it discussed on CNBC. Saba Capital, which is Bose Weinstein's firm, he's typically the kind of guy who goes out there and buys credit default swaps when he thinks that the market is underpricing risk. It's been announced today that he's been out here selling credit default swaps on these AI hyperscalers, which is to suggest that he does not see any significant risk to their businesses, their cash flows, their ability to service their debt over the next several years. So it's an interesting set of headlines today, but we're beginning to see the AI story move beyond just this is something impacting high stock prices and leading to speculation in the equity market to more of now corporates are beginning to play the game a little bit more directly. And you could argue that this is leading to perhaps even a greater risk should, say, NVIDIA earnings on Wednesday disappoint and the market have a poor reaction to them.
Yeah, I think NVIDIA earnings is definitely, if they're bad, it could really accelerate this sell-off because it's driven so much by this AI mania. Them issuing debt, you have to think, is the fear of missing out on AI investment clouding the judgment of the executives and people making these decisions? They're already well in the water with, going all in on AI. So now is it a question of, are they really, in too deep of water to swim? And you could tread that water for a while, but, is the market sending us a signal that this is gone a little too far? We've seen it again, the dot-com bubble, things like that. There's nothing to say really that it can't happen. The question is it happening? And when does that really inject itself into the market?
When does it inject itself into the market? There's a great piece of commentary that came from SIBO earlier this morning. Frank just passed it over to me, and it comports perfectly well with what we're discussing here. Implied volatilities gained modestly across asset classes last week after the U.S. government opened and anticipation built ahead of key economic data releases this week. But there is a pronounced kink in the SPX options term structure for this Thursday, November 20th, when the non-farm payrolls report for September will be released. We can just head on over here. All right. There's your bump, Thomas. In our volatility curve, you could see the IVs Tuesday, Wednesday, 21, 21.8. We get through Wednesday, Thursday, to Friday, after we have the NVIDIA earnings, the non-farm payrolls, and then next week back into the 21s. What's interesting about this, as the article, or at least this note points out, in the relative value space, the triple Q SPX implied volatility spread is widened notably, with the 1-month vol spread surging to a 1-year high of 7.3% as tech valuations and AI concerns escalate. So we can see it here in the IVRs, right? If we're looking at the right-hand or left-hand panel of the screen here, I have the IVR set up in these rows right now. NASDAQ 37.5, S&P 29.5. The NASDAQ has a clear premium advantage over everything else at the current moment. Even the Russell, which usually is the centerpiece of concerns, at least it was 21, 22, 23, less so last year, not really so this year. It only has an IVR of 27.6. So we talk about this NVIDIA earnings report on Wednesday. I think this is so much more important than non-farm payrolls this week, as much as I don't want to think so, Thomas.
I agree.
Like, the reality is, if NVIDIA craps the bed and the job report's really good, you're going to get this, oh my God, AI is not working out and the Fed doesn't have a reason to push the cost of capital lower. That's a nightmare scenario. But if NFP is bad, it's like, oh my gosh, AI is not working out and the economy is going into recession. If NVIDIA works out for the market, however, and it substantiates the views that we've seen and the equity run-up that we've seen here, you get to non-farm payrolls and you're like, well, hey, the economy's holding up despite the AI build-out. Oh, the economy's hurting. The Fed is going to cut rates, and that's going to help keep the AI build-out on pace. So the key is everything is for NVIDIA right now. If you have a good NVIDIA report, the market rallies. I don't think NFP can take it down all that much. because perhaps with a little bit more data, the Fed says, listen, we still think that we can cut rates. We just don't have enough data to do so. And then the market thinks about January, and we all sit around and go, what matters more, the destination of the journey? We're getting the rate cuts, aren't we? So who cares if we have to wait a few more weeks to get it? I don't know. I know I'm rambling a little bit here, Thomas, but NVIDIA, to me, I know it is the keystone, in my view, for how the next several weeks of trading go out, because after this week, next week is Thanksgiving, and we're really only going to have 2-3, let's be honest, 2 days of decent liquidity. So you wouldn't want to have a very negative tone where then all of a sudden people are jumping ship and cutting positions heading into the holiday.
Yeah, and like you said, it's an incomplete jobs report, so I think it makes sense to put more weight on NVIDIA. And, I agree. That's the biggest event it's going to be. And the IVR being elevated in the NASDAQ kind of shows us that the market is, all these AI stocks are concentrated in the NASDAQ. It's showing us that this is where uncertainty is coming from in the market.
The uncertainty is all about AI and tech. At least that's the narrative here as we make our way into the second half of November now. Thomas, the 25,400 level here on the NQZ5 contract, it was where we peaked out for most of October. It's where we first found resistance leading into that October 10th sell-off. Likewise, on second blush there around the 20th, we couldn't make our way through. Concurrently, once we did break through, it became support, at least initially. We see here overnight, we tried to run back up through that level and have since failed on this 4-hour time frame. So it is a series of lower highs and lower lows that have continued off the recent local high at the end of October. Momentum is still fairly negative, at least on these shorter term timeframes. You're looking at a MACD that just gave you a sell signal while you're sitting below your signal line, Thomas. That's, if you're a momentum person, that tells you it's time to get back on the bear train. And so for me, I just see a deterioration here that's ongoing right now. The breadth isn't fantastic either way. Those are ugly upper wicks. The pitch of the moving averages is turning negative, right? The rate of change for the 5 and the 21, both negative now. There's really not much to like if I wanted to buy here. There's really nothing that's checking the boxes for me except for, hey, maybe we hold the lows from the past 2 weeks, which is not a high confidence play at this present time.
No, yeah, I'm not a big fan of the price action here. And in the ES, the one thing I've been looking at is holding the 50-day SMA. We're, trading under that right now. It's held several intraday attempts over the past 2 months. But, yeah, I mean, what does this also is going to really affect, the U.S. administration policy. If you get a big market sell-off at a time like this, where they're trying to negotiate tariffs with China, that's going to throw a wrench into the thing, And I'm not sure if you saw this, but 401k loans for hardships are at record high levels. So, the impact on the economy of a tanking market, it's just going to make the pressure more and more, because when people start seeing their portfolios go down and down, that injects a lot of fear into people about how they're going to maintain their standard of living at a time when there's already some, fear about how the economy is going to work itself out over the next year.
Yeah, Bloomberg has a report out today showing that against this economic backdrop of recession odds increasing, you also see that the recent advancements in AI could put at risk 25% of college grads to not find employment immediately outside of college. So that that's probably a problem longer term for many other reasons. But that is something that in the short term, right, it's this accelerant to the downside. We have a growing pool of able-bodied workers and prime age workers who can no longer find work. And against a backdrop of shrinking aggregate demand. And then you mentioned these hardship exemptions from 401ks. Right now, that's not a big deal. But if the economy gets worse and the stock market's going down, all of a sudden you're not, those 100 shares that you were looking to sell to raise X dollars, you're not going to bring in X dollars anymore. You're going to have to sell those at a discount. Doesn't make me feel great about the state of things, Mr. Westwood. I was hoping we'd have a better start to our Monday, but if we're going to be honest here, these charts just don't look that fun right now if you're trading them from a bullish perspective or you're trying to pick them up from a bullish perspective. Last week, we were spending a decent amount of time talking about looking at 2375, 2400 put spreads and never jumped on the opportunity, which is obviously something that leaves me filled with a little bit of regret. But we move on. A mistrade is a mistrade. I'm now thinking about the Russell in terms of what does a recession look like against a backdrop where the Fed can't cut rates just yet. The Russell is perhaps the ugliest looking chart among the major equity indices. And how appropriate, because a week ago when you and I were first talking on my first full day back, one of the comments I had made was, if you look from, post to post from when I went on paternity leave to when I came back, the Russell was only up by 0.2%. It had done nothing. And all of a sudden we have all this weak U.S. economic data coming out down the pipeline. And we're talking about recession, but why would anyone be bullish on the Russell? So this is now looking like more of a considerable top that's being carved out, having now broken through this 2400 area. We get a little bit more weakness here, and then I can't foresee a reason to get long the Russell, like not even going to be on my radar or something I think about during the day.
Yeah, this chart's ugly. This looks like it could sell off hard to me. It looks like one of those charts where, the bottom could give out of it.
The bottom could give out of it. Should we learn from our mistakes and instead of just talking about ideas, actually trading off of them? Maybe that's the idea here, Thomas. I'm going to look longer term, though. We have to go into the RTY H6 contract if we want to effectuate a trade on those terms. And I'm thinking something like the 2250. That brings us back to a place where the August low is carved out. And in RTY Z5, you could see here that would be the August 1st low. So we go back to RTY H6, 2250, we'll say short the 2200. That's a 4-to-1. It's a 4-to-1. I'm willing to take something that's better than a 25% probability of profit and say I'll risk one to make 4 as potential downside insurance in a market that maybe sees a shift to looking for liquidity. And I say that because gold and silver still trade heavy throughout all of this. Bitcoin trading very heavy, now down to below 93,000 in the futures market. People are raising cash right now. And if they're going to raise cash, the Russell to me is the ugliest duckling, and it probably gets taken out back first. People aren't going to give up on AI first. They're going to give up on the small and mid-cap banks that aren't helping fuel the rally. So let's get bared up, Thomas.
Yeah,
don't tell Ilya.
No, I won't tell him. Yeah, this looks like a good trade. The risk to reward is really good. I'm probably going to jump in something really similar, maybe keep it a little tighter than you. But I'm seeing the same thing. No matter what prices you go out to, you're pretty much getting 4-to-1 on everything.
And it's only a 27.2 IVR. It'd be totally different if we were looking at like a 70 IVR. Do I really want to be buying out of the money puts after a vol spike and the market's moved off by 5%? Probably not. But there's still more opportunity for expansion ahead. And given the erosion here, could tech help keep the S&P up while the Russell bleeds out? For sure. That's the worst case scenario for the Russell, Thomas. We talked about last week, how come the Russell's not doing better if all these rate cuts are purportedly coming? Turns out they're not coming. And maybe that's why the Russell is struggling so much. So do we want rate cuts for good reasons or bad reasons? I know this has been a drum we've been beating a lot the past few days, but rate cuts for bad reasons are historically very bad for equity markets.
Yeah, and if you expect the economy to soften a bit more, but the AI thing stays alive via you get good NVIDIA earnings, a bad jobs report, maybe expect to see the Russell give some more weakness while the NASDAQ holds up a bit.
Right, because if you get a bad jobs report, the Fed is not going to say, well, we can't cut rates because NVIDIA and the AI revolution is still booming. They're going to say, no, we have to cut rates to foster jobs growth. And so then you're going to get cheaper capital to help fuel the NASDAQ while the real economy suffers. And maybe that's a spread we should be looking at here on a pullback, Mr. Westwater. I digress. The spread's kind of already in place. If I'm long MES and sitting long put spread in the Russell, I'm more or less long tech and short everything else. If we want to think about it in those terms, not just as concentrated in the NASDAQ. Before we move on, though, I do want to take a look at volatility because we did have a spike up earlier. It faded off. It's now back on the up and up, 20.7 here. And it feels like we're lingering a little bit more. And we're starting to see this contango in the volatility futures curve. It's getting a little bit flatter day by day. This is I want to say perhaps it's a different occurrence right now. Since April, whenever we've had these spikes up here, it's more or less just been a spike and then we fade off. Does this feel different with volatility kind of being a little bit stickier this go around?
Yeah, I think it's one where you have to be a little bit more cautious getting long and taking on a bunch of risk. It does feel a little different, right? Because the economy is, we're getting more warning signals. These Fed rate cut bets have come in. There are different mechanisms here at play. So I think, you have to at least take stock of it. And, for me, myself, I'm keeping my risk a little lower than usual.
I think that's I think that's exactly where the mindset should be. Keep your risk down right now. At a 21.7 VIX, this is, 18 to 20 is kind of the gray area where you get a spike up into there, and it can really go either way if you look at the distribution stats. When you're climbing and sticking above 20, it often can feel like you're getting in front of a train here a little bit. So that would be the benefit, Thomas, of having this downside exposure in the Russell. If we do see a further deterioration in price, it would probably in my mind come alongside a further expansion in vol. And so directionally we're right. Volatility going up, those options can move quickly in our favor. And so it would be something where if we get to like 50% profit potential on them, I might just take the money and run, as opposed to doing my usual thing where I try to grind out every cent until the trade turns into dust. But this one is more of a hedge in recognition of an environment that seems to be shifting beneath our feet. I do have one more quip, Thomas. 2018. I don't know how often people think about the second half of 2018, but I've been thinking about it a lot recently. And I've been thinking about it a lot recently because it feels like we're in similar everything. Here we are. This is 2018. In late 2018, the market started to struggle a bit. Volatility went up, but we were really struggling in the stock market. Russell 2000 ended up losing something like 25% in the span of a few weeks. We had that sell-off in December that ultimately beckoned the plunge protection team. Treasury Secretary Mnuchin, never realized how much I'd missed that guy. Secretary Mnuchin, Janet Yellen, right? We hear that the Fed is going to do, and the administration recognizes that there are issues, and they're going to do whatever it takes to provide liquidity to the market and make sure banks are okay. But that halted a significant sell-off that was in fact spurred on by loan souring as a result of economic activity going down thanks to the tariffs, the first iteration of the US-China trade war. I can't help but feel like, given where we are, and the Trump administration may be trying to get ahead of this, because on Friday evening, they did cut tariffs on over 100 food products, signaling directionally they understand that they can't keep putting tariffs and squeezing that ratchet right now because it's just increasing the cost of living for folks. Do you feel, with all that run up, that I should be spending more or less time thinking about the fall and winter of 2018? Do you think that we could be looking at a similar type of market where people just kind of panic into year end, given the whole mishigas of it all?
I think you definitely draw a parallel. And, the administration saying they're taking off some tariffs to relieve cost of living or affordability. You can look at that as, they have less confidence in the economy than they did, say 3, 4, 5, 6 months ago. Of course, they're going to spin it in the most positive light that they can, but it's pretty evident that, especially going into the holidays now, people are feeling the pinch in a lot of corners of the economy, and they have to make a move that does something, or at least signals that they are trying to relieve some pressure. And I see it as a bearish sign that they're doing that. Ultimately, I don't think that's going to be the reason if we get a sell-off, but it plays into the myriad of factors that we have going on right now.
Well, we are seeing losses accelerate here as we make our way to the halfway point of today's show. S&P, NASDAQ now off by about 0.75%. Volatility likewise taking a little bit of a move to the upside, currently sitting at session highs here in the VIX, 22.23. So Thomas, maybe our concerns about what's going on in the stock market are going to come to fruition a little bit faster than we had hoped for. Treasuries are holding their ranges, though. They've had a pretty good day, despite the fact that there's more general bond supply coming into the market, which historically we've seen that have been a problem in years past for the long end of the curve. Today, the market's more or less shrugging that off. So we did gap open lower. We are trading higher. We're still holding 116. So for the folks that weren't with us last week, Thomas, I was laying out the technical argument that in the long end of the curve, in bonds, you have 116 as a line in the sand, more or less. Over in notes, it's basically 112 and a half. And you can see this because you have resistance around these levels through the summer months, and only after September has it become support. Remind me, how are you approaching these markets right now, given the fact that we now both, our spidey senses seem to be tingling regarding some other issues that would perhaps favor an upside move in bonds?
I'm long ZB and long ZN. So ZB, I'm in a long call spread, 67 days out. ZN, I'm in a short put spread, 39 days out. So exposure to both, still pretty long term. I'm going to keep them on. I'm a little in the red on the positions. I think I was a little bit early, but I think the bonds hold up here and start to move a little higher. Not anything crazy, but I'm going to keep this position on.
We're starting to see bond vol come back too, which is really curious. It's almost like vol is getting into everything all of a sudden. It's not just contained to the, tech names. It's not just about what's going on in the currency market or, the soft ag ahead of WASD, but it's a 16 IVR now in ZB. That's up from 7 last week. In ZN, we're sitting just north of 20. That's up from the mid-teens levels that we were seeing last week. It was like 14, 15, 16. I think the North Star for a bond trader right now, if you're looking at the futures market and you're considering the relationships that we have, historically speaking, we often reference the fact that if you are recession sensitive, you want to look at gold, you want to look at bonds. Gold tends to suffer a little bit during initial indigestion because people are raising capital, but then gold rebounds quickly and it becomes one of the best performing assets during a recessionary window. The same holds for the long end of the curve. So if I'm worried about the AI build out, right, and like, no, this is a bubble, this is going to crash, I'm shorting the stock market. But if I'm more concerned about the economic trajectory and like the Fed's going to cut rates and stocks aren't going to like that, stocks aren't going to like that initially. But if the data turns better and now we have a lower cost of capital in our back pocket, the market's just going to rip. But the bonds, on the other hand, they will price in the lower inflation premium, the lower growth premium. And to that point, you could see, I still think a 114 in ZN by the end of the year is absolutely achievable, given the chart in front of us. And the same thing for ZB, looking at like a move up to what we'll call it 118, 119, absolutely achievable over the next few weeks. I feel way more comfortable being long bonds than being long anything in the equity market as we kick off this next trading week.
Yeah, and bonds are already having a good year. You look at last year, 23, 22, the past few years, really, we're kind of breaking this long-term downtrend that I think we've went over before when you look at the weekly chart. And that inspires a little confidence too there.
The weekly chart really does inspire confidence, and we've had a lot of false starts out of it. So I don't want to just say like, oh, it's great now. How many times over the past 2 years have I pulled something of this iteration up? And I can say many times, just to be, try to be intellectually forthright here. But this was a trend line that we had previously traded off of, thinking that maybe there was a breakout coming. It didn't pull together. Maybe a breakout's coming. On the other hand, if you started trading this on the long delta side earlier this year in February, because that downtrend is broken once more, you really didn't sustain losses. Maybe buying calls wasn't great, but selling puts in more of a traditional tasty way. I want to express my bullish view by going 45 days out. That would have worked out. And it would have been working out for the better part of the last 9 months now for November, and that began in February. So it does feel different this time. It feels like we have an important series of events that are connecting the dots, the COVID highs, the tariff highs. I'd rather be on the long side of something that looks like it's getting ready to turn the corner in a significant material manner. But if we're below 116, I disavow everything I just said, and I'm getting out.
Yeah, and you could keep saying something and keep being wrong, but you'll eventually be right, Chris. And when you're right, you're right.
One of these days. Just
saying,
one of these days.
Yeah.
Yeah, broken clock, right? Or I guess in my case, more like a blind squirrel. Let's keep this moving over to the metals, which seemingly were finally relaxing earlier. Now they are joining into the pity party with everything else and seeing a little bit more weakness set in here over the course of the session. For the time being, we're holding 40.55. This was a level of resistance throughout the later part of October. You could see here almost in a very clean technical fashion. Former resistance has become support in a number of ways as we've made our way off the highs near 42.50 just from last week. Now at 40.62 though here, this is kind of where the market needs to hold if it's going to sustain any sort of material bounce. It's unfortunate that the market's come in a little bit more like this because for me personally, this is basically where I got in long again. So I've watched the trade go from good to great to now I'm just back to break even. So not thrilled about how gold has performed right now. But if we do get a washout here, Thomas, let's say stocks start to break down, right? And people start raising capital. It becomes a hunt for liquidity, if you will. Then it wouldn't shock me if we see another wipeout down below 4K to like 3,900, where we have that low sitting back on October 28th. So for me personally, I have my line in the sand. I'm going to keep my long gold position on, consistent with holding 40.30 right now. If we're below 40.30, I've had my pain. I will revisit this, see you in 100 or so points.
Yeah, I'm still long gold via the 1 ounce futures. I was going to get long silver last week. I did not. Pretty happy about that. It's like you said, in the early innings of market sell-offs, gold, silver, they go down because people are just liquidating. There's fear. You're selling anything, doesn't really matter too much what it is. You're raising capital, buffering yourself, and then you get through it a little bit. Then the safe haven demand comes in for assets that perform well through recessions. Not saying that's exactly what's happening here, but it's probably driven in part by that fear, and we've seen this a lot on these liquidation days where just everything is getting sold off. And, that fear looks like it's accelerating since we've started talking right now. Yeah, I mean, technically this market, fundamentally too, it's getting a little more where I'm getting more on the bearish side. And I hate to do the thing where I tried to get long like ES last week. I had this call spread I bought. It's at max pain pretty much. I hate to, flip right when you're at that max loss or max profit and go the other way. But I think that's maybe what I'm going to have to start doing here.
Yeah, I'm looking for a trigger here to see if there's anything that more or less kicked off this latest round of selling.
Yeah, I'm not seeing anything.
I'm really not. I'm checking through a bunch of different feeds right now, and I'm not getting anything good, which is, to me, the more concerning. I would much rather have this be event-driven, right? Like,
Right.
Something came out, people are reacting, it's the algos. No, this is just organic people, selling stocks because of their 401k exemptions and it bleeding into other asset classes here. So we have gold coming off. Silver is still in that kind of sim bucket right now, holding above 50. If we're below 49.90 for me, I'll probably be a little bit, let's be honest here, I'm going to give it a little bit more room. Below 49.45, I'm going to cut this and this one from being a great trade into doubling down too early. So nursing trades here. I think that's really the start of my week. Outside of laying out that Russell position, Thomas, I'm thinking the next few days heading into NVIDIA earnings is more about position management and potentially finding ways to reduce exposure and free up capital. Because if we're in the midst of a vol upswing, we want to have the capital ready to deploy it, right? We don't want to be tied up and jump in too soon and all of a sudden like, hey, VIX is at 30 and I just got to hold tight because if I close my positions, I'm taking a big loss right now. No one likes being in that boat. Right. So you mentioned how you play, how do you attack this market, staying small, keeping your stops tight, even if it's not something that you have entered into the platform, but like in your head, okay, if price crosses this level, I'll get out. There are some environments where, we all do this. At least I think we all do this. Like I have 10 lots on and we cross the threshold. I get out of half the position. We all have that greed in us. Like I want to make more money. So I'll let it run a little bit and see what, and then it rebounds. And you're like, I'm so smart. Good thing I stayed with half the position. This is not one of those times, right? It's different when you're looking at a IVR in the S&P or the NASDAQ when it's 10. But when it's climbing and VIX is above 20 and climbing, you have to change tack and keep your powder dry because we want to be ready for when something occurs. So I suppose that's the bad news. The good news here, Thomas, is that the short iron condor position in copper prices continue to just work out really well. We're hugging 5. This is the place where I'd want to be. So no complaints there. Taking a look at the copper volatility, though, last week it was sitting in the high 50s, low 60s. Here it is sitting at 49.3. That would be the one notation that I have about what's happening in the metal space. We are seeing that fairly typical erosion of vol as prices are coming back in. Silver IVR down to 46.5. It was in the 50s last week. Gold, it was in the 60s. Now it's back down to 56. So you could get this weird twist where gold and silver volatility are shrinking while equity vol is going up. And you're just seeing everything in terms of the prices come down. I'd much rather talk about energy, though, because energy is where things are working out fairly well. Crude stuck to 60, Thomas. Talk to me about Venezuela. I saw that we moved the Gerald Ford, the largest airstrike carrier group in the world, to right off the coast of Venezuela as we prepare to not start a new war.
Yeah, I mean, Trump is saying that he's going to talk with Maduro. Honestly, I don't know too much about what Trump is trying to achieve ultimately there. But the posture is definitely one of, aggression right now. You don't move a huge asset. Probably the premier asset of the U.S. military is a carrier strike group. That sends a big message to anyone. And that message is being sent. So him saying he's going to talk while you have a carrier strike group, off the coast, it's interesting for sure. But Venezuela, big oil producer, and I don't know if oil prices are reacting too much to what's happening there. I think it's just more of the same that we're expected to go into a surplus market pretty soon. The economy is softening up. Honestly, I think I said before, I expect prices to stay under 60. So if we get over 60, that's probably going to be a place where I'm selling because I don't see the economy reaccelerating to any degree enough to where oil prices are going to go up really to 70. I think that anytime soon, 70 is a dream. If anything, I see an easier path down to the low 50s than I do 70. So I think this is where you play with like an iron condor is, I think, a really good thing to do right here, or wait for it to pop and then sell call spreads.
So I know this is another conflict that involves a major oil producer, and Venezuela sits on the world's largest oil reserves, about 300 billion barrels. Thomas, it's an enormous amount. Because of sanctions and their economy's performance, they only as of last month returned to 1 million barrels per day. So this is not a significant part of the global oil supply right now. It could be, but it's not at present time. It's not the way that, say, the Strait of Hormuz was. And when people were speculating about how Iran could respond to Israel and to the United States, where through the Strait of Hormuz, about 20 million barrels of oil per day flow through, right? So stopping Venezuela, a million's not going to help anyone. It could push up prices, but it's a completely different level of speculation than suggesting we're going to lose 20 million barrels per day from the global oil supply. I'm bringing that up because back in May, June, if there was this speculation around Israel-Iran, you could go out of the money and go $5, $6, $7 out of the money and buy some geopolitical hedges, if as it were. I don't think that's where you can go now. I don't think looking at like $70 a barrel, we go out here and go, yeah, I'm going to buy the $70 call. Well, they're trading at a penny. That's really cheap. They're trading at a penny for a reason. I would much rather, if this is something that we think is at risk imminently, I would rather do something where, yeah, we still have the short iron condor position on, and that's working fine, well and all. But if we were to go out and consider what's a cheap call option that could be achievable in the event of one of these news headlines coming out, could a move back to 62 occur in short order? What about maybe 64? We were at 64 back in late September. So we're talking about a $3 or $4 move, right? When Israel-Iran tensions start ratcheting up in early May, ultimately the market goes from about 56 to a high of 71.40. So you get $15 in that geopolitical expansion. I don't think we're going to get anything close to that. But on a weekly basis, right, at 4 DTE, looking at long the 62, short 63 call spread, risking 1 to make 9, cost you $90 to have a hedge in your pocket in case something goes sideways. Do we think the stock markets are going to react positively on first blush of Tomahawk missiles slamming into Caracas? Unlikely. But I would be considering this then. This is kind of like the Radigan special, as we might call it, looking for something where it's a big geopolitical hedge, given the news flow. But the carrier strike group's there. And we talked about this many months ago, Thomas, how there was all these military assets building up at Diego Garcia. And what could that be about? And then sure enough, we bombed Iran. So just following where the personnel and the troops have moved, it hasn't let us down before.
Yeah, no, it hasn't. Definitely something to keep an eye on. 62, yeah, I mean, that's definitely possible. I'm not in oil. I'm usually in oil week to week with something, so I'll probably get into something here soon.
I'm like almost certain this is not going to work out, but in the event that it does, let's do the 63, 64. Risk $30 to make 970. If we get filled on it, if we even get filled on it, if anyone wants to make a market for me, because it's just such a low probability event. Trump's been talking today about how he wants to talk to Maduro. He just wants to talk. I don't know to what end. We have oil though, longer term, typical tasty 45 and 21 out. I call it yeoman's work. It's our blue collar trade, Thomas, because it's quiet. It's in the background. It's not getting attention. As long as this market's staying pinned, it's going to keep working for us. And it's worked for us for the past 7 months, or 5 months, going back to June. So there's no reason to betray our good friend, Short Iron Condor. Natural gas, likewise. You and I were looking at pricing last week because of how the market is structured. We could sell calls up in that $5.50, $5.86 area and sell them below $3.50 and still get our 60% probability of profit trade on. And so sure enough, the 3938, and then we go out to the 5859. That is now a 57% probability of profit, but it's still in that neighborhood of 2 to 1, 2.5 to 1 risk to reward. So for me, yes, 62.5 IVR, completely uncorrelated with stocks, completely uncorrelated with the AI hyperscalers right now, unless you want to make an argument that it's related to utility and electricity generation, okay, but that's not where we are at present time. I think anything to reduce beta-weighted deltas this week ahead of NVIDIA and non-farm payrolls are probably the best thing that traders can do if they've had a lot of stock market exposure. And if that's not simply winding things down, then putting something entirely uncorrelated into the stew would work well to, bring some acidity into it, right, Thomas? Like, you got to balance the flavors here. And I think natural gas serves that role quite well despite the shenanigans it's seemingly up to on a day-to-day basis.
Yeah. I got out of my short put spread today, had it on for a few weeks. It was pretty much a max profit. I was going to roll it up. I'm going to wait a day or two to put it back on, just as we get these 4%, 5% moves, and then the next day you get another one that nearly matches that. So I'm going to put this back on probably tomorrow with the short put spread. I see us continuing to grind higher over the next month, 2 months.
Grinding higher. Cold weather's coming. I looked at this, not the Stock Traders Almanac, although I did that last week. I was looking at the Farmer's Almanac, and apparently we're going to get a lot of snow here in the Northeast if the farmers are correct. Let's talk about currency, starting with cryptos. Bitcoin here melting down. Session lows right now, 280 here in the futures market. I'm going to go over to the continuous or the spot contract. It's at 95,218.57 here on the close, but that's how much has changed over the past few hours. I'm just going to go down to that 5-minute chart. Yeesh. It's really been an ugly 2 hours, Thomas. It makes sense. Crypto is the furthest thing out on the risk spectrum. And so if you're getting more defensive, do you cut the safer things or the riskier things, right? Cut the riskiest thing.
Yeah.
So crypto is going to fall first, but you're seeing this spread as the day is going on because the volatility is ultimately still climbing. And this, let's not ignore the fact that VIX is staying up here. We're near a 1% loss now, ES and NQ. Russell's down 1.4% now. And so you have Bitcoin here off 2.2, Ethereum off 4 full percent, as it were, getting very close to taking out the lows that we saw just yesterday when the market reopened. Liquidity reach. And to that point, how's the currency market shaping up today, Mr. Westwater? It's all about the dollar. The dollar is fighting back right now. It is indeed making a push to get through some of the levels that we saw last week. It's trying to climb back into its uptrend that we had from those September and October swing lows. This is as nice of a potential, all things considered. Maybe that's a Morningstar candlestick cluster right up against the 1-month moving average, climbing through the 1 week. Maybe the dollar has a little bit of burst of life here. And if we're thinking about stronger bonds and weaker stocks and weaker gold, in a very classic sense, it would make sense that the dollar would find favorability in that risk-off world. So, I can't help but look at the puzzle pieces here as we kick off this trading week and feel the worst I felt about stocks in quite some time.
Yeah, I agree. I think for myself, I think a euro short looks pretty good here. The euro is going through its 9.21 on the daily right now. We go down, we attack the low from earlier this month, and I think we could get a lot more downside on that since that low matches the August 1st low, which also goes back, you don't have a lower point there until May. So I think this looks like a good short.
Yeah, the euro today, there was a ECB executive board member, who is it? Guindos? Yeah, I think it was Guindos who said, Luis de Guindos said that inflation risks remain and external pressures, including tariffs and sovereign stress, could complicate the outlook, which isn't helping. But it shows that they see limited room to ease policy. I think that's interesting. If the dollar is going to get a kick higher against the euro, it's probably not sustainable insofar as the Fed is still on the cutting path and the ECB does not appear to be right now. If the ECB were to change tack, it's more about a recession concern than anything else. But this is a lower high. It looked like the euro was trying to break its downtrend. It's trying to end the series of lower highs and lower lows. It's not doing so. We're seeing it in the Canadian dollar, which is starting to look, okay, it had a nice little bounce here, but it's starting to keel over and it's not losing this momentum profile, running into that 21 50-day envelope just as the euro did and failed again. You can see it here in the British pound, which hasn't been able to crack through 132. So the dollar's not dead yet. Certainly doing well against something like the yen. This is actually the the yearly high for the US dollar versus the Japanese yen. And that's a place where we've been operating for the past few weeks on a long put spread. I think that if we're going to be getting into more defensive posture, Thomas, long deltas in the dollar and bonds certainly carry the day over long deltas in stocks, maybe even the metals. We should not take the signals that the market's telling us for granted.
Yeah, I'm going to operate in the euro. The yen, oh man. I stopped trading the yen like 5 or 6 months ago after like 4 or 5 bad trades in a row.
You can't give up on it. I did that last year and stopped buying my out of the money calls in the yen on July 1st. And then, of course, the yen exploded to the upside thereafter.
Maybe a New Year's resolution, I'll start trading the yen again.
Yeah, right.
Trade it well. Yeah.
No, and you got to go. That's an important point, though. I don't mean to tease there because I did that earlier this year with natural gas when I had when I get several bad trades in a row where it's like, this has worked out for me. When I see the market doing X, I do Y. I've seen it do X 3 times in a row now, and I've done Y every single time and nothing's working. Clearly, I'm misreading, or the underlying markets change, or the strategies no longer work. It no longer provides that edge. So go back to the drawing board. And that means I'm testing things. I'm paper trading. I'm back testing. Like, okay, am I identifying the proper economic regime? All those considerations. We're going to wrap up here, though, before we go. Last on Friday, cleared the deck of all the currency trades. Today looks a little bit better. I like that 117, 118 short put spread in the euro. It's better than a 2-to-1, sitting right near a 60% probability of profit. I will join you in looking to get short the euro because the dollar looks like it wants to get a little bit more under its wings. There we have it. What's next on the calendar for tomorrow, Mr. Westwater? There are some data releases that might be coming out, but the BLS informed the market on Friday that we begin our unclogging of the U.S. data feed starting this Thursday with the September non-farm payrolls report, 8:30 a.m. Eastern. We do have some Fed speakers coming up, of course. We have a bunch today. We have one tomorrow. We're going to have more on Wednesday. Several of these folks are voting members this year. So pay close attention to what they have to say. Thomas, I'll be back in about an hour and a half for overtime with the gentleman. Before then, though, we have a lot more great programming coming up here on Tasty Live. So I'd encourage everyone to go get a fresh cup of coffee, get a sandwich, whatever you do at 2:25 Eastern time. That's what I'm going to go do. Good luck trading. We'll see you in a little bit.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
So I've been trading for about 5 years, maybe 8 to 5 years, and I got in the options world because I wasn't making enough with just holding long equity. You know, there's not a lot of strategy. It's just sort of like buy it and then pray it goes up. I found Tasty Live from my friend, and I started looking at the YouTube videos. My favorite part about it was just that there was math, there was probability, it was something you could consistently rely on. Once someone gets the right information, which they provide on Tasty Live, they can really change their financial situation for the better. Consistently, not, oh, I bought a stock and it went way up one time, but how can you do it consistently, over and over? And with Tasty Live, I was able to do that.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
En la fila, yo que tengo tanta paciencia, contigo quiero una indecencia, por eso te quiero desacatar. Dale pa' acá, estoy seguro que te va a gustar. Dale pa' acá, yo estoy seguro que te va a encantar. Dale pa' acá, estoy seguro que te va a gustar. Dale pa' acá, yo estoy seguro que te va a encantar. Ahí, ma, tú eres una malvada. Dale que eso no es nada. Tú y yo vamos a quiquear. Ahí, ma, tú eres una malvada. Dale que eso no es nada. Tú y yo vamos a quiquear. Pégate, motívate, prepárate, que lo vamos a hacer hoy. Llégale, no lo pienses, ya lo decidí, que contigo me voy. Dale, baby, que hoy te sale. Tú y yo estamos en falla, vamos pa' los matorrales. Si tú eres una bici, yo te voy a dar pedales. Pero con cuidado que no estoy en comprar pañales. Yo quisiera que me dé un piquito. Dale de comerte huerfanito, no me dejen visto. Por eso te quiero desacatar. Dale pa' acá, estoy seguro que te va a gustar. Dale pa' acá, yo estoy seguro que te va a encantar. Dale pa' acá, estoy seguro que te va a gustar. Dale pa' acá, yo estoy seguro que te va a encantar. Ahí, ma, tú eres una malvada. Dale que eso no es nada. Tú y yo vamos a quiquear. Ahí, ma, tú eres una malvada. Dale que eso no es nada. Tú y yo vamos a quiquear. Te estoy esperando en la fila. Yo que tengo tanta paciencia. Contigo quiero una indecencia.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Man, welcome to the Monday edition of what it is that we are trying to do. Man, I'm gone for 2 days, and this market is in complete free fall. You guys cannot keep it up with my absence, and so I will be sure to never take another day off again in the future until, of course, this Friday. So I will be out this Friday because my son and my daughter are actually singing in this little winter fair at the co-op deal. I rarely go because I'm working, we're in the markets, whatever. And my daughter came up to me over the weekend and she's like, "Hey, Daddy, will you please be here for this winter fair?" And I'm like, "Of course I will be there." So I will be out this Friday too, but that's just kind of a scheduled deal. It's not like a scratchy throat, kind of big head cold. It was kind of a nasty weekend for me, but we made it through, and we are here together as a team. So thank you guys so much for being a part of what it is that we do, because it is only because of you all that we can do what we do. So thank you guys so much. If you're watching over on the Tasty Live network, then I would actually bounce on over to YouTube, because you can join the conversation and join the discussion, and you can communicate with your brethren who are also watching the program. Man, you can celebrate if you're a bear, you can commiserate if you're a bull, but I can assure you it will be a good time had by most. So Josh, bring us into the market. They're squashing them, man. They're really taking them out behind something. And so, EME S&P is down 65. You've got the risk-free instrument, also known as the NASDAQ futures, extremely high-risk product, down 247. You got the boomers down 485, and you've got the Russell 2000 futures index down 37. You got bonds up a little bit, flight to quality. You got notes up a little bit, flight to quality. You got UB40 up a little bit, flight to quality, and has been for the last 35 to 45 years. You got the shifties down 47 on the day. And then where are my Hunt brothers at? It can't be good. I just have to imagine. I mean, if the shifties are getting smacked, the Hunt brothers are probably following suit. Yeah, silver down 60 cents. So you got a lot of selling going on today in the markets. Everything is down except for a couple of flights of quality, but by and large, lots of red on the screen. It's actually helping our portfolio, which we're going to talk about here in just a couple of minutes. But you've got volatility. Volatility futures are up 85 cents, up to 21, and then the VIX spot volatility up $2.55, up to 22.38. So pretty big mover. And then of course the talk of the town today, the story is Netflix. So Netflix did a 10-for-1 split today. And so, man, now we can trade Netflix. I mean, it used to be what, $1,200 stock, $1,100 stock, whatever. It was very difficult to trade Netflix, as a peasant myself. Like, as one of the peons, it's like, how do I get into some Netflix? Like, sure, I can do an iron condor, I can do a vertical spread, whatever, but I want to slang them. Like, I want to get in there with some short puts. I want to get in there with some short calls and do whatever. Couldn't really do that, but you can do it now. You've got Netflix under 110 on the day. So if I go into, let's see here. Yeah, if I go to, what are the options looking like in Netflix? Are they going to be all janky? I would imagine they are. No, not really. A lot of times when you get a split, you kind of get the janky strikes. And I'm not talking about like half point wide strikes, jankiness like this. I'm talking about like your 0.21s, your 0.86s, like those kinds of guys. But this looks pretty standard for the most part. You've got dollar wide strikes. 110, 111, 114. And we're missing a couple strikes, right? Missing a 113. We're missing a 115. We're missing a 117. Right? These must be Tony Batista markets. He's too busy kind of throwing shade on my fence situation that he forgot to post a 113 strike in the Netflix bits. That's about right. That's par for the course for the Batista family. But it's still looking okay. For the first day after the split, Tony Batista aside, it's not too bad. So, all right, let's go ahead, though. I want to get to a couple of things going on in the portfolio, and then I want to get to you guys, man. I see you guys in the chat. Again, you guys were not able to keep it above zero while I was gone, and so that is at least one or two demerits that will be brought up in your annual review. But still, we are here together, and we'll kind of see what's what. And so, but I see you guys. Scramble, everything's here. Rancid Viper's here. Man, Theta Trader's in the house. Man, look at Laid Back Trader showing up to the show. Man, I appreciate you so much. Paul Heyman, Adam Armfield, Brian Dowdy's here. Man, Sam L even showed up. Man, look at this. This is a crazy, crazy show. Even the S&P is down 70 now. All right, okay. So let's go ahead. I want to take a look at a couple of things. I won't go through every single position because I do want to. I want to talk about what you guys want to talk about. And man, guys, wow. So this week, right? Let me think here. Hold on. Let me look at my thing here. If I go to so if I got Tom's watch list pulled up, which he doesn't get the royalties anymore. I don't know where they go. I think they just go off into the ether. I mean, I'm sure Tony Batista gets his grubby paws on those royalties somehow, some way. But he needs to pay attention to those Netflix markets and get us a 113 strike. But I digress. But if I take a look at Tom's watch list, the artist formerly known as the Creator, you look at the earnings coming up, and you can see it's all eyes on this guy, right? Everybody wants to know what is going to happen on Wednesday, which we're going to be together. What's going to happen with NVIDIA? Right? Now, you may hear things about NVIDIA. You may read articles about NVIDIA. It's not the same stock. It's not the same thing that we're talking about. We're talking about NVIDIA. So what's going to happen with NVIDIA on Wednesday? Well, I mean, nobody knows. That's why we're here. That's why we're doing this together, so that we can learn as a team. But I would have to say that all eyes are on NVIDIA on Wednesday. And so you've obviously got the stock down $5 today, just kind of following suit with the NASDAQ. It's going to be a bigger move than the NASDAQ, but NVIDIA has a much larger beta than I would imagine the rest of the market. Yeah, you can actually see it right here. Oh, man, look at this. Oh my God, guys, this is a textbook example. This is like something I used to pull out of, the textbook or out of the markets to use in my classes way back in the day when I was a professor. So way back in the day when I was just a little tyke. Well, I was 28 years old when I started as a professor. Can you even imagine that? I used to walk into class and go up to the front of the room, and all the students would be like, wait a second. Him? This guy's going to teach us? He should be sitting right next to me. Oh, man, it was a trip. We had a good time with it. But when I used to see situations like this was like a perfect real-time example of beta and kind of what it means. So you've got the market, it's not going to be like, we're not going to measure this thing to the actual like 100th of a percent, but you've got the market, right? Down a little bit over 1%. So the market is down a little bit over 1%. We'll call it 1.2%. You've got NVIDIA with a beta of 2.3. So that means that, in a perfect world, NVIDIA is going to have 2.3x the move of the overall market. Now, again, the market could be the S&P 500, not the NASDAQ, whatever. But just to keep things kind of simple here, if I've got the NASDAQ down 1.2% and I've got NVIDIA with a beta of 2.3, I'm looking at a drop of around 2.6 to 2.7%. Man, look at what is in this magenta circle. Happy Magenta Monday to you guys. Down 2.7%. Man, it's almost like this stuff is connected by math. Like it's almost like there's like some quantitative underpinning that kind of lies beneath all this stuff. But again, I digress. And so NVIDIA not looking too good heading into earnings. And so I'm a little scared. I got to be honest. I'm a little bit afraid. But then tomorrow morning, you've got Target, you've got Lowe's coming out in the morning. Maybe we'll do some Target here in a couple of minutes. I think you guys were asking me about Target before. Maybe we'll do a little something in there. And all right, that'll be, let's see. Okay, so NVIDIA, we'll do a Target. And let me see here. Let me go to a couple positions going on here. All right, let's see. If I do, man, I see you guys, man. You guys are still showing up. It's crazy. That's crazy. Look at you guys. Yeah, the videos, I see you guys commenting on the video. It's lagging. It's choppy. I don't know. I don't know why. I mean, everything looks fine on my end. Hey, just be thankful you've got something, right? Beggars can't be choosers. Just be thankful that you're not left. I see you guys commenting on it with only the sultry voice. I can assure you that is a downtick. I can assure you that's EME S&P is down 75. You don't want that, right? At least now the blow is softened a little bit. The gamma risk is mitigated by having a video, even if it is a little bit choppy and it is a wee little bit laggy. But let's go into so let's talk about, I don't want to talk about MES. We got our strangle on. We sit tight. We do nothing. There's really nothing to talk about there. Let's talk about Amazon and Apple though. So now you've got the stocks, both stocks, with the NASDAQ dropping, obviously you've got Apple down, 5 to 6 points. You've got Amazon down 3 to 4 points. I mean, this is perfect for our two short call spreads that we have on in these two products. And so right here with Apple, you've got the stock down to 266. And we have on a 275, 285 call spread, short call spread, of course. And it didn't look too good. It didn't look too good at all after earnings. I mean, earnings were an interesting thing because it went down and then it rallied up and then it kind of cooled off the next day. And so it still looked like our short call spread, it was going to be in a difficult spot. But we sat tight, we did nothing. And now we're in a situation where, that's an economically significant profit. I mean, I wouldn't say it's the greatest profit ever. I wouldn't even say that it's necessarily near our profit target, but it's economically significant. And so now we're getting to the point where it's like, okay, we've taken some heat on this position. It's been a little bit of a bumpy ride. We could sit tight. We could do nothing. That, of course, is rule number one for a reason. But still, we now have an economically significant profit on our hands. We do have a couple of binary events on the calendar this week. We've got NVIDIA on Wednesday. And then if I'm not mistaken, again, I got to check my notes by tomorrow, by Wednesday, whatever. But I think, do we have a jobs number this week? I'm not sure. Let me check the tapes and check my numbers on that. But if we've got a jobs number this week, I can assure you it will be unlike any jobs number to come before it. So we've got that guy coming on down the chutes. I don't know, man. I think it makes sense. Okay, so Josh is telling me that there is a jobs number coming out on Thursday. A Thursday jobs number? Is that even allowed? Like you're not even supposed to do that. That's like going in on Monday and hitting delts. We've already talked about this a million times. You can't go in on Monday and hit arms, right? You can do chest or you can do legs. Those are your only two options. You do chest if you're a trend follower, if you're a momentum trader, like a Nicky Batista, like a Tony Batista, whatever. But if you're a true contrarian, you do legs on Monday. Nobody's doing delts on Monday. Nobody's doing arms on Monday. Nobody's reporting jobs on a Thursday. But alas, here we are, man. Jobs Thursday. It doesn't even sound right. Jobs Thursday. Now you know this number is going to be extra, extra imaginary. Man, I can't even wait. And so, all right, so Apple, though, let's take this guy off because we do have an economically significant profit, and I have a ton more things I need to talk about, and then I got to get to you guys. But let's go in here, and my show feels so much shorter now that we have to get off 5 minutes before, which is good. I think for the seamlessness and the transitions from one show to the next, everybody's doing a great job, and I definitely think it's an uptick, but I have to get used to it. And so that's why I'm kind of putting myself naturally on like 2.75x in terms of the speed of my speech. But Amazon, So 235, 245 short call spread. You got the stock now down to 231. You know, we're still down on the position, which that kind of stinks. But this is going to definitely be a do nothing situation now. So now we finally got the stock where we want it. Now we just need to sit here for the next, I don't know, like 15 or 16 days. That'd be pretty good. And so for Amazon, we do nothing. But Apple, I'm very, very pleased with how Apple turned out. So, all right. So that's Apple and Amazon. Now, oh my gosh, how did I forget? Man, I'm totally out of sorts. Like, this just goes to show you. I mean, I was off last week. I got jobs Thursdays now. My fence guy's finishing up. He's doing an amazing job, by the way. Guys, victory laps. Not one, but 2 victory laps from last week. So that's how you know it was pretty bad for me on Thursday and then into Friday, because I had 2 victory laps, man, staring right back at me in the mirror, and I couldn't conjure it up. I couldn't muster up. My throat was in a really, really bad spot. And so Disney and Cisco, I mean, the scissor was right there, and I did not take a sip. I just couldn't do it. And so I actually did take some sips of some scissor to help my throat, but it wasn't this Cisco situation we've got going on right here. At 68 cents, we bought it back for. You can see we pushed these trades out on Friday because I obviously knew that I had some winners on it. I'm like, well, let me at least get these guys off. And so if you are on the follow page, you saw these guys come out. If you're not on the follow page, then you should be. Like, if you're not following my trades on the Tasty Trade follow page, that's on you. And by follow, of course, I mean fade, right? You need to just get the notification. Get the notification. Dr. J is bullish on Disney. I need to be bearish. Yes, I got lucky here, but trust me. This is not going to turn into a streak. This is not going to turn into a regular thing. This is very much a one-off. Although statistically, this could be the beginning of a 20 to 21 in a row streak. And so Disney and Cisco both worked out on Friday. We did Disney. We bought this butterfly for $229. We sold it out for $584. So just a quick little $3.50. That was super nice. And then Cisco, we sold that put for $227. We bought it back for 68 cents. And so I'm no Julius Spina, but that looks like a pretty nice winner. That looks like it's over $1.50 on that trade right there. And so both of these earnings trades worked. I definitely wanted to reference the victory laps. I don't have much more time I can spend on these, which is very, very sad. Trust me, I know. But we have to get to some other things in the portfolio. And so Disney and Cisco, we did it. And boom, there you go. So let's go back into the portfolio, though. You can see we still have on the short call in Disney. So we definitely cheated death on this guy. Like, we were zigging and zagging between raindrops, man. I mean, now we have a short call on in Disney that we sold for $229, and it's only marking for 12 cents. And so, again, there's no reason to hold this any longer because we can only make another 12 cents. But we could potentially lose all the profits that we've gained in the position, plus the unlimited risk that already comes with a short call. And so it would really be kind of not that great if Disney just ripped to the upside tomorrow or the next day or whatever from a news event or just market-wide rippage or whatever. And so it doesn't make a ton of sense to keep this guy on, in my opinion. I really think that, in fact, this may not even be an opinion. I don't think anybody would look at this situation and say, you know what? I want to go for those extra 12 cents. Like, nobody's going to look at that and say, all right, I'm going to leave this risk on. You're leaving on unlimited risk for 12 cents. I mean, that's kind of like a Nick Batista type of trade. I mean, he was talking about his Oklo situation this morning. He did like a 1x2 or a 1x3 or like a 1x9 or whatever it was. Like, he was risking like, 10, 20 grand for like 80, 90 bucks. It's like, no, that's a trader right there. Now, that is a trader if I've ever seen one. And of course, I'm only joking. He only risked like, 9 grand for 80 bucks or something. And so for Disney here, let's go ahead and let's take it off. I've done worse. I've done plenty worse, and I'll continue to do even worse than that moving into the future. But let's close out of this Disney trade, and I'll be done with that. So we did Disney, we did Victory Last, we did Apple and Amazon. The other two I want to look at real quick, and we're gonna do this real quick because again, I really want to move on. But look at Kimberly Clark. Who gave me the Kimberly Clark? Was that Theta Trader? I think that was Theta Trader. I'm pretty sure it was. Man, I appreciate you so much, Theta Trader, for this Kimberly Clark trade. Kimberly Clark, we'll leave it on. We're up like 50 cents on the trade, but we'll leave it on. But look at PayPal, man. Look at this thing. So this is a really nice looking trade. Let me let's grab some yellow. It's a little easier to see. Look at PayPal. Even S&P's down 83. NASDAQ down 319. Whew, man, I don't know. I mean, if you can have a jobs Thursday, you can certainly have a taco Monday. And so I would just hang tight, guys. Just hold on to your britches. Like, we're going to be fine. Once we get the all clear sign, now is a good time to buy stocks, because that happens about once every, I don't know what, maybe 2 to 3 months. I think we're about due for one of those. Then we'll know. Then we'll know that, all is clear. But PayPal, you can see we've made about $2 on this trade. We paid $2.38 for the spread. It's currently marking at $4.47. This is another situation, though, where it doesn't really make a ton of sense to hold on to this any longer, because the maximum value of the spread is its width. So the maximum value of the spread is $5. It's currently marking at $4.47. I'm no Jacob Perlman, but it doesn't look like there's a lot much left to be made. It doesn't really look like we can, make a ton of additional profit on this position. And so I think the time has come for this trade to meet its maker as well. And so, man, a lot of winners in the portfolio. It's never been done before. Never been done before from Theory to Practice. If you're brand new to the show, welcome aboard. The video is usually a little bit smoother than this. Maybe not much smoother than this, but a little bit smoother than this. And I'm not usually this good of a trader. So there's a lot of things happening today that are not necessarily indicative of what you would expect on a regular day of the show. But I hope you come back. I hope you come back, and I hope you stick around. But let's put this down for 447, or I'm sorry, take it off for 447. All right, there you go. We got Phil. We got improved, actually. 451. Beautiful. Okay, so that is PayPal. We did everything else. I mean, Delta Airlines is fine. Qualcomm is fine. Starbucks is fine. Okay, so let's go ahead and let me look. Man, I see you guys in the chat. I'm going to get to you guys. Let me see. It's Target. Target's tomorrow, right? Target and Lowe's, I thought, right? Target is 11/19 is not tomorrow. 11/19 is Wednesday. So we may not have anything to do today. We got nothing to do today. Oh, we got Baidu. Oh, we got Home Depot. Yeah, I'll do a little Home Depot. And again, this is just basic stuff. I don't really think you need to overthink this. You're either a Home Depot guy or gal, or you're a Lowe's guy or gal. You can't be both. It's not allowed. You have to pick a side. And when it comes to this, it's pretty obvious. It's pretty clear. It's Home Depot all the way. Right? Like, nobody openly admits to being a Lowe's guy or a Lowe's gal. The only reason you would go to a Lowe's is it might be geographically closer to you than a Home Depot. But if it's equidistant, like if there is no volatility skew, everybody's going to Home Depot, and that's the truth. So for Home Depot here, let's play to the upside. So let's go into the, I think I'm going to go into the December cycle. And you know what? Actually, let's go December cycle. Let me see if I can kind of sell a put spread in here. Maybe a 350, 340. That's not too bad. I mean, it's not amazing, but maybe a 355, 345. Okay. So here's the trade, guys. $358 stock. So it's going to be more challenging to do something undefined risk in here. I don't want to do anything expect to move butterfly, because I want to save all that. Because we've gotten the videos. We've got, USA earnings on Thursday morning. There's a lot of things coming out. And so we'll save the butterflies for that. We got to leave the butterfly powder a little bit dry. But let's go in here. Not going to do anything undefined risk because the stock price is too high. Not going to do a butterfly because Monday butterflies, they're okay, but I much prefer the later in the week butterflies. But here, the short put spread is not that bad. I mean, we're going to collect almost $4 on it. So we're risking $6 to make $4, risking $1.50 to make $1. I like that trade-off for a defined risk trade. That's usually where I tend to land. I tend to ratchet up the credit a little bit above 1/3 the width of the strikes, just to control the risk a bit more effectively on trade entry. Because oftentimes with a vertical spread, that's the only time you have to control risk effectively. You're not necessarily going to be able to kind of, weasel your way into risk reduction down the road without necessarily doing something maybe, super innovative, or even adding risk to the trade, which of course is not at all risk reduction in any way, shape, or form. And so I think for Home Depot here, stock's at 358. We do a 355, 345 short put spread. 392 is your mid price, and that's it. There's your Home Depot trade. Again, I'm bullish Home Depot. You guys know what that means. Sure, I hit Cisco. Sure, I hit Disney. Is this the beginning of great things? I highly doubt it. And so let's see here. I'll go 388. Home Depot to the upside. Boom. There we go. We got filled. All right. Excellent. Okay. So there's a little Home Depot action for the morning. And then, we got all the crazy stuff happening later on down the week with targets and the videos and things like that. But where are you guys at? Man, let me see. Let me try to surprise and delight somebody. Where are we at? I see you guys talking about F cubed. Man, I appreciate you. That's my own little private deal. That's my own little side hustle. Yes, that's correct. It is fitness, finance, and faith. That is 100% correct. Correct. And so let's see. Where are we at? Let me surprise and delight somebody in the middle. I gotta find something. Oh, here we go. Albacore D3Q. You know what's so funny about Albacore? So hold on, give me like 6 minutes. So I was just talking to Autumn the other day, right? So you have to understand, like, let me just take you guys back into the Wayback Machine. Seriously, 9 minutes. This will be quick. You won't even, it will be painless. I was talking to Autumn the other day. I'm like, man, during the day, sometimes I get so busy, like in the middle of the day, prepping for the show, doing the other things for the network. And, it's like, I just have so many things and emails and whatever. I'm like, it's difficult for me to have like a full lunch. It's difficult for me to have like something that's, kind of like like a spread, if you will, right? Like a feast. I'm like, I need something quick. I need something portable. I'm like, I need something that's, protein packed. And I'm like, what might be making a comeback? And she was like, don't say it. Please don't say it. And I said, tuna fish and applesauce. I'm like, I think it might be resurrected from the dead. Speaking of faith, I'm like, I think we need to bring this thing back. And she's like, please do not do that. Like when she first met me, that's when I was like, I was in it, man. Like I was deep in it from a tuna fish and applesauce standpoint. And so albacore, man, I don't know, but I wouldn't go with the albacore. Like if you're going to do it, you got to do it right. You got to go chunk light. You got to go with the dirt cheap stuff. Like if you're going to do it, don't dress it up. Don't try to turn it into something that it's not. Like it's got to be chunk light in water, not even chunk light in oil. But anyway, I get to your question, albacore. If you're brand new to the show, this is pretty much what it's usually like. If you have a deep in the money call and you want to roll it up and out and the 21-day window is near, do you wait for a big down day to roll up the call? Okay, so if you have a deep in the money call, so I'm assuming you mean a short call, of course. If I have a deep in the money call, so, I sold the call, stocks run up, I'm getting hurt. You want to roll it up and out and the 21-day window is near. Do you wait for a big down day to roll up the call? Okay. So generally speaking, if you have an in the money call, you kind of want to think of, so one thing you'll always hear us say is kind of rolling into strength. Right? You want to roll into strength, but that's obviously true, but we really need to unpack what strength means. And generally speaking, here's the easiest way to think about it. Whether you're out of the money or you're in the money, this will always kind of guide you along the right path. If the stock moves such that you are moving closer to an at the money situation, that is quote unquote strength. So if you have an in the money call that you're short, you want the stock to go down. That's going to give you a more favorable roll price than if the stock went up. So yes, you are correct there, albacore. If you could choose, which again, it gets a little dicey kind of waiting for the perfect move or the best day or big down days, big up days, whatever, to make the roll, that's what you would want. You would want that big down day. But again, it may not come. If you do get the big down day though, that's going to be the best possible time to roll that call. That is correct. You can roll it out. You can roll it out and up, like whatever you choose to do. The stock being positioned such that the strike is now closer to being at the money is going to give you a more favorable difference between the extrinsic value in the current cycle and the extrinsic value in the later cycle. And again, it doesn't matter if you're talking about puts. It doesn't matter if you're talking about calls. It doesn't matter if you're talking about in the money or out of the money. Just think of the at the money strike and it having kind of a magnetic effect. And if you are moving closer to that at the money strike, then you would be rolling into strength. So another great example of that, just to really drive this point home, because this is something we say on the network and have said on the network for many, many years, but it can be very confusing because oftentimes we don't stop and kind of unpack what it means. If you want to sell a put, so let's say that you are looking at, let's say you're looking at Netflix. Perfect. Netflix, split adjusted, $110 stock. You're like, man, I want to sell this 100 put, right? What would be selling the put, quote unquote, into strength? It would actually be the stock going down. It would be the stock going down because that put price is going to be going up. The put price is going to be going up. You're going to get a more favorable entry price. And so that would be another example that's very different from your in the money short call that also kind of describes, rolling into strength or selling into strength or something like that. And so again, the strength thing, you just have to stop and really think about what that means. And so hopefully that helps a little bit. But even the S&P is down 87. Man, that's crazy stuff. And so, all right, Sam L's in the house. What's up there, Sam L? Doc, welcome back. Fully caffeinated, dry scooped, and probably running on some mystery vitamin syrup you found next to the ghost cans. I think they have the LMNT next to the ghost cans, but I've got very strict instructions. I can't get LMNTs. I really shouldn't even be getting ghost, but we make it work. We move some cash around, and we find a way to make it happen. But the markets aren't ready, but we are. Now that you're officially the technical analysis PhD, that's true. That actually, it worked in Disney. I remember we did all that technical analysis. I mean, I was in the charts for what, 30, 40 minutes? I mean, I can't remember exactly, but you guys can back me up on this. I mean, we were in it, man. Like, we had the sleeves rolled up, like sweat coming off the brow, and we did it. It all worked. And so I don't know, man. Maybe there's something there. But Sam L says, check your nemesis Oracle. Chart lower than lower than lower than low, low. Your trade was spot on. Just a few fiscal quarters too early, as always. What is Oracle doing? Wow, 216. That's a pretty big drop. Yeah, that's a pretty, this is the waterfall structure, right? Again, only the advanced technicians know what I'm talking about, but this is the waterfall structure. And so it's just lows and lows and lower lows and lower lows, and there you go. And so obviously this is mega bullish, but this is the waterfall structure. And so, yeah, we weren't wrong in Oracle, just a wee little bit early. We missed it by about 140 points or so. And so Brian Dowdy in the house. Hey, Dr. J, I didn't take eBay off. Ooh, famous last words. Yes, I was down 400. I was wrong, assuming you'd advise to do nothing. My trade is now red. I'm good at taking winning trades and turning them into losers. Not quite like I do. Nobody jaws. Nobody snatches defeat out of the jaws of victory quite like I do. I can assure you of that. But yeah, I mean, that's trading, right? I mean, I wouldn't beat yourself up about it. Plus, it's a covered call, Brian. So, I mean, the risk is it's not astronomical. You know, you've got eBay at what? Yeah, 82. I mean, it's nothing, right? I mean, you're probably going to get another off-ramp opportunity in a couple of days, and you'll probably, not take that one too. And that's trading, right? No, hopefully you do take that one, but you know what I'm saying. Like, this is trading. Like, this is 100% trading, and so I wouldn't beat yourself up about it too much. Orgdenu's in the house. What's going on there, Orgdenu? Hello, Dr. Jim. Hope you feel better, man. I appreciate you, my friend. I got back to you. I hope that you saw that. And so thank you so much for all the support of the show, and I just appreciate you. Please say hello to your wife and your kids for me if they happen to be watching. Hello, Orgdenu's Erasmo's wife and kids. I really appreciate you guys tuning in. That's really, really, really cool. And so Ash Finn's in the house. What's up there, Ash Finn? I appreciate you, my friend. Thank you so much. EMS&P's down 91. Man, it's bad out there. It's nasty out there. And so let's see, Ash Finn, Samuel, Dr. Tim, hope you cast out the Starbucks position. Certainly did not. And took the fam to Disney. Didn't do that either. To celebrate all the winning trades. Yes, all two of them. Which is usually, well, I guess we had a couple more in just the normal portfolio, but earnings-wise, it was just the two, Cisco and Disney. But let's see, Brian, glad you made a full recovery and feeling better. I'd say I'm about 90%, 85 to 90%. And so, but at 44, 85 to 90%, that's about the max, right? That's about the best we can hope for. And so I appreciate that. Grumpy Mike is in the house, ambitious and influential. Not sure who you're talking about. Probably not me. And so I'll step aside from that one. Paul Heyman in the house. I like these later start times of your show. I now can sleep in later. Paul, you talk about your naps, right, Paul? Because you're a boomer, man. I met you. Paul's a boomer, man. He's one of the leaders of the boomer generation. Paul, great guy. Chatted with him maybe at one or two of our shows, I think. I know at least one. And I know we chatted a lot about M2 and a lot about like your number theory and a lot about gold and stuff. And so Paul's got to be talking about his boomer nap. He's not talking about the morning. Come on now. I know you're getting up at like 5 a.m. And when you get up at 5 a.m., just like Nate Bargatze says, man, noon is really far away. Like it is an eternity away. And so I can appreciate that. I can definitely appreciate that. Theta Trader in the house. Dr. Jim, there are rumors of Luck-In Coffee returning to the U.S. market. If they get relisted, what percentage of your portfolio are you immediately investing at any price? I mean, I've never heard of them. So I'll give you a token 30%. Like we can start at 30% and then I'll do some research and then I'll get back to you to consider any incremental additions over and above that 30%. But yeah, Luck-In Coffee, I mean, I like it already. It's got a pretty cool name. And so the fact that they're getting relisted, this is my kind of stock, man. Like that means that they got the Willie Mays Hayes pink slip and now they're back. Like just like Major League 2 when they brought in a different guy for them. It wasn't even Wesley Snipes. Like they brought in what's his name? Oh, Darnell Jefferson from the program. What's his name? Omar Epps. That's it. Omar Epps was Willie Mays Hayes, I think, in Major League 2. And so, yeah, maybe it'll be kind of like one of those deals. But scramble everything. Welcome back, Dr. Jim. Good to see you. Nothing says Monday like a recovered Dr. Jim must have taken extra vitamin B, by which I mean blueberries. That's correct. And a large dose of B- humor to heal you up fast. Yes, we are shooting for it. We're probably more like about a C+ range right now, but we're tossing it out there, man. And we'll just kind of see what happens. Adam Armfield in the house, but thank you there, scramble everything, of course. I appreciate you. Adam Armfield. Hey, Jim. I have iron condors, which are underwater on the call side, NVIDIA and SMH, amongst others. With these two, I'm torn about closing the put side before NVIDIA earnings. Good if it misses, but not good if it goes up. Yeah. We've talked about this just recently, right? I mean, the research team has looked at this a number of times, and it may seem a bit counterintuitive, and I can respect that. When you have an iron condor on, though, and it runs to one side, taking off the other side, there's no big difference in the end. But again, there's no big difference. So that doesn't mean it's hurting you. It just means it's probably not helping you that much. And so I can appreciate the fact that I'm like, that maybe doesn't make a lot of sense. It's like if I've got this, like you've tested on the call side, right? So I've got these, the put side of these NVIDIA Iron Condors, and I'm in a situation where they're marking it 10 cents or 8 cents or whatever. It's like, just take them off. Like you can only make another 8 to 10 cents. They're almost quite literally not helping you at all. And so just take them off. And so I'm fine with that. I'm 100% fine with that. But again, if you can't do that, like your schedule doesn't allow, you can't be in the markets all the time, like I think you're fine with just leaving it on too. Again, just kind of using the tasty research as a guide. That's the thing. No research is end all be all. Like every research study that's ever been done, and I know this having had to do academic research, like getting published and things like that. Like I did all that. I can assure you it was of B- quality at best, but I had to do it. I had to play the game. I had to do all that stuff. And you always have to make concessions whenever you're setting up a research design. The Tasty team has to do it too. You can't possibly mirror or mimic real life. It's not possible. And so you have to make certain concessions. Like one of the most classic examples of this is the Black-Scholes option pricing model. The Black-Scholes option pricing model assumes constant volatility. Is that the case? Absolutely not. If that were the case, none of us would even be here. If that were the case, we would not be able to do anything that we were doing. But does that render the Black-Scholes option pricing model completely obsolete? No, I don't think it does that either. But you just have to be aware of, okay, what are the concessions that have been made here? Like what types of assumptions are being made on this model? And so then you have to kind of make some, use some critical thinking to determine, how valid the results might be, or, what they might be missing, or what they might be trying to say that maybe shouldn't be said, and things like that. And so all that to say, go ahead and take off your, your side of the Iron Condors. That's the winning side. I have no problem with that. And so let's see. Theta Trader says, wow, that was a flood of comments. Perhaps I will be surprised and horrified. In the middle of the pack here, man, I got to you, and it wasn't even surprise and delight, right? This is arrested and recovered, Dr. Jim, again, about 80, 85%. And so we're just moving through it with an efficiency you guys have not seen before. And so again, my expected move on number of questions is usually around 0.4 to 0.7. I've knocked out like 6 or 7 in this show. So I'm way, way, way outperforming what you guys expect. But let's see, Theta Trader, but now everybody shut up and listen to the mariachi yelling random things in Espanol. Oh, maybe that was one of the commercials. That's pretty funny. Laidback Trader's in the house. What's up there, Laidback Trader? Sergio's in the house. What's up there, Sergio? Grumpy Mike talking about some taquitos. That's a Taco Bell deal, right? I think that is. I'm not 100% sure. But let's see. Sergio says, how much is the delta of Dr. Jim dancing to this tune? Not much of a dancer. Not much of a dancer at all. I'm sure you guys probably already knew that. But just in case there was any mystery out there, we can put all that to rest. And so scramble everything. It's like the flood in SoCal getting rained on again, taking its cue from the market. Yeah, maybe so. Even the S&P still down 88. NASDAQ down 315. Boomers down 670. Whew, man, that's crazy. Rancid Viper, welcome back, Dr. Jim. How is the fence going? It's going extremely well. My man is working his tail off. Great dude. Even better fence guy. Great dude, even better fence guy. And so that is my official statement. Very happy with how things are going. And it should be done in the next, 3 to 6 weeks. And so scramble. No, it's going to be like a couple days. Scramble everything. But I told him, I'm like, just do it whenever, as you want to do it. It's totally cool. Like, I'm in no hurry. It's been sitting in a pile. It's been a pile of ashes in my yard for over a year. Like, trust me, I can assure you there's no rush here, man. Like, it can be whenever you want to do it. Like, it's all good. And so anyway, I digress. Dan Ducarn, Sergio, I would say 300 negative delta on him. Trump dancing to that tune. No, I'm not doing the Trump dance. Sergio says, are we on 2x speed today? Well, I'm at about 2.35. And so we're trying to kind of move it forward. Theta Trader, hold the phone. Not the thing we are trying to do, the thing that we do. Oh, we're not even trying anymore. Like, we're doing it. We're actively actually doing it. We did it, guys. We did the thing. Yeah, well, let me know what that is. Put it in the comment stream because that would really help me out for sure. Let's see. Dan Ducarn. And then let's see. Eric says, now we pay 10x commissions to trade the same notional Netflix options. Yay. I guess you could say that. I guess that would be fair. So if you have I would assume, Eric, you're a Shooter McGavin out there. 6 figures, 7 figures, whatever. That's true. Everything you just said is 100% true. So now to trade the same notional, you do have to use additional contracts. But keep in mind, at least at Tasty Trade, the commissions are capped like after, I think, 10 contracts. So, you're doing like a 20 lot, 30 lot, 40 lot, whatever. You're only going to pay for 10. And so keep that in mind. Like, that's one thing to keep in mind. Also, number 2, you've got to keep in mind, as you sit aloft your ivory tower there, Eric Shooter McGavin, for us peons and peasants, this is kind of good. Like, this allows us to play in that sandbox too. Like, up until this point, it was just you and kind of all the other elitists. And so now we all get to join in on the fun of, losing our money very slowly over time in Netflix. And so I appreciate you there, Eric. I appreciate you very much. Joel James, Dr. Jim, this market is about as stable as your Nah, man. Fence is super stable. Super stable. Can't wait. It's doing incredibly well. Let's see. Dan Ducarn. Dr. Jim doing a Trump dance on the show would be legendary. Perhaps. I'm going to stick with the B- humor, though. I'm going to leave any acts of like physical prowess, which dancing probably shouldn't be an act of physical prowess. I don't know that that's how you usually describe dancing, but it's already out there. And so I don't think I'm going to do that. But Doc Trader, hello, my friend. What's going on, my friend? Appreciate you, my friend. Harvey Birdman in the house. Hello, I am also here. I appreciate you. Doc Trader, let's go Patriots. I don't give a crap about the Patriots, but let's go Bears. How about my Bears, man? I've been telling you guys, I told you guys when they got Ben Johnson, it was over. Like, I told you guys when they got Ben Johnson, it was over. Totally over. And I don't know what more I can do, man. I really don't. Justin Fields paved the way for Caleb Williams. I've been talking about this for years. And so my Bears are looking good. And so let's see here. Theta Trader, away from the numbers in the house. What's going on there away from the numbers? Let's see. Dr. Jim is in the house. And now Josh is giving me the hook, and he's doing it in kind of a snarky way. So we'll go an extra minute. And so let's see. Danish Dynamite. Dr. Jim in the house. Love the red day. Let's go. Yes, Danish Dynamite. I appreciate you, my friend. I got back to you as well, my friend. And so I hope that you saw that. Let's see. Adam Armfield. Kevin Judkins in the house. What's going on? Laid back trader. Ash Finn. The B- instruction. That's correct. Scrum everything. Students were like, who is this stud muffin strutting this stuff at the podium? No, they definitely were not like that at all. They were kind of like, he doesn't know what he's talking about. Like, why should I listen to this guy? And he's going to test me. He's going to test me on this knowledge and on this information when he doesn't even have it himself. Oh, I can assure you. The first couple semesters I taught, it was bad. Like, it was really, really, really bad. And so, but thankfully we muddled through. And so let's see, Albacore. Okay, I got it. So that's where the surprise and delight was. I guess this is a good place to stop there, Josh. And so I appreciate you guys, man. I appreciate you guys so much. Thank you so much for being here and being a part of the show and a part of the network. We really couldn't do it without you guys. And so if I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with Trading the Charts. In the meantime, guys, trade them small, train them heavy, and stay generous. We'll see you guys tomorrow.
And bye.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Global markets never sleep. Explore them with Forex on tastytrade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on tastytrade.
Eso no es nada. Tú y yo vamos a cliquear. Ahí, ahí, ma. Tú eres una malvada. Dale que eso no es nada. Tú y yo vamos a cliquear.
We get caught up, we lose the time. We get lost, we get out of our minds. But let's focus our rosy eyes. Why don't you tell me the rest of the line? Hey, hey, hey. Hey, hey, hey. I'll be right beside you, all I ever want to get.
Hey, everybody, Tim Knight, and it is, it's a very red day. It's an odd thing I've noticed lately because the very best days, the ones where just everything bleeds out, start off completely dull. It's like the ultimate fake out. And that happened again today. So futures open on Sunday, they were red for a little bit, and they went green. And it climbed and climbed and climbed. And midnight my time, when mercifully I was asleep, everything was just blasting higher. And then for reasons I cannot divine and do not matter at all, it began eroding. And the really cool thing that happened today, and I was watching the incur in particular, is it fell and found strength right at the opening bell, rallied, and the incur is up triple digits, fell again, got a little bit below where it was last time, rallied again. It's like these bulls just won't quit, will they? Fell and started to rally, and then bleh, it cut below, well below those prior two lows. And we're at pretty much at the day's lows right now. And as I said, like, I'm losing track, but a couple of weeks back, I don't know if it was 2 or 3, I was really, really light, down to like 35, 40% commitment. And what I mean by that is like 100% is like all cash, and 200% is like cash and margin and every penny I can borrow. So I was like at 40%, like virtually nothing. And I've been ramping up. Now, at the moment, I have 43 short positions, 43, and the commitment level is like over 200% now. So crazy short at the moment. And is it because I'm counting on NVIDIA to fall on Wednesday? Absolutely not. I'd like it, but I'm not. That's not the basis. I always look at things one chart at a time. I set stops one chart at a time. Now, these aren't immune from the market, of course, because I can set them one stock at a time, and if the market just goes blasting higher, they're going to get creamed. But I tried, instead of making a macro, everything's going to go up, everything's going to go down, I just look at things on a very granular basis. And it's almost like kind of building an organism and seeing how the organism lives in a certain environment. And the cool thing about this creature that I've created is that even during those aforementioned rallies, it just kind of put its fist on its hips and said, well, no, I'm not budging. And so it really didn't suffer much. But when things started selling off, it really began to blossom nicely. Mixing all kind of metaphors here, but you get the idea. Anyway, I've got some charts loaded. And of course, huge week with NVIDIA on Wednesday afternoon. And just to sauce things up, they finally announced the jobs report 48 days late. It's going to come out on Thursday morning. So Thursday is going to be a little crazy, and I wouldn't be surprised if Wednesday people are just sort of like deer in headlights, don't know what to do because of the snare drum in the background. So let's start thumbing through a few charts. Here's the spider, and it's, the charts are working beautifully. The charts are doing exactly what they're supposed to do, because we had our failure here, we fell, we rallied, resistance, 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 and then down we go. So what we want to see, of course, would be the next little victory for the 3 bears on the planet left, me included, will be to cut below last Friday's low. Is that last Friday? Yeah, I think it is. No, 2 Fridays ago, I beg your pardon. Last Friday's here, obviously, but the 2 Fridays ago low, right there. So that would be a step in the right direction. Now, I'd remind you that the Dow Industrials was at the highest point in the history of the universe Wednesday. That was like 3 trading days ago. So, that's gone. We completely undid that. So all the gains from here and here and here and here, completely undone. So we're back down to where we were. We might even be just a little bit below a couple of Fridays ago. So a lot of progress there. The cubes are down 1.2%. And as I look at my screen now, I mentioned the 43 shorts. All 43 are profitable, some of them crazily so, and it's just a sea of red. But this isn't with some market that's like, it's not a crash. We're down like 1 point something %, generally speaking. But things are so overpriced now, so wildly overvalued, that it doesn't take much to get things going. So the cubes are in the vicinity of last Friday's low and the prior Friday's low, which of course was that big hammer pattern right there, which preceded a brief respite for our bullish friends from the selling. So we fell, bottomed, sprung back exactly to resistance, and then resumed the selling. So, the whole AI thing has been breaking down. It's gotten really stale really fast. So a lot of those super hot sectors like quantum, hyperscalers, individual stocks like Oracle and Meta. Oracle was approaching, Meta was approaching 900, and it was in the 500s last I checked, which I wrote at length about middle of August about how Alexander Wang and the superintelligence lab was just going to be a fiasco, and so far so good on that. So yeah, SMH, which is of course very, very influenced by NVIDIA, is down over 2%. And this breakdown's been very good. We saw the first little damage here, fell below it, bottomed a couple of Fridays ago with that same hammer, jumped it back into the pattern, but that did not last. Afterwards, resistance, resistance, and then down. But we haven't even matched last Friday's lows. So like I said, it's not like some giant wipeout. It's a diminishment, but it's very, very helpful for the bearish case, the fact that we're going down today. Because my concern was that we would repeat what happened a couple of Fridays ago, which was to have a 2 or 3 day substantial rally. But as it is now, the weakness is persisting. And they fought it. If you were watching today, like I said earlier, they really fought it. I continue to be short AMD, which isn't a great pattern. It's a total meh. I've given up on Micron. Micron was earlier today at its lifetime high. I almost shorted against, fool me once, shame on you. Fool me 17 times, shame on me. I'm not touching Micron again, which probably means today is the peak. But yeah, sorry. The individual semiconductors are not great looking patterns. They're very, very expensive. But in terms of just straight up classic charting, which is what I do, no, they're just really high in the sky, and that's about it. Good heavens, look at these. Yuck. So there are beautiful patterns out there, tons of them. Tons. AMD is not among them, but I'm remaining short. Here's Intel, which is down over 3.5%. So this whole government largesse, let's throw tons of money at Intel and try to save this that's over. The thrill from that is past. It's in the rearview mirror, and now it's selling off as God intended. Just a few individual shorts. I'm not going to show you all 43, but just a couple of them. Here again is AST Space Mobile, which continues to stair step down in a series of lower lows and lower highs. Here is Kohl's KSS, which is down nicely today, over 5%. We can see here this exceptionally long level of overhead supply. Roblox, again, down about 1.5%, stair stepping its way lower as well. Axon, this was almost $1,000 stock not long ago, and we're approaching the $500 level. So this is down about 2.5%. Couple more. CoreWeave, CRWV. This is a relatively young stock. And as I mentioned, the basis of this, when I shorted it back here, was this nice little rounded top. There was a cute little rounded top here, and it led to this sell-off, which this would have blown a lot of bears out, including me. But it did sink quite a lot. And then we've got a new one here, which importantly has sunk below this support level, which is now resistance. And so there's precious little to hold it up at this point. HIMS, remember this one? HIMS and HERS. This was a new idea last week, down today alone, 6.31%, under that tremendous head and shoulder top and this just mountain range of overhead supply. And here's one that I do not claim to be short. I did short it, I profited from it, and I covered way too soon. Cracker Barrel, CBRL, old Uncle Herschel here. You may recall the culture wars back here. Roughly speaking, I think this fall here was during that whole kerfuffle about she changed the logo, bring Uncle Herschel back. And it bottomed here, and they brought Uncle Herschel back, thank God. And then it rallied for a couple of days as they all jumped in to celebrate their victory, and then it's been a complete catastrophe ever since. So that's just melting away. And that has been exercising a multi-year bear market of its own. I mean, look at this. Very few stocks look this bad. But Cracker Barrel is just a wretched equity, and down to like 80% or more, something like that. So, wow. Let's keep the joy flowing here. Speaking of restaurants, here's another one that's sinking. Cava. This is the Cava Group, and this is, I think, kind of a Mediterranean casual dining experience here, but it was a tremendous stock for a while. And there were articles written about how this was the most expensive restaurant stock, I don't know ever, but certainly at the time. So they compared it to all the other richly valued public restaurant companies, and it was exceptionally expensive, particularly on a per store basis. And those articles were on the money because they were and it's very tough to be bearish about something which looks like, this, because, it's hard to argue with success. If it's just going up hundreds and hundreds of percent month after month, well, if you're bearish about it, you look like a dope. But there it is. It's just unraveling because the fundamentals did not support that that valuation. Energy is going well also. Crude is down modestly, but energy stocks are having nice reversals. Here, for example, is ConocoPhillips, COP, down over 2.5%. And Occidental is also down about the same amount percentage-wise. Here again, not beautiful charts. I mean, there are some just dynamite charts that would be beautiful for a textbook about certain patterns. But this is not among them. Like VeriSign, I mean, I keep talking about these great patterns that I'm not showing you. Okay, thank you. What are they? VRSN is one. Good heavens, PGR is another. They're out there. They're really good looking. go to Slope. Check them out. I'm going to be writing about them tonight. What else? How are we doing on time? 3 minutes. What else can we talk about? Well, Bitcoin continues to collapse. This has gone from almost 130,000 down to 91,000. I saw Eric Trump still trying to, they say, buy the dip, and he called it digital gold, which is, I think, the 10 millionth time somebody's called it that. So nicely done, Eric. Clever. But yeah, it's collapsing. And anything associated with crypto is going down too. For example, Circle Internet Group, they came public, did fabulously well, and we're just about back to its first offering, its IPO day. So this is down, I want to say 75% from its peak. And of course, Michael Saylor's strategy, MSTR, is down again, and it's down, if memory serves, it's down, I want to say 65% from a year ago. So that's MSTR. So yeah, and even, you remember this one, our right triangle friend, DeFi development. I brought this to your attention. This also continues to fall. Really good looking right triangle pattern, like so. And let's extend this out. Well, it's not doing so. Forget it. You get the idea. Anyway, this continues to fall as well. So yeah, all things crypto looking pretty bad. But the belle of the ball is going to be NVIDIA in about 49 hours from now. Everyone's going to be running around either celebrating or screaming. NVIDIA from the beginning of August, so all of August, all of September, all of October, and then whatever part of November we've had. So about 15 weeks after all that time, almost unchanged. So here, that's actually July 31. So from July to now, almost unchanged. It doesn't know what to do with itself. It's a very inscrutable pattern. I have no particular disposition about which way this is going to go. I have no position in it. But as I say, if the trading gods are listening, I'd love for it to go down. Yeah, big event there. Not even a coiled spring, just completely at a loss itself. What's next? It's not giving any signals. So that should be really cool to witness. I might be inclined to take some profits off the table beforehand. It's just such a big risk. But in closing, I like what I see, and we're basically at Friday's lows right now. And my fear about this hammer, that is to say, this hammer from Friday, replicating what happened with the prior Friday's hammer, that hasn't been realized. This does not look like this, so that's good. Okay, well, hope you're doing all right, and just keep that snare drum going. It's going to be a really fun week. So I'll see you here tomorrow. Bye-bye.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Got trader's block? We've got the cure. Get data-driven trade ideas with cherry picks. Our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
tastytrade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st. Only at tastytrade.
tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
New from tastytrade. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits when you open and fund a new tastytrade account. The Money Match event starts now, exclusive to new tastytrade customers.
Ring the alarm, hey, ring the alarm. Boys, turn up the charm. Listen up, y'all, get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
We are back for the last call, and man, it's been a bloodbath today. You've got E-mini S&P 500 futures down 83. We're down near the lows of the session. They got as low as 66.58. About 12 handles lower from here. They were down almost 100 points, like 95, 96-ish. NASDAQ down 330. We're at 24.7 here and change. They kind of chopped around the 25,000 mark for most of the session here, or at least in the early part of the session. Had a little bit of a bid higher. They have since given that up in a big way, down a little over 1%. Dow down 653 and the Russell down 54. So the Russell, the weakest of the group, down 2.25%. You got oil selling off a bit, /CL 59.70. Volatility futures 21.12. They remained sticky in the overnight session. It looked like they were going to kind of take some of the air out of the fear over the weekend this morning. They did not do that. They bid vol up for most of the session after about the first hour or so, with the VIX itself getting to 2291, higher than we saw on Friday's kind of trade too. So a lot of vol getting bid into the market here. Bonds up 10 ticks. They've been between 116 and 117, or like kind of the low 117 handle for the last week or two. Gold and silver both giving up their gains. Gold's down $67, silver down 91 cents, and Bitcoin has looked absolutely horrible. Futures down to 91, as well as the spot 91.7 here, down $3,500 on spot. The futures down $2,500. You can't hide in this one. You said it perfectly before we came on the show. You're like, if they're selling equities and they're selling gold and they're selling silver and they're selling Bitcoin, what are they buying?
Correlation of one. This is the type of day that I was actually expecting on Friday. Let's be honest. The previous two Fridays, we've dodged it. Remember, we did the higher or lower. You two were right.
Yeah.
I was expecting more of this, honestly. I think we dodged it the previous two Fridays, having the big rallies up, finishing up positive. But I think, look, this is needed to some degree, given the fact that, like you said before we came on air, things have changed on the rate cut front. I mean, things clearly have changed, and it's looking more and more like we're not going to get a cut in December. It might even look more that way throughout this week. We got a huge week coming up here. Obviously, we got NVIDIA earnings, but there's a lot of Fed speakers that are coming out already, some tomorrow.
Getting some data points, I think, too.
Getting some data points.
Numbers.
And again, we're getting a lot of numbers. We're going to get Well, the biggest one is going to be the jobs report coming up on Thursday. We get the Fed meeting minutes coming up on Wednesday. I'm not sure how much that means because that Fed meeting was so long ago and a lot has changed since then.
Yeah.
So I don't know how much those meeting minutes mean on Wednesday, but if they allude to something that kind of explains what's already happening now, well, then that tells you they were worried about it back then, and that's not going to be good at all, I think. So, look, all that being said, none of that really worries me. The biggest thing that worries me is the fact that we're having this sell everything moment. You're seeing equities go down. You're seeing gold go down. Let's not forget, gold used to go up on days like this.
Yeah, you would be a flight to quality. This is the day that gold would, have its moment. Not so much today.
Not so much today. Same thing with, I guess, bonds to some degree, but you can almost, I don't know what the hell's going on there. Again, it's confusing. And again, the picture has changed. So it's not pretty. And then, you think about it. We were witnessing a little bit of rotation, I would say, last week. And I don't know how much. I guess it's kind of happening. I'm looking at a heat map here. Walmart, the names that I mentioned are barely up. But, Walmart, Pepsi, some of these NEE, some of these utility names, it's Johnson & Johnson. They're barely positive. That's the only reason why we're probably not down 140.
Google too, kind of saving the batch here. Google up 3%. I just pulled up the S&P 100 list.
Yeah.
And you could see all the green stocks on one page here. Like, it's not a lot.
Yeah.
And it's some of the ones you talked about. Like, I don't think anybody's beating the drum on J&J up $3 today, and Pepsi up $1 and change. You got Tesla, which was up $10 or $15 earlier this morning. It's given up basically all of its gains. Even Google got as high as $293. It's $10 off the highs. It's not like it's a strong $8 up move, 3% up move here. And then on the downside, you got some big names here. A lot of the bank stocks. AMD's down $9. You got Nvidia down $5 and change. Palantir has come off the highs here. So to your point, it's been kind of everything. It's not there's no hiding today, unless you came in short, which I was not. I had some downside positions on, but once you take those off, you're left you're naked.
Yeah, basically
naked here a little
in the nude, as they say.
At some point, right? You can only. It's hard to now, with volatility where it is, to now get into short delta positions.
You mentioned Palantir and AMD, and we've seen I don't want to call it quite a reckoning, but we've seen some sell-off in a lot of those names, right? I think Oracle looks the worst. I think Meta looks the worst. Oracle and Meta definitely look the worst out of all of that group. It's not really pretty right now.
Not a dip in sight in Meta. I've been shocked by that move. That's one of the ones where you talk about the market being frothy, quote unquote, and then you have Meta down 30% from highs. You don't really see that in a $1 trillion company. Was a $2 trillion company at one point. To your point, Oracle as well. It's reversed that entire move that it had on earnings, getting up to 340. It's now down to 200.
Yeah.
And there is certainly some pain underneath the surface across the board. It is not, the index level moves have kind of masked what has gone on underneath the surface. And some of these names, which have been kind of big names throughout the rally higher.
So does it feel like it's just the bull market is in trouble, or is it just more of like these are people kind of selling a few things before we get this deluge of data that they think might not necessarily go so well?
I told Vecchio, I was like, my bullishness is waning yesterday. It's waning. I'm still there. I'm still long. I think NVIDIA is going to be, everything's going to be good. The numbers are going to come out and they're going to be fantastic. And the stock goes higher. I think we got a lift there. But I think, I think it's been good. For the first part of the sell-off where you got, Rocket Labs down $10.
Yeah.
ASTS Space Mobile. Your Oklo and your Bloom Energy.
Yeah.
That wave of the selling I felt was good.
Yeah.
Made me feel.
Right. It was supposed to happen. Like SMR, I just had a short put. That's like the stock's trading 20 now. I'm sure I was short the 40 put. I couldn't even find credits to roll it further out. I just took the loss on it. Like it is.
That's
what it
where
is.
I felt like those stocks were the froth.
Yeah.
We took that out.
Yeah.
Now we're getting to the big boys, and we're taking NVIDIA. And I focus on NVIDIA because we have earnings this week. But there hasn't been many 20 or 30 point dips to buy in NVIDIA, and it doesn't seem like anybody wants it here. And that's kind of what you've had over the last 2 weeks. And when you say like, the market's frothy, you usually say, okay, a 10% move to the downside, 5%, 15, 20%. Like that's a big move. That's a big dip. We've had it, and nobody's rushing to get this. Spooky.
Yeah, because we're probably like, what, 6% off highs at this point? I'm just looking at year-to-date SPY, 13%. I feel like we were up 19 or 20% at one point in the S&P 500. So we're probably like 6% off highs. I was talking to Ryan this morning on OTCL and talking about Bitcoin. And look, this is one of the few times where I could say the drawdown in Bitcoin, I don't think is related to something bad with Bitcoin or coins. There's no FTX story. There's none of that. It's just weak because it's been following the S&P 500. And the S&P 500 is weak. So that's the kind of market we're in right now, dude.
Yeah, I think that's kind of a liquidity story. I think it's, I kind of mentioned it this morning. It's, the crypto space is very sentiment driven. And with the overall market right now, sentiment is at lows. I mean, we even had, on Sunday, we talked about the fear and greed index, which was basically at lows, which is with the market at a couple, 4, 5, 6% from all-time highs is a pretty rare occurrence. Like you usually don't see that. And I think the move in crypto and the crypto space has been a big reflection of just the sentiment that is out there with the last month or so of trading in equities. It seems bad.
I mean, a lot of my positions are in Jan. A lot of things that I have are long Jan, short Ds, whether it's a diagonal, whether it's a calendar. So that's the only thing that I can hang my hat on. I feel decent about, it's not like I've been trying to get long weeklies into this. Not at all. I mean, seriously, sure, I have an SPX position right now. That's, it was $10 wide. It was short the 6,700, 6,690 put spread. Long the 6850, 6860 call spread. This is one that actually, it was an idea that was generated from Mikey, but he did it in regular Nove. I did it for this week thinking, Monday we'd be up. Not so much.
Finally. One of these days.
I am thinking about doing another one, but honestly, I'm looking at doing it in December now. Like, I feel like the way this is looking, and I hope I'm wrong, but the way this is looking, the rest of the month could just be a chop or it's kind of leaning downward. It seems as though November is not going to be a positive month. At least it feels right now.
Yeah.
That's kind of how I feel overall. But, there's plenty of things to trade. That's for sure. There's plenty of names that don't have earnings coming up that have vol to them now. When you look at, am I right on this? Meta's at 24 IVR. There's plenty of them. And then with NVIDIA, obviously there's other names that you can play. I don't know if you want to, but, again, I was selling something today like CoreWeave. They own, if they have, let's just say whatever of their portfolio, like whatever stocks portfolio they have, like 4 different stocks they own. I think I retweeted this. CoreWeave is probably the largest of their stock portfolio. So obviously CoreWeave is going to move on their earnings. Whatever you feel you want to trade for NVIDIA, minus the ball crush, you can trade CoreWeave, but the stock is getting rocked.
Yeah, that thing has been absolutely murdered. It's hard to step in front of those sort of stocks. I mean, I'm locked and loaded in NVIDIA. I'm playing for back to, the 195, 200 range. That's basically
same,
or at least was the expected move before today's $5 sell-off. If you look at the straddle trades at about $14, which puts you back at 200. I mean, I've been saying it. I think that, if you've been looking for a dip to buy, this is kind of my spot. Maybe I'm wrong. The market keeps going against me, so maybe I am wrong here.
I mean, I'm doing the same thing.
I will say one of the things that I like to look at is volatility and volatility futures in the forward curve. Even though we're at 21 and change right now, we're still in a contango. There's still a point of contango here going into early January. So it tells you that there's fear, but it's not. It doesn't seem like it's like rushing for the exit fear. It's just kind of liquidation. It's selling pressure. It's not like everybody got to get out at any price.
Yeah, when I see that, what you're talking about, like this from Z to F, right? You're saying contango. Yeah, when I see that, I see Santa rally, baby. That's what I see. I mean, because again, the Nove is 22, and again, that expires this week, by the way. That's another thing. So you talk about this week, we got VIX expiring, we got options obviously expiring on Friday, and then you got Thursday, you got, overnight from Wednesday to Thursday, you got NVIDIA earnings. Thursday, you got the jobs number. Wednesday, I guess, again, you got FOMC meeting minutes, but who knows what those really mean. But so there's a lot that could happen over these next couple of days. Maybe this is day one of just the shakeout, and maybe we bounce. I don't know.
The YouTube chat has been calling, is this the day one? Is this the day one?
Day one, like day one of like the beginning of the sell-off, or just
like a Sosnoff day one?
Like beginning of sell-off, right?
Yeah.
This is day one of sell-off. I don't know, but I will say there's been a lot of volume recently over the last couple of trading days, and today didn't disappoint neither. At least what is that on ES? 1.6 million. So again, there's volume. It's not like it's a light volume day ahead of what's going to be a very busy week. I will say that tends to possibly mean this could be day one, but
yeah, I agree with you, and I was kind of. I thought that today would be a chop fest because of all the things happening in the middle of this week. I felt like it was going to be a chop fest, and it not being a chop fest spooks me a little bit. But I'm leaning long. I think that's where the tail risk is. If you have good earnings from NVIDIA, you have kind of a flip in the pricing of rate cuts later in this year and further past the curve. I think that's an up move. So.
Can we just relish in one thing for a minute, though?
Sure.
Good thing?
Yes.
The Bears are on top of the division, okay? Not only that, the Packers lost yesterday, the Lions lost yesterday, and obviously we beat the Vikings.
When was the last time we had? It's been...
Like that specific scenario, or just the fact they're on top of the division?
The Bears on top of the division. At like this point in the season. I want to say like Rex Grossman was when we had
maybe was it 2012?
One.
No, with Cutler and Brandon
Marshall.
Brandon Marshall, like it could have been that year. I think that was what 2011, 2012.
We make the playoffs.
Could have been the last time. Good question. Don't remember off the top of my head.
I always thought we were like 9-8, 8-9, something with them.
There was one season where they had it going. They really had it going, but. To have, I mean, this is a great week considering that what just happened yesterday. Again, for the Bears to win, beat a division rival, and the other two dudes fall. That's a really great week. You can't miss that.
2 earnings in the morning tomorrow. Do you have any interest in either of these? Home Depot, 357 and change. Sky Ivy rank of just about 40. Stock has had a nice move lower. It's kind of near the 52-week low. 52-week low at 326 and change. You got an expected move that's about $14, $15 going into tomorrow. I did a put ratio spread here in December.
Yeah.
Kind of, I am not like, I don't really have an opinion here. I'm just kind of short a little bit of volatility, playing for it to not be at new all-time lows here. And then in Baidu, we didn't really do anything there because I have been on the wrong side of every Chinese stock in that trade. I'm always... missing the up move and always, too early for the down move. So I avoided that one, but they have earnings, or at least projected earnings tomorrow morning as well.
I'm glad you mentioned
scratch the itch.
Not specifically, but I do the idea of Home Depot. I'm going to play Lowe's maybe instead.
Certainly could. I think
you get the free look.
I think they have earnings on.
They have earnings the next day.
The next day, yeah. So you get like kind of a sympathy play. You get a one-day mulligan, you think?
I don't know what I want to do with it though. So again, I typically play earnings to the upside just to be, bullish or whatever, kind of keep it the same no matter what. The idea of doing a diagonal looks great. Doing the Jan 230, D's 240 diagonal for $5.55, $10 wide, that looks great, but I just don't know what's going to happen. I don't know how positive, I don't know how, I can't find the positivity.
On a day like today, and especially because I typically lean to the upside. I like that convexity, play a little bit of a call diagonal spread or calendar spread or something like that. But on a day like today, it feels like, What could they say that would be good enough to bounce the stock up from here? While the rest of the market, you can't get a buyer for an Nvidia or Amazon or Meta. Like, what is Home Depot going to come in and say that's going to be so positive?
It's like I can already see the headlines. Houses are too expensive. People are having to spend XYZ amount of money on this, and they can't spend it on their home improvement. And what the hell? I'm still going to play to them. I'm still going to do the diagonal.
The flip side to that is Jay Powell says, the rate cuts are coming, and then, everybody gets ready to renovate the houses again.
I'm going to still do the diagonal. Because again, it's like our pet Tom Sosnoff used to always say, I could give you the news ahead of time and you won't necessarily know what's going to happen. And it's fairly true. So I'm putting the diagonal on. Whatever. Let's roll the dice, baby. We get a little bounce here.
Yeah, E-minis only down 69 here, a bounce of about 20 points from the lows. NASDAQ down 250. It's, relative speaking, the strongest of the group here. You got the Dow down 573 and the Russell down 46. Volatility coming in a tiny bit, down about 20 ticks from the top here. Bonds basically unchanged from where we quoted them before, up 9 ticks now. You got a little bit of a bid in gold. That's kind of nice to see. I got long a little extra gold here before we got on the show.
I did too, actually. Yeah.
Diagonal spread.
I did a crab trade.
There you go.
Yeah, did a crab trade.
Yeah. Playing into some of that call skew on the upside.
Yeah.
Got gold at 56 IV rank. I mean, this thing's moving like a meme stock now. It's pretty wild.
I mean, I don't know the last time we've seen like back-to-back 100 down days, so that's part of my reason for doing it.
Well, we took a couple 100 up days to the dome.
Yeah.
It was like 7 of them just back to back to back. You're like, oh, is this the point to short it? And then they're up 100 again.
One trade I'm still thinking about doing, again, like I mentioned this a while ago, but the short put spread, the long call spread for SPX, but I'm thinking about doing it in DEES, the DEES one. But I'm going to wait. And again, people should know this. A lot of times you can do SPX trades up until 15 minutes after our regular close. SPX doesn't close until 3:15 Central Time. There's plenty of times I wait until after the close just to see if we get a little further move. You know what I mean?
Yeah.
So I'm going to do that here.
Yeah, and that's the runoff where all the stocks, all the components in the SPX, they trade. And so if there's a big earnings announcement or something like that, you could see a move in the after hours session.
Or just the day where they just start doing I don't want to say rebalancing, but mocks after the close and then there's selling, and then we'll see if that happens. If it goes a little bit lower, this could be one of those days. Actually, that would make me feel better if we're down 73 right now and we end up going down another 15, 20 points at the end of the day. I'm like, okay, they just puked it out.
See, I was asking my dad that because on last week on Friday, we were talking about that a little bit of do you feel like you need that kind of washout to the downside, that 200 points, 100 points to the downside where, you get that bid in volatility gets 23, 24, 25, that sort of thing, that short-term move to kind of stop it? Is this grind lower? Is this bad? Is that worse than?
It is annoying, and that's actually one of the things I'm worried about for tomorrow, me going ahead and putting this trade on, and then we do another 75 handles to the downside ahead of the big, because really the rest of the week really starts Wednesday. Let's be honest. Yeah. The week really starts Wednesday this week. So, feels that way.
E-minis here up about 5 or 6 handles in the last couple minutes here, down 62 and change. We're hovering around that 6,700 mark. It's unbelievable because despite the price volatility that we saw in the market last week, we basically ended the week unchanged. Which, if you took a poll of my Twitter feed, it would feel like we're down 25%. And we've literally gone nowhere.
Yeah.
Which is kind of ironic there.
It is pretty weird. I mean, and it did feel like that, for some people, but we didn't really go anywhere. That's what these feel like, these grinds, right? Let's not forget what 2022 was like. That was just annoying. Yeah. That's a terrible market to trade in. It's tough. And obviously, this is not even close to anything like that. No. But a lot of people are pretending like it is, and it's not.
I will say today was, despite it being down here at this point, throughout the morning session, there was a lot of opportunity to scalp from both sides of the market, from the long side or the short side. I mean, I was trading them on the micro NASDAQ, around 25,000 and 25 100 was kind of a spot too, which is good. I mean, it hasn't been just a one-way move. It hasn't been that sort of liquidation. I think it's been a good little trade here back and forth, which is good to see.
Hell yeah, it makes a good market, man. I mean, be able to trade it around a little bit as opposed to just barely doing anything.
Yeah.
No, we like the scalps.
Yeah.
We like the scalps.
E-minis down 67 here. You got the NASDAQ down 239. The Dow down 590. You got the Russell down 48. Volatility has kind of remained right here at 21 and change. You got the oil futures down 22 ticks. Gold and silver have both bounced a little bit. Gold's only down 53, silver down 74 cents, and then Bitcoin has just remained stuck in the mud, 92. Anything else you're looking at? Have you traded any oil or anything like that? It's like oil hasn't really moved. The gold move has been just so violent in both directions. Equities, I think we're both kind of loaded up on the long side as much as we could probably handle. It's tough to find new stuff to do.
I took the opportunity to risk manage because of what you just said today. Risk manage a few things, some things that just don't seem like they're going to work. And again, I can some things that I lost money on that I just finally just closed out on, and I can make the money back on another thing, another trade, I believe.
It's a great.
And again, I'm just trying to position for what I think is going to be, which is really going to kick things off starting on Wednesday through Thursday night. Like, you look at the move of the expected move for the rest of the week, it tends to make you feel like that's when things are going to really start kicking off, is basically Wednesday onward. So I'm just positioning for that. I mean, because, well, actually, it's pretty much every day. I mean, tomorrow, SPX, 56-point expected move, almost 30 points above that for Wednesday, but then 30 points above that strongly for Thursday. So I think that's telling you a lot. And so I'm just trying to position for that.
As we go into the close here, volatility up a full point, just under 5% here to the upside. E-minis kind of have staged a little bit of a rally, kind of trying to get to that pin at 6,700, it feels like. NASDAQ down 200. You got the Dow down 500 and change. The Russell down 47. Nothing really on the docket for earnings after the close today. Home Depot is the one in the morning. Home Depot and Baidu. I took a little bit of long delta in Home Depot. We'll see how that one turns out. But it's really all about NVIDIA later this week.
Yeah, I mean, that's basically what everybody's playing. And again, you're gonna see a lot of names move, right? The Oracles and the AMDs, and the rest of them are probably going to move as well. They need a bid. I mean, look, I'm telling you, if I don't like it because again, a lot of these big earnings that we've looked at in this time period for earnings, most of them, even if they beat, they went down. Except for Google and Amazon, I think. The rest of them, Tesla, Netflix, Meta, Microsoft, was not good, even though the earnings weren't terrible. Matter of fact, earnings were good. So you just wonder if NVIDIA is going to follow that same trend, or is it going to be different?
E-minis down 60 into the close, kind of the high of the last 30 or 40 minutes here. Volatility coming in a tiny, tiny bit. The NASDAQ rallying a little bit. The NASDAQ really the strongest of the group today. Nice to see a little dip by here going into the close. But Jamal, thanks for joining for the last call today. We're going to take a quick little 90-second break, come back with more content. We got the overtime boys, Chris and Ilya, will be hanging out with you guys for the next couple minutes here. So stick around for that. We'll see you tomorrow morning. Peace.
Later.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on tastylive.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new tastytrade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, cover calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
A rate cut's coming, but maybe for all the wrong reasons. It's Monday, November 17th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Dylan Radigan in Milan for the next 30 minutes as we take you through this, end of trading session. It was a bad day for equities that if you were with us on Futures Power Hour earlier, that's when the selling really began. Stocks took a leg lower across the board. Volatility popped, VIX heading above 22. Only save at the end of the day was Governor Christopher Waller coming out saying that he would indeed back a 25 basis point rate cut in December, noting that inflation ex tariff inflation is still sitting near 2% annualized, that the labor market's at stall speed. He's seen enough to call it, and we do get a rebound in Fed cut odds, but not nearly enough to mask the pain because the S&P 500 is still down nearly 0.9%, the NASDAQ off by about 0.8%. The Russell is your big loser, down by 1.95% today, and it really looked weak earlier. Glad we were able to jump on that. Ilya and I find ourselves in the same boat for the first time in a little while. Yeah. Beyond there, though, we do have signs of the hyperscaler concerns spreading because now it's not just an equity speculative story. Amazon announcing another bond issuance today to go on top of the Meta and the Oracle and, the bond issuance that we've seen this year related to the AI hyperscalers. It's all part of a bucket of $1.8 trillion of issuance globally over the next year, potentially related to the build out. Does this mean that credit risk is starting to pop up if we don't get great NVIDIA results tomorrow? Well, Wednesday. So that's really the week here. It's NVIDIA earnings Wednesday. It's non-farm payrolls on Thursday. Dylan, you are ever the optimist, but for the non-thinking optimists among us, today was a rough session. Are traders just simply clearing the deck before Wednesday's NVIDIA earnings?
So I have some bad news. I've been thinking.
Oh man, here we go.
Sorry. And the more I think we're setting up for a real face pounding around here. I think, if I was a betting man, which I sometimes am a betting man, I don't mind the idea of getting short a lot of things, or at least beginning to sort of test, like using the Spivak methodology of sort of, noodling my way into a little a little short position here and there and see what happens. I just feel like between the political situation, which I think is unstable in America, the price extreme, because I know the market's off whatever it is, 3/4 or 0.9% or whatever it is today. The weird reaction to the earnings that we saw a while back, the sort of weirdness with the Fed, like there's just kind of a weird mojo building up, both in terms of the price action. There's no shortage of news items. It just seems like a reasonable time. Gesundheit, by the way. It just seems like a reasonable time to get into some Ilya Spivak style short experimentation. Short, sort of call it like short curious.
Yes.
So I mean, look at these charts. I mean, it's just you're not going to get the rate cuts that you want. You have this sort of trapped house. The housing market is still kind of fugazi. It's been a few years like this, but it's really not much is happening. You're still priced for perfection, even if, again, the Russell got kicked around here, but there just seems like plenty of room. Certainly to go back to, another 5 or 10% down seems like it's very plausible.
Ilya, does this scare you that Dylan's short curious and I'm actually short as of this afternoon?
It doesn't scare me in the slightest. I mean, you look at these charts and you go, okay, now the price action is doing some real damage. It would be malpractice not to see it. It would be malpractice to say, you know what, we're just going to have blind hope that all will be well. So I'm not discouraged whatsoever. I think mine has been a difficult time this year because I am given to thought and blindly buying things at record highs, though that has been the best idea all year, starting from early April onward. That's just not my nature. And so because it isn't, and because macro is notoriously terrible at timing, what I do is I noodle on things that look like maybe are an opportunity for the macro turn, but in very small size with very, very risk-defined parameters, so that every time that were I just naked short, I would have my face pounded in, it's more like a gentle graze across the cheek. And so going back to, let's say, last week of October, I've been gently putting things on. And those things have rewarded me. And so I've put on some more. And so I've put on some more. And so I've put on some more. Probably my biggest actually risk-off exposure here isn't even in the stocks. It's in Bitcoin. Because I've been building an IBIT short for a while. And that thing's been sinking.
Nicely done.
This thing has been sinking since, shockingly, Fed Day. October 29th was the day. That was the perfection that the markets didn't get. And so, as we look at this now, some things are coming around. For now, I'm only exposed to S&P as far as the indexes on the short side. But as we've been talking, I got into a short in Russell through IWM puts. Again, not looking for anything crazy, just looking to start to layer things on. Because if this is really the sort of thing that I've been waiting for, which, by the way, who knows? One can wait for one of these things for a long time.
You know, Ilya, it's funny that you say you're waiting for these things, because the one thing that's been in my head, and I mentioned this on Futures Power Hour, but I've had some time to collect my thoughts on it. You can almost see the ghost of 2018 looking over our shoulder.
Yeah.
Because the fourth quarter of 2018 was really bad. The markets fell dramatically. The plunge protection team had to step in. some folks may have not have been trading back then. So I think it's worth asking the question, are we living through a 2018 fourth quarter redux? And I think the parallels are hard to ignore. Back then in the fourth quarter, the entire market was choking on the US-China trade war headlines. Every tariff threat in Trump's first term was still hitting equities. Every escalation made global growth look a little bit softer. So here we are in late 2025. We're walking down this same road again, it seems. The names are a little bit different. The politics maybe changed, but the mechanism is identical. Spring tariffs, winter pain in the equity markets. So tariffs are on, global demand is down. The markets are obviously getting nervous here. You're seeing, just like in late 2018, growth outside the US is stalling. We've seen economic data in recent days from Japan, from Switzerland, that they're in contraction. You're getting this sense that people are trying to raise capital right now because if it's Bitcoin getting punched in the face repeatedly, or even a safe haven like gold down here today, losing another 1.21% and, slipping below 40.55, which has been one of our key levels.
And for a while there, it looked even hairier than that.
Well, and back in 2018, the whole consternation was that Powell was still tightening and the market hated it because the Fed is going to overdo things as we're facing, a potential slowdown in the global economy. And it's similar enough today where it's not that the Fed is tightening, it's that they're not going to give us a potential rate cut while we're watching demand fall apart again. And the administration right now seems to think that it doesn't need to change shape. So 2018, multiples are stretched, valuations are through the roof. Today, you can look to tech and see that some corners of this market are still equally overvalued. And when growth slows with high valuations, the downside tends to bite and hurts even more. We've heard this from a number of people in the industry, like a Jeff Gunlack, who've pointed out that we're facing some situations of potentially private credit, but risk is building now because people have obviously more or less stopped looking for it. I think the lesson from 2018 is, and as someone who is trying to buy the dip on the way down throughout 2018, particularly in equities, while the plunge protection team ultimately saved the day and made life a little bit easier, it was really tough to bear that pain. And using things like simple technical filters in hindsight have helped me become a better trader and avoid that pain once more again. So I would point out that I feel like myself, I haven't had a problem like I did since the fourth quarter of 2018, where I had to grin and bear it for a long time. But I want to go back to that chart there, Ilya, because if we go back to 2018, and let's just zoom over there too far. Here you are. This is 2018, right? You get through October and the markets have this intense period of volatility before finally selling off all through December. And then finally, Treasury Secretary Mnuchin and co step in. But it feels like the loop is the same. And we now have this sprinkling, this additional layer of the hype of AI on top of it with potentially disappointing results, depending upon how NVIDIA turns out on Wednesday. Am I nuts in thinking that there's enough similarity there where if we're going to try to take shots, we have to keep it real small if you're operating on the long side, because this is a market that increasingly looks like it's losing its tact?
I mean, it's certainly a reasonable analogy. Obviously, to once again paraphrase something that Mark Twain may or may not have really said, history doesn't repeat itself, it rhymes. So can you expect exactly the same types of dynamics? No, but do tops look similar, and do exhaustive rallies into tops look similar? Yes. They're kind of quiet, they're kind of meandering, relentless until they're not. And then they snap. And a lot of the ingredients, I think, as you rightly point out, are very similar. Probably the biggest thing, I mean, if we remember in 2018, that's when the Fed abandoned its hawkish bias and started to go the other way in earnest. I mean, let's remember, before COVID struck, the U.S. economy was at its weakest growth-wise in 6 years. And that's before COVID struck. We lose that a lot because, of course, then it did strike. And everything else kind of got subsumed on, whoa, Trump's economy was great in the first term, but for COVID. Yeah, not so much. Not so much, because what we ended up with was a tax cut to juice the economy in 2017, which then beckoned the Fed into aggressive hiking because inflation started to perk up just as the trade war got started, which of course crushed the economy at a time of high rates. So if that is going to bring you into analogs to today, I don't think that's unreasonable at all. It's a very similar type of situation, minus the tax cut, maybe, because at this point, all we've done is made that tax cut longer lasting. We haven't actually introduced any further fiscal largesse, though, of course, if we do with these $2,000 stimmy checks that the administration's talking about, then what have we actually solved? We've only taken away more scope for the Fed to cut, or at least put the brakes on them. And what the markets want here is for the Fed to cut. So is that going to help sentiment or hurt it?
It was Morgan Stanley over the weekend, I think, worked out the math on how much the checks would cost. The U.S. would have to issue more debt in order to provide the funding for these $2,000
This is the way.
checks. And then, to the point that you just raised, if you get this additional stimulus going through the economy, does the Fed feel compelled to cut rates? So if you want a Fed rate cut, you do not want the stimmy checks. Dylan, I have a number of charts that are bothering me here as I think about the market potentially looking a little bit more cautious now, and certainly definitely more defensive. What's making you do your thinking these days?
I mean, more than anything, honestly, it's been the price action. Like the fact that the price action, I sound like one of you guys now. I've obviously been hanging around with both of you far too long. But it's been the thing that changed the thing that triggered thinking is the price action. The reason not to think was because the market was saying it doesn't care perpetually about anything Trump does, whatever the earnings might be. I mean, obviously, the one exception of that is that the market has been responsive to rate cut expectations and adjustments therein. But otherwise, it's been pretty indifferent. And I just feel like the activity is more vulnerable, more fragile, more out of whack feeling on the price action vibes. And I also don't think that it's nothing. I think it's not. I think it may. These sort of big liquidations in Nvidia, even if SoftBank has a track record of catastrophes. They're not all catastrophes. I just think you're seeing some sort of individual anecdotes of liquidation in some of the Mag 7 names, or at least reduction, combined with some price instability that I think forces you to then acknowledge the underlying instability in all the dynamics that we all know about. I mean, with all of that said, odds are, if you're, buy the dip has still been the best way to deal with this market. But at some point, it doesn't mean that there can't be a bigger dip before you buy it,
Yeah. I don't know if it's the data or the charts, but when you have the banks behaving the way that they are, can't help notice, but XLF is at multi-month lows. This is the lowest close that we've seen since July. And Ilya, it doesn't take much of someone to, from a technical perspective, to say, hey, is this like a left shoulder ahead, a right shoulder up here that's forming? Which in the banks, you're talking about a loss down to potentially 48 from where we stand right now. That is in the neighborhood of a 6.5% loss further in the banks if that were to occur. Right. I go over to the home construction today because today was a good day for the treasury market for what it's worth. Right. Long end of the curve. Yields are down. Yields are down at the long end of the curve. Fed rate cut odds rebound. What's going on with the banks? What's going on with the home builders? Nothing good. The rate sensitive things are not liking the idea that we could be getting lower rates because rates could be coming down for the wrong reason, which is that old question of ours: are these maintenance cuts or recession cuts? And given the price action,
and look at Fed funds futures too. The long end is not necessarily echoing what those are showing. We're under 50% still for this December meeting. In fact, if anything, we actually went down a little bit today.
Are we in that weird stretch where a rate cut would be hawkish, would be bearish for treasuries, and no cut is actually bullish for treasuries, because if there's no cut, then there's no help to help resuscitate growth and inflation expectations. And no cut means growth and inflation expectations come down, and that premium gets sucked out of the long end of the curve. So declining Fed cut odds should go in hand with elevated or buoyed treasuries over the next few weeks. Yields,
especially at the long end,
right? Like that's kind of my.
It's starting to kind of. You're absolutely right. It's starting to kind of come together that way, where you look at it and you go, okay, the market wants cuts. The market is sure it needs cuts. The market still is looking at 60-odd basis points in cuts next year, whereas the Fed has only said a single cut of 25 basis points. So if you start to tell the markets you're not getting December, that's it, we're done for the year, and they want the cuts, they're just going to start to put the cuts later along the curve. And they'll show up in the long end. And so although the front end might essentially idle, the long end starts rallying, not because you're cutting now, but because the market goes, yeah, this is cute and all, but all this delay is going to mean you're going to have to cut later and more.
Cut later and more. That could be where this is ultimately heading. Gentlemen, thinking about some of the top stories of what's going on in the market today, we're seeing, as I mentioned earlier, there's this growth concern out of Japan and Switzerland that's making its way to the forefront here. I know that we're concerned about our own U.S. labor market, in particular, what's going to happen this Thursday with non-farm payrolls. Dylan, I'm of the mindset that NVIDIA matters way more than whatever's going to come with the jobs data this week, because as long as the AI story is intact, then we still have the upswing potentially for at least the tech stocks as you get this jobless growth in the economy. The worst mix for me this week would be bad jobs, bad NVIDIA. But if we could at least get a good NVIDIA, maybe the market can handle the bad jobs, because you know what? We're going to get cheaper money to keep the AI party going.
Yeah, I totally agree with that. I mean, I believe the fundamental pillar of the not thinking hypothesis is perpetual excess performance in the AI supernova. And I think, number two to that is some version of rate cuts, and that pillar's already has cracks in it in terms of not as low and not as soon, or lower for the wrong reasons, or all the sort of lousy interpretations of what the rate cut picture is. The AI supernova still is the foundation of this entire market, as far as I'm concerned. And we already saw lousy reactions to both Meta and Microsoft and their earnings reports, even though the earnings reports, but at least from where I was sitting, didn't strike me as particularly disappointing. But for whatever it was too disappointing it wasn't a big enough beat, or whatever, whatever the sort of superlative needs to be. And so I think it's actually critical. I think that a bad NVIDIA number could in fact be the trigger for those of us who are short curious to, that could be a payday for those who are on the short side. I think a lousy NVIDIA number could be a big problem.
I don't want to sound obtuse about this, but if we get a bad NVIDIA number and a bad jobs report, minus 3% by the end of the week, minus 5% by the end of the week. I mean, is actually the worst mix than a bad NVIDIA report plus a good jobs report, because then it further disincentivizes the Fed to give the rate cut that the market needs. Like, what's the most toxic? What's the most toxic outcome for us this week? If we want to be real bears here, what are we rooting for?
I think if you want to be a real bear here, really, you're not so much rooting for this or that outcome. You're rooting for the price action to fade positivity. So what we've seen since October the 29th, again, Fed Day, across every risk asset you can imagine. Look at Russell, look at S&P, NASDAQ, look at Bitcoin. It's all the same. It's all the same top. It's all the same letdown. So when you look at all of this, you go, okay, what's the worst here? Well, when that topping happens, most of the Mag 6, so the big names, sans NVIDIA, they're just starting to report at that stage. And none of their reporting, I mean, Meta obviously had a big miss and got shellacked for it, but Meta aside, everything else was good. Tech earnings grew at an annualized rate of 27% in the third quarter, against 13% for the S&P 500 overall. The tech sector did not report bad earnings. The S&P did not report bad earnings. And the market could not use that as a springboard.
Mm-hmm.
So you get NVIDIA this week. Possibly the most bearish thing would be NVIDIA comes in within the realm of acceptable upside surprise, which is, let's say, between 4 and 9%-ish. That's been the cadence. So if you look at what NVIDIA surprises have looked at or have looked like recently, let's say over the past year and a half or so, 9%, 5%, 8%, 5%, almost 10%, 9.9, 4%. So let's say we get something in the 4 to 9% range-ish. And the market goes, yeah, not good enough, and sells off. If that's how this works, that would be the most bearish of all signals. I mean, this data, this NFP data is terribly delayed. This is September. We were supposed to have seen October by now. So unless the number is so god-awful as to tell the Fed, well, October could have only been an utter disaster, we need to cut, and we need to signal that we're on and we're going to go hard next year. Because again, this is going to be a big meeting in December. Not only are we going to get the move, we're going to get a new summary of economic projections. So the Fed could really tell some things if it wanted to. It could show up in December and go, here's a cut. Also, we only said 1 cut next year. Here's 3 in the forecast. We're going big, baby. Everybody calm down. They could do that. And things would calm down, ostensibly, at least for some amount of time, because that seems to be everybody's concern. So does the NFP number really matter in this case? If it's not some remarkable deviation from forecasts? I mean, it's still 50K expected since the last time these numbers were supposed to come out. Nobody's updated their forecasts. I didn't even have to update my own charts. I was like, let's see what they're expecting for NFP so that I can do macro money today. Oh, wait. My charts are still good. And it's been weeks. So does that really change the narrative? Not unless the number is something like 150K or 0. Otherwise, who cares? NVIDIA is much more important as the sentiment signal.
Well, the data that we've seen throughout September, at least the private sector gauges, the weekly ADP numbers, those have not been good. It's a problem we're going to have to tackle tomorrow because overtime's out of time for this Monday, November 17th. We'll be back, same time, same place, 4 p.m. Eastern, 3 Central, right after last call. We'll get it right one of these days. For Ilya Spivak, Dylan Radigan, I've been Chris Vecchio. Stick around, though. Tasty Live continues after a brief break. Ilya's back. He's here with Macro Money. See you there.
See you there, everybody.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
tastytrade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with Active Trader Mode. Smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
tastytrade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on tastytrade. Genius loves company.
And we fade into the close again. A difficult start for the markets here as the week gets underway. And we have quite a bit more pitfalls lining up here, with the key question, not surprisingly, are we finally looking at some sort of a lasting break? Are we finally looking at a dial that has really and truly turned from risk on to risk off? And is this now a trend in these markets that has really and truly turned to favor the downside? That's what we are going to see if we can't figure out here. This is Macro Money. I'm Ilya Spivak, head of Global Macro here at tastylive. And as ever, we are going to be looking here first and foremost at the price action that has given us some sort of a lead here, if we can discern it from last week, and then see if we can't make some sense out of what is likely to come next. So let's begin here with a look at last week's performance. Not surprisingly, it is a hodgepodge of all kinds of influences. The S&P ends up flat last week, at least when we look at any kind of meaningful reflection. It's very narrowly up or down, whether you look at this futures contract or that, very narrowly up or down if you look at the cash index or a CFD. But the upshot is we didn't really go anywhere. And that's, of course, after we barnstormed higher at the start of the week around the news that the government shutdown was finally going to be ended because we reached some sort of a deal. Not surprisingly, that ultimately left the markets wanting. NASDAQ actually a little bit worse off, down 0.3%. Yields up across the board, 10-year and the 2-year up by an almost equivalent amount here. So the whole curve kind of shifted slightly by just under 1.5%. Crude oil, a modest rebound, 0.6% after the 2% sell-off in the prior week. Gold manages a rise of 2.1% despite a somewhat soggy showing. It rallied on the deal getting done for the government shutdown, then came back quite a ways. And so as we looked at sort of the net result, we ended up with a 2% gain, but that was ultimately the weaker version of the outcome. We were up earlier by a larger margin before sentiment kind of came unraveled midweek. A little bit stronger for the euro. It's up for a second consecutive week, this time 0.5%. But the yen actually takes a bit of a drubbing here, down 0.7%. That seems to echo what we saw in yields. And really the most obvious, glaring anti-risk signal here, the place with the most ready conviction on the risk-off side was Bitcoin, which fell 9.3%. And obviously after a week where it was down 5.7%, accelerated down with significant conviction. Now, with this in front of us, we begin this week, and the results are anything but encouraging. Now stocks really do start to build some downward momentum. S&P down 0.8%, NASDAQ down 0.7. This time, yields actually coming in. And interestingly, they're coming in at the long end, whereas at the front end, they're relatively steady, which gives you this sort of dynamic that starts to become familiar around the idea that the market wants its rate cuts, it thinks it's going to get them, but it's coming to terms with the idea that the main reason for this indigestion is indeed that the Fed is not going to go soon enough. So the front end, where near-term policy expectations live, it doesn't really go anywhere. But at the long end, risk aversion is starting to be the more potent force. And expectations for future cuts, as well as just a general appeal for anti-risk assets, that starts to create some demand for long-term U.S. government paper. Crude oil off 0.6%. Gold, once again, moving with sentiment, off 1.2%. And again, painting this picture of a gold that, forget a safe haven, and it was never really that, but at the very least, not even a counter of alternative store of value, not even a counter to multipolarity risk, not even the beneficiary of a seeming sort of accumulation by global central banks amid all of this uncertainty, something that has been occurring regardless of other kind of more traditional gold factors like the direction of U.S. yields and of the dollar. Gold just becomes another speculative narrative here. Maybe not exactly the same speculative narrative as stocks. This doesn't seem like the kind of market where there's one speculative narrative. There's perhaps 3 or 4 main ones. But nevertheless, a speculative asset and a risk sentiment linked asset. That's what gold seems to be telegraphing here once again, as it did last week. So here we're off 1.2%. The dollar is up once again. Yen continues to suffer. It falls almost 0.5%. The euro off 0.25%, just about. Looking a little bit soggy, but ultimately not quite giving up its attempt at a break higher last week. So a little bit tenuous here for the euro, but we don't have it on the chart here. But the Aussie dollar lower, as if to say that those things immediately anchored to risk sentiment. They are showing the dollar to be a haven. So the Canadian dollar sees some outsized losses, as does the Aussie. And that seems to be a pattern that continues. Whereas European currencies, although they are down a little bit here, they hold up a little bit better. Bitcoin, of course, down almost 3%. And once again, doing its risk sentiment on steroids thing. That's its comfortable pocket. And clearly we can see any kind of pretension to it being some sort of digital gold or digital something that isn't traditional risky assets. That's obviously not what it seems to be doing here. It clearly has been the most deliberately potent, the most convincing reflection of risk-off sentiment really over recent weeks. Going all the way back to October 29th, the day the Fed told everybody that their expectations for a December rate cut were wrong. And that, of course, is really the essence of what we're watching here. And if we look at the likelihood for what comes next, not surprisingly, the market still has this architecture that we discussed last week, where we seem to have confusion as the order of the day. So it'd be one thing if what this market said was we are 70-30 not going to get a rate cut. We are 80-20 not going to get a rate cut. At least the market would have some semblance of conviction. But that is clearly not what's going on here. At almost 50-50, we are looking at a situation here where the market is confused about what the Fed is going to do next. And that is certainly not terribly helpful here to give the markets some confidence about what they ought to be doing next. Now, as far as event risk is concerned, to drive this narrative in the week ahead and sort of to propel what might be going on here, the first thing immediately on the docket is a very busy economic calendar of Fed speakers. And of course, on Wednesday, the main event is going to be minutes from October's meeting where, not surprisingly, we got our cut. But that was, of course, the fateful day that Powell came out after the sit-down and scared everybody half to death. Incidentally, that's the state we've been in. What did Powell do? He came out and said, look, I know I come out here every single time and I tell you all that policy is data-dependent. It's not on a predetermined course. But let me just say, I'm saying more than that here. A December rate cut is not a foregone conclusion, far from it. And when he said all these things, the likelihood of a cut was in the upper 90s. And obviously, if we look at it here, it has come a good long way from that level of conviction. So, of course, these minutes are going to be a critically important sort of a thing to see what was it that so spooked the Fed. Was it just the government shutdown and the lack of data? Why the loss of conviction? After all, the Fed did begrudgingly signal there would be 3 cuts in September. Now, I say begrudgingly because this was really a forecast arrived at by a hair. This was the first meeting in September that Governor Stephen Miran took part in. And of course, he is sort of famously on loan to the Fed to put it generously, from the White House, where he is still chairman of the Council of Economic Advisors. And so it's not as if his perspective isn't something that is relatively predictable. He, of course, was going to be very dovish because that is the administration's perspective, and not in small part because he is part of the brain trust at the administration that is telling the president what is the course of action to be looking for. So, not surprising, but that 3-cut forecast that we see there for 2025 from 4.4 down to 3.6 on the median trajectory, that's really skewed by the Stephen Mirren dot on the dot plot. The overwhelming majority of policymakers were of the view that 50 basis points is enough cutting for this year. And that's perhaps where we might end up. So maybe Fed policymakers are not so terribly different in their thinking. Obviously, all the comments that we've had from Fed officials have generally fallen within familiar bounds. Governor Mirren has been dovish, as is his argument for months now, and other policymakers have been less dovish. And what seems to be the key insight here that we need to arrive at is just how concerned were these Fed officials, just how much fog are they prepared to tolerate, and how much won't they tolerate. And so how likely is a move in December absent the depth of data that they want versus how likely is it that they pause? And that's why these minutes are going to be very critical. But of course, going into it, and I've highlighted the voters here in yellow, those are the people actually voting on policy this year, we are going to have some incremental signals here. We got one from a whole host of policymakers today. We started with Governor Jefferson here. He came out and basically took the more hawkish view today, saying it's still not clear how much data will be ready ahead of the December 10th meeting. Current policy is still somewhat restrictive. The balance of risks has shifted in recent months. We know all of this so far. But what we still see here is that, according to him, we need to proceed slowly. In other words, he might be on the side of a pause here. Then, of course, we got comments from Governor Chris Waller. He's sort of famously wanted a rate cut earlier in the year and was dissenting as recently as July. Today, he again starts to talk up rate cuts. That's not really surprising. And so far, so good. Not really anything here that necessarily changes the landscape, but we have plenty to look at for the remainder of the week to see what all of this might evolve to look like. So there's still plenty to look for as far as these comments, even around the FOMC minutes. Then, of course, we got the special dispensation of an NFP report. That's going to come out on Thursday. This will be a backfill of September's data. Expectation is for a 50K rise, with the unemployment rate stuck at 4.3%. We'll see if we even get the unemployment rate number. The president has intimated maybe we won't get that, as has White House Press Secretary Caroline Leavitt. So unclear what this changes now, because this is relatively stale data, but we will get it, and we'll see if the markets see something that's relatively in line with expectations as making any kind of a difference in the near-term Fed calculus because the data is so stale, or not. Then on Friday, we are going to get a timely look at global growth dynamics with the latest update of S&P global PMI numbers. And not surprisingly, because the global economy essentially rests on a pillar that is the Eurozone, China, and the US. Taken together, they account for well over half of global growth. And so as we look at this then, we might see greatest interest in what the Eurozone has to say, and as well as, of course, the U.S. The expectation for the U.S. is we're going to get a little bit of a move back in the pace of growth, but ultimately that things are going to be relatively even-keeled. Manufacturing only a little cooler, services only a little cooler, and so the overall composite only a little bit cooler. So we'll see to what extent this makes a dent. This, of course, has been continuous data, not subject to the government shutdown. So maybe we'll get a decent lead on Fed policy expectations there. So we can see the U.S. economy has been relatively well anchored here in recent months, looking at this data. Then finally, on the earnings front, of course, the main story is NVIDIA. The expectation is that we're going to get a result that is $1.25 per share, and we can see the range for surprises has been kind of roughly between almost 10 and 4%. So that's sort of what we're looking for here, is will NVIDIA at the very sort of least give us something like a surprise on the upside. And what that would mean relative to how it's been is an EPS of greater than, let's say, $1.38. So a 10% surprise relative to expectations would be $1.37, $1.38 or so. If we can do better than that, then NVIDIA looks like an upside surprise, and maybe we get a little bit of a reload on AI optimism that gives this market a little bit of a leg to stand on. But nevertheless, it's important to remember here, since October 29th and onward, what we've seen is the market shrugging off positive earnings results from the tech sector, which on the whole have looked quite good. Here's a summary from FactSet. We can see tech earnings have been growing at 27.3% year on year in the third quarter, relative to about a 13% earnings growth rate for the overall S&P. Now, first of all, that's impressive for the S&P. And second of all, that's doubly impressive for tech. So it's not as though we're getting bad results here on the earnings front. It's not as though upside surprises aren't occurring. It's not as though these are numbers suggesting that something awful is afoot. So the real question with NVIDIA is, what do they need to do for anyone to care? Because so far, the market has been shrugging off this kind of data. Moreover, if we get a soft S&P result, S&P PMI result, or we get a soft NFP number on September's backdated release, what does that mean for Fed policy expectations when we are already looking at 66 basis points on the menu for next year against just 25 basis points that the Fed itself has forecasted? We're already looking at something much more dovish here. So what would we need to see for the market to give this some positive credence? Probably we would need to see something either so god-awful on the data that December would be forced back onto the books by default, or something so incredibly robust that skipping December wouldn't look like a bad thing. It would look like the only plausible thing one might do for an economy that's heating up. But of course, as it stands, both of those are inherently unlikely outcomes. Both of those are on the tails of the distribution. So far, the story has been the market doesn't care about relatively chipper tech earnings. The market doesn't care that the US and China have found a way to at least somewhat cool their trade war. The market doesn't care that the government has been reopened. The market wants December's rate cut. And not only is it that it's not sure it's going to get it, it's much more sinister. They don't know what they're going to get. And that's an environment that's fueling risk aversion. And so if we look at what's been happening here, here's been these rate cuts. And we can see that since the last one, this is October the 29th, when the Fed makes its stand and Powell comes out and says all those things that he said to beat back December rate cut expectations, stocks have stopped rallying since then and have been basically stuck. The dollar has attempted to rally since then. It's been a little bit soggier lately as that sort of resilience in the euro and the pound have suddenly emerged over the past week, but the general trajectory really since the lows in mid-September has been higher. And so perhaps the dollar is just early and has been more so willing to digest in recent days, and maybe this rebound is just getting going. With that in mind, the exposure that I have on here is kind of two minds now. I'm still a little bit long gold. I don't think it finally crossed any Rubicons today, though it really tried. And so I'm still holding out for maybe we bottom right around here. I'm not really risking a terrible amount here because I'm long from levels that are only a touch higher than where we settle today. So I'm standing aside and letting this have some air to figure its way. I'm now short the Aussie, even though I am long still from last week, the pound and the euro, which aren't really making much upside progress since I got long. So my leash on these things is very short, and I'm going to be watching very closely, and I'm going to stand ready to flip them the other way. But I still have exposure short the yen on the spot side of things, and I still have, now I have this short Aussie exposure, all of them kind of reflections of a dollar that isn't one-sided and isn't uniformly weak. Still short Bitcoin. That's been working, and I've added a little bit more duration here. I've layered into this position a bit. I am now short not just the S&P through these put verticals, but as of today, I've also put on a put vertical in the Russell through IWM. 60 days on this, so giving myself lots and lots of time for this thing and diluting exposure to Delta as much as is reasonable to see this develop lower, hopefully without too much upfront exposure to Delta and too much upfront exposure to a bounce in the event that things get a little bit feisty here before Wednesday's big event risk with the FOMC minutes and NVIDIA. And still long the bonds. I've added a little bit of duration here. I had one that was expiring within just 7 days as of the end of last week. I extended duration on that out to 60 days. Took a little bit of a loss there of less than 1% of equity. And still short oil, which is begrudgingly trying to grind downward, so I still have my put verticals there. And that is macro money for today. As ever, we are here Monday through Thursday, right after overtime, a show I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things might go therefrom. Also writing for the News and Insights portion of tastylive.com, commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Macro Money is back tomorrow. Happy trading.